Hello. Hi, everyone. Everyone can hear me, I guess. Yeah, I guess we don't want to be too loud. So, hello, everyone, and welcome to this conference on AI regulation and risk management in the financial services sector. My name's Emre Kazim. I'm co-founder and COO of Holistic AI. We're a company actually that spun out of the University College London, where we were doing research on how does one go about assessing algorithms and doing algorithmic assurance. So our mission is to empower enterprises to embrace AI with confidence. So I got to get going. I've been told just to apologize for being late. There were some technical problems, and also keep this opening very brief so we can get going with the talks. So just to say thanks to the sponsors, that's KPMG, Simmons & Simmons, Hazy, and Ethershids Sutherland, as well as Holistic AI ourselves. And to say thanks also to the sponsors. I also have to begin with some brief housekeeping. Please everyone be aware of, or make yourselves aware of some of the exits. There's some at the back there, there's one behind me, and I'm really proud. I feel like that's the first time I've been able to do that in my life outside of an airplane. What we say, if there's a fire, just run for your lives. Also to be aware that there is an app to download, an event app with all the information on the speakers, the sponsors, and the conference organizers. And there's also a delegate questionnaire. Everyone has one on their desk. Please do fill it in. Apparently there's a champagne draw at the end, and someone's going to win that. The event is also live streamed, so so I just want to welcome all of our virtual attendees, and also to make everyone aware that we are being live streamed at the moment. We're being recorded, and please do raise any issues if anyone has any problems with that. And we've got a very busy agenda. So we've got a really a series of keynotes, panels, and fireside talks in terms of and a series of technical. Should I get? Yep. Okay. Yep. And we've got lots of networking opportunities in lunch and various coffee breaks and so on and so forth. Yep. So I think we've got some distinguished speakers. We've got representatives from the academy, from industry, and from regulators. As well as a good spectrum of subject matter experts and different themes that we're going to discuss. So AI risk management, regulation in this space. I think I looked at all the different presentations and different contributions, and it looks like we've got some core kind of thematic areas that we're going to be discussing. One of the first big areas is regulation. I remember the time when people were talking about whether or not we should regulate in this space at all, in generally regarding AI. Now it looks like there's just massive regulatory tailwinds. Just got back from Europe, and we know that there's huge intervention coming regarding the EU AI Act. The UK is taking a more sectorial approach. It's going to be interesting to see the difference there, and it's going to be really interesting to hear some of the regulators today talking about that, and some of the service providers in light of that talking about how they're going to address that. So second major theme is technology. So technology, not just in terms of the use of the technology in these sectors. I think we've got a long legacy of that, but also the role of technology in, for example, monitoring, in reporting, in actually putting in this kind of safeguards for these technologies as well, some of the innovation that's taking place in that space. And finally, the issue of trust. In a way, when we first got going, we were interested in algorithmic certification, when we were doing some work as academics. And I think probably in the end, we're going to get back to certification of algorithms and actually finding these kind of publicly defendable or industry standards that everyone accepts, but still we've got some way to go there. And in that interim, it's the role of industry agents to ensure that we actually build trust within constituents, as well as the role of the regulators in ensuring that that trust is delivered effectively. So I'll stop there and actually introduce our first speaker. Our first speaker is Dr. Leanne Allen from KPMG, and she'll be speaking about the benefits of addressing trust for businesses. Please, can I invite you up? I'll move over. Okay, so I'll just put it up at some point. Yeah. Sorry, I didn't interrupt. No worries.
No problems. And just checking this works for me as well, different height and everything. So hopefully that's okay. So first of all, good morning, everyone. I'm personally delighted to be here in person. So I have national rail to thank for cancelling their train strikes at the last minute. So I'm Leanne Allen. I'm a partner at KPMG, and I lead the data and data science practice here. And as my opening keynote, I'm here to share my view on why addressing trust and ethics in AI is important to reap its benefits. So I'm going to start by talking about the wider picture here. So consumers and investors, as well as wider society, are demanding, of course, more from financial services. So whether that's a desire for better and frictionless services for consumers through end-to-end digital experience with hyper-personalization, or whether there's a call for more meaningful products in ESG from the investors, or even a desire from the wider society that the industry needs to do more in helping address inequality and promoting sustainable finance. So the expectations of the sector to innovate and drive value from data and new technologies is continuing to grow rapidly. And of course, if you couple those demands with the continued advances in new technology itself, then we're seeing an increase in the adoption of those advanced techniques. And that includes machine learning and AI. And that's really enabling organizations to have the edge in terms of responding to those demands. So our work with organisations across industry has highlighted that trust is absolutely key to drive the maximum value from the use of data and those related technologies, with a focus on ensuring that the techniques do not systematically, unintentionally and negatively impact consumers and, of course, wider society as a whole. So firstly, I'm going to talk about what we're seeing in terms of the increased use of big data and AI within financial services. So we all know within this sector, right, data and models isn't new, right? So models have typically been based on decisions to inform back and middle office functions, so credit risk models, pricing algorithms, fraud detections, financial crime, and of course wider society. Okay, I'm assuming we're okay to go. However, in the past few years of COVID, of course, we have seen consumers being forced to interact and operate digitally. And of course, that trend has stuck. So organisations are now responding increasingly outside of the areas we just discussed by looking to unlock greater value through that adoption of AI within the customer experience journey itself. And we're seeing benefits such as better and faster decisions to increase accuracy, understanding customers better, leading to enhanced products and services being offered, pricing risk more accurately, and enabling a step change in operational efficiencies that is driving down internal costs for organisations. So some other benefits, which are probably more indirect to consumers, is things like anti-money laundering and using AI that's lowering false positives. And that has that benefit to consumers of less erroneously being blocked or delayed payments. Credit risk assessments, so an analysis of new data sets that's enabling those underserved or unbanked customers to gain access to financial products. And automated processes itself in driving customer experience. So that's through reducing, as an example, long and onerous processes for mortgage applications. So I'm sure you all agree with me that there's absolutely no contention around the vast benefits, both from the consumer side and for organisations, in the use of big data and AI. But as we all know, it does come with those new and enhanced risks. So without the appropriate controls and governance over the design of those advanced techniques, we have started to see some unintended harms. Here's just a list of some examples that we've seen across the market. So unfair bias on decision model outcomes that's causing financial harm to consumers, but also reputational damage to the organisations. Unfair pricing practices causing systematic groups of society being locked out of insurance, and that's removing their access to the concept of the pooling of risk. Selling of unsuitable, poor value products and services to consumers. And purpose creep on the use of data that has resulted in actually non-compliance with the existing data protection laws. And that's just to say a few examples. And of course, these issues that we're starting to see are reducing trust. And it is, of course, trust that's a defining factor on whether an organisation is successful or not. So as firms progress at pace in transforming their businesses, become data and insight led, they've got to focus on building and maintaining that trust. So based on KPMG's 5-country study of trust in AI, there's actually 4 key drivers. And they are, firstly, beliefs about the adequacy of current regulation and laws to make AI use safe. Secondly, perceived impact of AI on jobs. Thirdly, familiarity of the understanding of what AI is and what it isn't. And fourth, the perceived uncertain impact of AI on society. And of those 4, it was the first one, the perceived adequacy of current regulation and laws, that was a clear driver. And that highlights the importance in ensuring adequate regulation and legal mechanisms are in place to protect those consumers from the risks of AI use. And such regulation, of course, in turn, actually supports citizens' uptake and adoption of the new technologies, which then, of course, supports the industry to allow them to continue to innovate at pace. So what we're seeing happening in the market at the moment, so from our experience, many organisations are already embarking and have done for some while, certainly in the financial services space, on their own initiatives to build out governance and controls around the use of big data and AI. They're defining their own ethical principles and they're embarking on operationalising those, taking a risk-based approach. And it aligns with core principles around transparency, explainability and accountability that collectively are starting to promote that trust. So common focus areas that align to industry guidance notes already and the considerations of things like the EU AI Act is updating their risk registers to include data risk and AI risk, building out control frameworks across the data and design and development of new products and services, revisiting their operating models to include governance frameworks. And that's things like setting up ethics boards and councils that brings that broad view to challenge the use case of AI and protect against purpose creep. Enhancing privacy impact assessments, hiring diverse skills into their teams in both the first lines but also in compliance functions. And of course, education and awareness on the use of AI and big data, and of course its associated risks. There's just a few actions among others that are helping to reduce the risk and provide a level of comfort that appropriate safeguards are being put in place. So I'm just going to finish before we take questions, saying I really look forward to today and hearing also from myself, from Jessica at the FCA, who will be talking next. And she'll be providing some broader views again on how the regulators are making changes and both supporting and guiding the industry in this way. So thank you very much. And I believe we have...
Yep, we've got some time for questions. Yep. And there should be a floating microphone, I believe. So anybody want to get going?
I can just talk really loudly.
Feel free to talk loudly.
How do you, I mean, you get to work with many clients, and obviously part of your service.
Could you introduce yourself just quickly? Yes.
I'm Luke Lane from Lloyds Banking Group. I work in data. And how do you convince people to spend money on data ethics and data privacy?
I actually don't need to convince people. So organisations say already concerned, and in financial services, initially banking was the first off the mark and they wanted to be front runners. So I actually saw organisations wanting to drive this themselves. So it's not, from my standpoint, it's not a consideration of need to convince anyone at all. Where we as professional services come in is to support, guide, provide insight, on what others are doing. So there can be value in understanding, certainly outside of regulation and outside of clear understanding of what's going on, to be able to bring that broader perspective and help build a collective and a consolidated view on approaches and adoption. Hopefully that answers your question.
Yeah, definitely. Thank you.
Any other questions? Leanne, can I ask a quick question just about, you mentioned we talk about regulation and we talk about ethics. Do you see them as the same thing, or do you see these as two different motivators within industry?
Yeah, we have myself and my colleague that's here today, who's from KPMG Law. We have this debate quite often. So this is a personal opinion. I think ethics is over and above laws and regulations. However, the laws and regulations, or at least guidance notes of some shape or form, help organisations have a consistent approach to reducing the risks, so from a very practical and operational standpoint. Ethics obviously has a broader view, and it's not just about monitoring, say, the outcomes for fairness or unfair bias, but a broader view on how you can and should use data, even if legally you can. And that's why I talk about it being over above. So we often use the phrase just because you can, should you, which would talk more to the ethics side and less to the controls and the laws that are in place.
Awesome, thank you. Any other questions? Okay, thank you so much, Leanne, for your talk. Thank you. Our next speaker is from the FCA. It's Jessica Rusu, who will be speaking. Actually, got a great title of AI for Good or for Greed.
Thank you very much. Good morning. It's fantastic to see so many excellent and skilled resources here in the room. I look forward to having some great discussions, hopefully later with all of you over a cup of coffee. And it's so good to be here in person. I really do enjoy the face-to-face conferences the best. So I do have some slides for you today. If you could pull them up, please. I don't have a clicker here. Thank you. So yes, I'm going to be talking to you today about AI for good or for greed. If you could move on to the next slide. Thank you. So what we often find when we're talking about artificial intelligence, it's a very charged topic, and the debate around it can be sometimes polarizing. It either solves the world's problems or it can lead to our ultimate destruction. So AI, like most technology, can be used for good, for greed, or for both. So let's talk about a recent real-life example. Next slide, please. So during the pandemic, Matthew, a father of 9-year-old twin girls, was struggling with homeschooling, something many of us also grappled with, those of us who had kids at home during the pandemic. And at the time, Matthew, he was a former advertising guru. He was part of a small startup that had invented an AI tool. And this tool could track human emotion. And as the users were watching video content, it would adapt in real time according to their reactions. And so, of course, he was thinking that this had, kind of huge commercial impact for the world of advertising, marketing. And it's really not a far stretch to imagine how this could look like. Next slide, please. So you can change the look and voice of a model, if you're out shopping, to target a consumer in a personal way. And that's really quite similar to the way deepfakes work. So of course, this has huge kind of revenue potential. The technology could also have a political use. We've seen some examples of this. Selling adaptive video content to political parties allows politicians to hyper-target individual voters, change their pitch and promises in line with the voter reaction. So what happened in this story? Next slide. So ultimately, in that moment of necessity, kind of struggling at home with schooling, the entrepreneur realized that the tool could be used as a force for good rather than greed. So Matthew, working with education experts, rolled out an adaptive maths program that could become easier or harder for students in real time according to their reactions. And this was, I'm happy to say, GDPR compliant, with the data held on the user's device rather than in an anonymous server center. So he went on to deploy Edge AI in a project with the charity NACRO to help underprivileged young adults develop soft skills that they would need for interviews. And his startup won the backing from Innovate UK, which is the government scheme set up by the Cabinet Office. So Matthew could very easily have been lured down the path of using his AI tech for marketing or to help people sell more. But after 2 decades in advertising and several months of homeschooling, he found he had a more compelling purpose. So in this example, the innovator chose good over greed. But we know from experience that not all innovations lead to good outcomes. Next slide, please. So there are real and legitimate concerns around economic stability, as well as ethical questions surrounding the ability of AI to mimic human intelligence. And there are perhaps more immediate concerns over firms exploiting consumer data and the privacy concerns associated with hyper-targeting. There's also some confusion over what AI really is and what it realistically can achieve. And there can be a reluctance to embrace the opportunities of beneficial innovation by being too caught up in the fear of the unknown. So where are we really on this debate? Next slide, please. So looking at UK financial services can give us a more balanced perspective. We recently published a survey with the Bank of England on the use of machine learning and AI in financial services. The survey was conducted to provide regulators with a better understanding of the use of machine learning in FS, so we can understand how best to support its safe and responsible adoption. The survey found, unsurprisingly, that the use of AI in financial services is accelerating. So overall, 72% of firms responding to the survey reported actively using or developing machine learning applications, and that trend is expected to more than triple in the next 3 years. Triple. The largest expected uptake is in the insurance sector, followed by banking. Firms reported that machine learning applications are now more advanced and increasingly embedded in our day-to-day operations, with nearly 8 out of 10 in the late stages of development. Next slide, please. So the survey also provided us with some insights into the sentiments surrounding the relative benefits, risks, and opportunities for AI in financial services. So first of all, the firms were upbeat about the benefits of machine learning, including enhanced data and analytics capabilities, operational efficiency, better detection of fraud and money laundering. Secondly, in terms of risk, firms who responded considered the use of AI to actually have low to medium risk. Again, their sentiments. They identified the biggest risk for consumers as data bias and data representativeness. And the biggest risk for firms was identified as the lack of AI explainability. So finally, in terms of opportunities, firms are leveraging their existing governance frameworks to address the use of AI. So they're doing the best with what they have today. I think these survey reviews provide us with a more balanced view of the risks we are collectively facing into, alongside the relative benefits AI provides. At the FCA, we are seeing many benefits for AI as well. So we're using machine learning to analyze over 100,000 new web domains daily to identify potential scam sites. We're leveraging natural language processing to support our supervision work, and we are investing in AI tools in our digital intelligence environment. Next slide, please. So looking at AI from this balanced perspective, considering the risks, benefits, and opportunities, the key question for today and for financial services is whether AI can be managed through fine-tuning the existing regulatory framework or whether a new approach is needed. Next slide, please. Which brings me to the FCA and Bank of England AI discussion paper. We have recently published this joint discussion paper on AI to have a broad-based public debate on whether the existing regulatory approach in UK financial services works, whether there are gaps that need to be addressed, or whether an entirely new regulatory approach is needed. So what underpins the discussion is the idea that we already do have a framework, the Senior Managers and Certifications Regime, which is the SMCR, and that can be applied to new regulatory challenges posed by the use of AI in UK financial markets. Next slide, please. So I'd like to spend a few minutes just discussing AI from the practitioner point of view. I'm a practitioner, and I know many of you are. So often when we discuss AI and the complexity of models, we actually forget that AI is all about the data. So if the data utilized in models is of poor quality, it can lead to poor algorithmic outcomes. So the importance of data quality assessments to determine relevance, representation, and suitability are really heightened when it comes to AI. From sourcing large amounts of data and creating data sets for training, testing, validation, through to the continuous monitoring that happens post-deployment, safe and responsible AI adoption must be underpinned by high-quality data. Furthermore, the use of AI must be fully compliant with existing legislation, in particular data protection. Next slide, please. So, staying with the practitioner point of view, one of the key discussion points surrounding AI is about the unintended consequences, often referred to as AI bias or AI model risk. So how does AI bias actually happen in practice? I'll give you an example. So if I'm training an algorithm to predict which applicants I should hire into my data engineering team by looking only at past applicants, I may not get the skills or the diversity that I want. This is an example of sample bias. Model bias can occur during the training process and is influenced by the feature selection, the choice of models, the set of parameters. And automated model selection tools, which many people are now using, can exacerbate these risks. Any shortcomings such as incomplete or biased data will undermine the validity of the outcome. Black box risk occurs due to the lack of explainability of modeled outcomes and potential for unintended consequences. And finally, monitoring risk is introduced post-implementation, where hyper-tuned models are highly susceptible to data drift and lack of substantive oversight. Next slide, please. So this brings me on to my final point, which is the central role of the governance framework for AI. Model risk management has been around for a really long time. A 2011 publication by the Fed set a benchmark for model risk management. It said, there can be adverse consequences from decisions based on misused model outputs and reports. And it also said that this can lead to financial loss, poor business and strategic decision-making, or damage to a banking organization's reputation. Now, that was from 2011, and despite huge technological advances since then, these risks still remain true today. In the UK, we're leveraging the existing frameworks, the SMCR, and we are now applying this to AI. There are practical challenges that any AI governance mechanism has to address. The first of all is responsibility. Who monitors, who controls, who supervises the design, the development, the deployment, and the evaluation of AI models? The second is around creating a framework for dealing with these novel challenges, such as AI explainability. And the third is around effective governance, creating and contributing to a community of stakeholders with a shared skill set and technical understanding. But above all, governance matters because it ensures the responsibility is where it needs to be with the firm. And last slide, please. And let me conclude by saying, as both a data practitioner and a regulator, I am optimistic about the future uses of AI in financial services and beyond. I think we need to take responsibility. We cannot attribute agency to AI systems, which risks removing accountability for decision-making away from firms. We have to leverage what we have in terms of the existing regulatory frameworks, but adapt them as technologies change. And I would urge anyone interested in the topic to engage with our AI discussion paper. I'm really interested in your feedback to help us make that regulation more agile and dynamic so that proportionate safeguards are in place to embrace the opportunities of AI, whether those interests are of good or greed or both. Thank you very much.
Thank you, Jessica. I know Jessica's also going to be around for the coffee break and for lunch, so we'll be able to ask you any questions then. We'd love to invite Stefan up from the CMA, who's going to be talking about the work of the CMA with respect to AI and the interest in financial services.
Good morning, everyone. Really good to be here. So my name is Stefan Hunt. I'm the Chief Data and Technology Insight Officer at the Competition and Markets Authority. And I'm going to be talking about our work. Can we move to the first slide, please? So I'm going to be talking about our work and its relevance to financial services. Next slide, please. So there's 4 things that I'm going to cover. So there's 4 things I'm going to cover. First is I'm going to give some background on the CMA, our responsibilities and our capabilities with respect to AI.
Next slide.
Yeah. And then I'm going to sort of relatively briefly touch on our work through the Digital Regulation Co-operation Forum. Karen is up later this morning and she'll be able to go into that in more detail. Third, I'll be discussing CMA's work and looking at well-functioning AI markets and what we think about that and its relevance to financial services. And then lastly, I'm going to talk about how the CMA may get involved with the FCA for matters that are either partially or fully outside the remit of the FCA or the bank or the PRA. And I assume there's no possibility of changing slides. Okay, can you move to the next slide, please? Sorry, we've asked a few times now. Thank you. So just some background on the CMA. So we're a cross-economy agency tasked with competition and consumer protection. So the FCA itself actually has concurrent competition powers. It's also got powers itself for consumer protection. So, for example, under unfair contract terms and under the Enterprise Act, the FCA has powers as well. And obviously, the FCA is going to be the primary body dealing with financial services firms, certainly for regulated activities and for breaches of rules. But the CMA does cover financial services in a number of ways. So one is through market studies or investigations. So in the last few years, we've done retail banking, payday lending, investment consultants. Through mergers, we're the only authority that deals with mergers from a competition perspective in the UK. And then we can actually potentially lead on other aspects as well. So there's absolutely examples in the last few years of antitrust or consumer protection cases that we've led on. So we've been trying to build our capability in data and technology for a while. The Data Technology Analytics Unit that I formed began in 2018 with employee number 1, which was me. And we've been building, we're now going to be over 60 people by the end of this financial year. And so we've got capability in data engineering, data science, technology insight, which is the more qualitative or policy aspects of technology, and behavioural science, amongst other capabilities. So we've really got some very strong capabilities like the FCA as well. So just to pick one example, one of my team members, he's got he's a PhD in postdoc, he's from Princeton in computer science. He's a really well-renowned author in the computer science space. So we have quite a lot of capability in the regulatory agencies. And of course, we use machine learning AI all the time ourselves. So we're very big proponents of the use. Now, a really important development, which I imagine you're all aware of. So in early 2019, what's known as the Furman Review recommended the UK setting up a regime for ex-ante regulation of large technology firms. The government's still considering whether this may or may not happen. But we've certainly set up a digital market unit in the UK, focusing on large technology firms, and and we're working really quite closely with the FCA. Now, AI, as you can imagine, is important across all areas of what the CMA does. And in particular, we're working with very closely with DCMS and central government on their pro-innovation approach to regulating AI. Next slide, please. So I'm going to focus a little bit on our CMA's particular interest in AI. So in the competition world that I primarily am in, there's a huge focus on the idea that pricing algorithms are going to learn to collude, which actually I think is totally plausible, and there may be some evidence it's happened in some areas. But really, at least when I joined this community 4.5 years ago, I really thought they were missing a broader understanding of the potential relevance of algorithms and AI. So in order to try and broaden out the debate in this community, we wrote a paper that we published in January of last year, Algorithms, How They Can Reduce Competition and Harm Consumers. To be clear, lots and lots of positive things about algorithms as well. All of us will have been I'm sure multiple times today, probably a dozen times today, through our phones or through our laptops, we've been interacting with AI. So this is, coming really across the whole economy. So on the right, you can see a whole variety of different firms that you'll be interacting with a lot using AI, and we're very positive about the use of algorithms. Nonetheless, use of AI is coming up a lot in the CMA's work. So, for example, cases that we're working on right now, we're dealing with Google and Amazon when it comes to their systems for detecting and dealing with fake and misleading online reviews. And earlier on in this same piece of work, we were dealing with Facebook, Instagram and eBay on their systems for detecting the trading of fake and misleading online reviews. We're doing a very big piece of work with Google with respect to their privacy sandbox. This is the removal of third-party cookies on Chrome globally. So it's over 150 billion pounds a year is advertising going through Google. And there's a whole bunch of machine learning technology and actually other non-AI privacy enhancing technologies that it's really important that we understand and that we are working closely with them. We've got an antitrust case involving Meta and their use of advertising data. We need to understand the use of algorithms. We just did a big piece of work on mobile ecosystems, algorithms that play in many parts of those, the Apple or Android ecosystems. And lastly, we're thinking a lot about self-preferencing. What would it be for an entity to be self-preferencing through algorithms and actually through other means as well. Move to the next slide, please. So we've been working very closely with the DRCF, and my team's been leading the algorithmic processing workstream. In 2021, we held over 20 events with academia, industry and the UK government. But the main outputs thus far were 2 publications that came out in April of this year. The first one was actually really sort of extending from that CMA paper I just mentioned, but really trying to consider the benefits and harms, but from the perspective of 4 different agencies. So I was quite closely involved in this piece of work, and I'll admit it's a bit quirky. So it's not the smoothest of reads. This is the first time we've had 4 agencies coming together to do something like this, but I really think it, with the granular way it comes out, 4 different perspectives from 4 different agencies, is really quite unique. So I've seen some quite interesting overviews from other regulators. They tend to be relatively high level. I've seen a lot of really quite excellent ways of looking at algorithmic harms coming from various different companies, Microsoft and many others, but I've not seen anything with this degree of granularity that looks at regulatory risks and looks at it from different perspectives. So I really commend it to you all to read. We've also been thinking very closely about the third-party audit markets, and the second paper that we published focuses on that. I'm sure Karen will go into that more later. Next slide, please. So the current DRCF work programme is to... Next slide, please. The current DRCF work programme is working from what we did previously. So the first work stream is really trying to improve the regulatory capability for algorithmic auditing. I mentioned a few of the CMA cases we're involved in. Obviously, we're getting very involved at getting into understanding parties' algorithms. Actually, my team's leading this work stream. We're also continuing our work on third-party audit and, very importantly, thinking about algorithmic transparency as well. Next slide, please. The CMA, given the nature of its role, is really trying to think about what it is for AI markets to be well functioning. So we've got actually a much broader sort of technology horizon scanning and market insights program where we've been trying to understand a whole variety of different technologies. So there's, has some overlap with AI, but connected cars, wearables, blockchain, quantum computing, AR, VR, etc. And within that, we've really decided that we need to make sure that we understand foundational AI models further. We're well aware of the potential for concentration in these markets. So I'm sure we've all been wowed in the last 12 to 18 months from GPT-3 from OpenAI, and just quite how phenomenal it is at producing language, at least for 2 or 3 paragraphs. More recently, as we started earlier in this year, we had DALL-E producing the first text-to-image transformers. Really quite phenomenal. Now, the debate until early this summer was really focusing on the potential for concentration and centralization in these markets. But yet, at the very beginning of the summer, you had Midjourney come out with its text-to-image model. We've then had Stable Diffusion come out more recently as well, which is open source. I think we're just at the beginning of really understanding what might be the issues of these kind of markets. So yes, there's certainly some centralizing factors, but to the extent that these things are trained on data from the internet, as actually these transformer models have been, well, that's open source. We've got to think about considerations such as are there open source foundations that are well funded that are going to be working in these markets or not. So the CMA is making sure that we're thinking carefully about these issues, and to the extent there's absolutely the potential for authorities getting involved and trying to help positively steer these markets. Lastly, we're also very interested in recommender systems as well. There's obviously, wonderful aspects of recommender systems that, again, we will have interacted with these if you've been on your social media feed or these kind of things already today. There's also a lot of potential harms, so we're making sure we understand the technology, the cutting edge of the technology. So on the right, by the way, this is from the latest version of DALL-E. This is outpainting, where you take an image and it can construct from out. This is a girl with a pearl earring with a bit of further context. So next slide, please. There's a couple of areas where there may be elements that are partially or fully outside the FCA's or bank's remit that we have to think about. So the FCA and the PRA are currently consulting on operational resilience and critical third parties, and they're potentially going to have actually some legal capabilities at getting information from non-regulated entities. There's also an FCA paper recently on big tech and financial services. But there's definitely the potential for the CMA to work constructively with the FCA, as we have done previously. So, for example, when it came to the regulatory perimeter, several years ago, it's about 5 years ago, the FCA referred investment consultants to the CMA to do a market investigation. And indeed, at the end of that market investigation, the CMA made a recommendation that investment consultants should be within the regulatory perimeter of the FCA. When we're talking about AI and data and technology more generally, obviously this is just naturally cutting across boundaries. And that's why we have the Digital Regulation Co-operation Forum, and we have to be thinking joined up across the different agencies. We're also the only agency from a competition perspective that's dealing with mergers and acquisitions. So this absolutely includes financial services. Just from earlier this year, there was the FNZ GBST merger looking at software and investment platforms. There's Experian ClearScore 3 years ago, and plus many other financial services. There's quite an interesting example earlier this year of when Microsoft is buying Nuance. So both of them have a lot of voice to text technology, obviously using AI. And we had to consider very carefully whether we thought there were any issues in the market. We didn't think there were, but one could imagine that there may be issues in financial services that the CMA would need to consider in the future. Last slide, please. So AI is cutting across existing structures, and that means that we as regulatory agencies are going to have to work much closely together, and we very much are doing that. I think the UK really is actually the global leader in making sure that these agencies are working well together. The role for the CMA when it comes to AI in financial services will be helping to deal with when there may be issues that are outside of the regulatory remit, but we could very much get involved in mergers as well. And when we're thinking about these sort of foundational models, obviously that can touch on financial services. We've been investing a lot in our own capability, just like the FCA, and we're working with the FCA as well. So we're really trying to make sure that we've got the capabilities to deal with issues as they come up. That was it.
Awesome, thank you. I think we've got some time for questions, if anyone wants to ask anything. Does anyone want to kick off? It was such a tour de force. I think everyone's just digesting, but... do you want to go? I've got a question here, then I'll come to you. Yeah, I'll just go. Yeah. Oh, no, there's a gentleman here on the left, on the other side. Yeah. Here, did you put your hand up? Yes. Oh, yeah.
Hi.
I think.
Hi. Hello.
It works,
Hi.
yeah.
It's Martin Coder from SWIFT, the Society for Worldwide Interbank Financial Transfers. So you mentioned the Digital Markets Unit. Wasn't there supposed to be some legislation to put that on a statutory footing, kind of the UK version of the Digital Markets Act in the EU. Whatever happened to that?
So, so it's currently with central government. So my understanding is we're likely to have draft legislation coming out later this year, or perhaps it's early next year. But obviously, legislation isn't for us; it's for central government.
Yeah, I forget who the DCMS sols is these days. But.
Yeah.
Any other questions? Got a question over here.
On topics such as transparency and explainability, which are going to cut across several different areas of regulation and interest, how do the regulators come together to make sure there's sort of clear guidance to the industry about what sort of standards or what we should be trying to do from a competition but other angles as well?
Yeah, so I think the answer to that is the Digital Regulation Co-operation Forum, right? So we've got 4 different agencies now. So us, the FCA, ICO and Ofcom, all really working quite closely together. And in fact, the ICO and Ofcom are leading the algorithmic transparency work stream within the algorithmic processing part of the DRCF. So I think you can expect to see more in the coming months.
Is there somewhere we could go to see what they're doing now?
No, there's not actually. So it'll be once we'll be producing outputs later this year.
Great, thank you.
Or actually later this financial year, to be clear.
I think you've got one final. Do you want to ask a question? Yeah, one final question. Go for it.
Yes. Hi, this is Linda, Head of Privacy and Ethics at Santander. I have a question in relation to European regulatory trends and the work you are doing as part of the forum. To what extent are you also looking at kind of more European and international developments in the AI regulatory framework and thinking about potentially translating them into or aligning into our UK standards?
So we're thinking about that quite a lot. Again, this is another one where it's actually primarily for central government, but actually when it comes to AI, the UK proposals are quite different to the EU. So we're proposing not to have central AI regulation and actually have a sectoral-based approach, but then with very close working across the different agencies. So we're working very closely with DCMS, all of the other agencies as well, and that's how we're planning on tackling it. So I think actually that's a real distinction with the EU actually.
Also, okay, we'll take a very brief question and then move on. Go for it. So just if you could introduce yourself, and he's going to give the microphones there as well. Yeah.
Sorry, Marcus Evans from Norton Rose Fulbright law firm. Will the AI white paper set out what these cross-cutting principles are going to be that go across the Digital Regulatory Co-operation Forum in a bit more detail, so that we can kind of see what the commonalities are going to be that all the regulators are going to actually be applying to AI through their different sectors?
So I certainly know what we've, so the conversations we've had at DCMS, and we've been part of actually some broader conversations as well, including all of the agencies. So I'm aware of those conversations. I'm aware of the vast submissions to the DCMS. I'd be very surprised if they don't go into more detail. We've certainly, we've certainly, as well as the other agencies, given quite a bit of thought as to what it would mean for our sectors. But we'll be very interested to see what DCMS produces. That's one of the things open for discussion, isn't it?
Awesome. Thank you so much, Stefan. And also, just to be aware, everyone, that there's actually other sessions that where we're going to be discussing about the kind of sectorial approach with other regulators as well. So it looks like a common theme that's going to be coming up. Thank you so much, Stefan. Thank you. So our next session is actually on regulating AI and how we want to take a kind of pro-innovation approach. Can I invite Minesh Tana from Simmons & Simmons to come up, who's going to be hosting a panel. Minesh, I'll leave you to introduce your co-panelists as well. So, do you want to come here?
Hi everyone, I hope you can hear me okay at the back. Well, good morning and good afternoon if you're online in another jurisdiction. Just to introduce myself and this panel, my name is Minesh Tanna. I'm a partner and the global AI lead at Simmons & Simmons. I'm a lawyer by background, and I also have the privilege of chairing the Society for Computers and Law AI group. I'm delighted to be joined by three fantastic panelists. One in person next to me. We've got Shamik Kundu on the line in Singapore, who'll join us very shortly. We also virtually have Cameron Craig, who can't be with us, but we're shortly going to see a pre-recorded interview from him as well. So fingers crossed all the technology works, no pressure at the back. I'll do some intros to start with and then do a bit of scene setting before we kick off the panel discussion. I'm delighted to introduce Sarah Gad, who is the Global Head of Data and AI Solutions at Credit Suisse. Sarah has worked in financial services for over 15 years, and as the Global Head of AI for Credit Suisse, Sarah was selected for the invite-only AI Public-Private Forum run by the Bank of England and the FCA, and she works with regulators and industry bodies, including the Association for Financial Markets in Europe, the European Financial Services Roundtable, and the OECD. Shamik, who's on the line in Singapore, is Head of Financial Services at True Era, which is a software startup focusing on AI explainability and testing. He was previously the Group CDO at Standard Chartered Bank, and he co-authored the 2018 Fairness, Ethics, Accountability and Transparency FEAT principles, which you've all seen probably from the Monetary Authority of Singapore. And with Sarah, he was also a member of the Bank of England AI Public-Private Forum. And Cameron Craig, who will introduce himself on the video to be played shortly, is Group Head of Data Privacy at HSBC. I just want to do a little bit of scene setting before we get started. And to do that, I want to take you back to Christmas Eve 2020. And in announcing our Brexit deal, the then Prime Minister Boris Johnson said this: "From January 1st, we are outside the customs union and outside the single market. British laws will be made solely by the British Parliament, interpreted by UK judges sitting in UK courts, and the jurisdiction of the European Court of Justice will come to an end. We will be able to set our own standards, to innovate in the way that we want, to originate new frameworks for the sectors in which this country leads the world, from biosciences to financial services, artificial intelligence, and beyond." Now, that struck me and kept in my mind for two reasons. The first is that I put a LinkedIn post on Christmas Eve after that talk and got a stern telling off from my wife for working on Christmas Eve. But the second reason it struck me is because Boris Johnson specifically referred to AI when he was talking about the UK's freedom to set its own standards and its own regulation post-Brexit. So what happened next? Well, I just want to focus on two developments. The first was in September 2021. The UK government published its national AI strategy, and its aim was, quote, "making Britain a global AI superpower." Now, whilst one of the pillars of that strategy was governing AI effectively, it was clear by that point that the UK was going to have a pro-innovation approach to regulating AI. And by that time, of course, the EU had published its proposal on the draft EU AI Act, which some would say is not particularly pro-innovation, but that could be something we discuss later. The second development was this year in July. We had more concrete proposals from the UK, and in case it wasn't clear, this time the clue was in the title. It was a pro-innovative approach to regulating AI. And in that, as we've heard, the UK essentially said that it would favour a sectoral approach to AI regulation, the financial services sector being one of those sectors, and a deliberately light touch approach to regulation. Again, very different from the EU's approach. And that's going to be the topic of today's panel discussion, the UK's pro-innovation approach to regulating AI. So against that background, we're first going to hear from Cameron Craig in a pre-recorded interview, and I'll then ask each of our panelists, Sarah and Shamik, to give their initial impressions on the UK's approach, and then we'll have more of a discussion, and I'd welcome audience participation at that stage. So I'd be grateful if we could play the interview with Cameron. I'm delighted to be joined by Cameron Craig from HSBC today. Cameron, thank you for joining us. My first question is that I understand you're the Group Head of Data Privacy at HSBC. Please could you explain a bit more about your role and specifically the extent to which AI features in that role?
Sure. Thanks, Manish. And sorry not to be able to be with you in person today. I sit in the legal team at HSBC. I'm the global head of data privacy law. And before that, I was a partner in an international data law firm, head of the data privacy practice. And before that, I actually worked as an engineer for 7 years. And there's quite a lot of synergies between my technical experience and the sort of current focus on technology and the use of that in HSBC. So although AI doesn't sit within the data privacy risk at HSBC, it definitely does feature significantly in my current role and needs to be considered very much of the data as part of the data privacy conversation that we have. Just to give some context, HSBC's made some pretty public statements about its commitments to use technology to execute its global strategies, particularly with its cloud-first strategy and commitments to using technologies such as AI and machine learning to improve and provide efficiencies, particularly in the management of financial crime risk, which has been pretty public in the way it's doing that. So because AI invariably involves the use of some sort of data, there are very often related data privacy risks. The sort of so how does data privacy fit into it? At a very high level, slightly cliched now, we often say that data privacy answers the question, can we do it? And then there's another level on top of that that needs to be applied, which is, should we do it? Which is obviously a very different question, touching more on the ethics around AI, which is so important as part of the developing legislation and regulation in this space. So the way that we've done this at HSBC, putting in place mechanisms and structures to try and make sure that these questions are considered at the right time and at the right level within the organization, is quite a challenge, to be honest, because there are so many other stakeholders to be involved in this question. It's a very cross-functional question, AI, very cross-functional issue. It includes other risk areas in addition to data privacy, including model governance, conduct, competition law, procurement and operational resilience risk, and data governance. So HSBC's, as I guess many other organizations, been on a bit of a journey to try and manage AI ensure AI risk is managed effectively within the organization. And around about 2018, 2019, we developed and published an AI code of conduct, which is available publicly on our website. And around the same time as well, we set up a data and AI ethics committee. And this was really the most senior executives in the bank got involved in this at the group executive committee level. Very much focused on addressing that should we do it question, and very much focused on making sure we get the right outcome for customers and we don't do anything in our use of AI that would impact anyway on customer trust, because it's, as with all big organizations, it's very important to us that we're seen to be handling our customers' data in the way that they would expect us to do. So this committee is it meets regularly to consider use cases around AI, and although it's advisory rather than mandatory, it's not a decision-making body. I think that generally the recommendations are followed, because I guess not to follow it would be a rather career-limiting move in some cases as well. But it is an advisory body. So so that's how at a high level, Minesh, AI features in my role at the moment at HSBC.
Thanks, Cameron. And we're here today to discuss AI regulation, which is an increasingly important topic, particularly for financial institutions. Do you think it's a misconception to say that AI is not currently regulated in the UK? For example, do you see aspects of AI regulation in your role in the data privacy team at HSBC?
Yeah, I think that is a misconception, Minesh. Whether it's fully and properly regulated at this time is a separate question. I don't think it is. I think there are gaps, but there are absolutely regulations that impacts on the use of AI at the moment. There's data privacy considerations, of course, but there's also regulations and laws governing development of models and financial services. There's laws and regulations governing data governance and data security. And in fact, the recent Bank of England FCA discussion paper focuses on exactly this question, which is whether AI can be managed through extensions and modifications to the existing regulatory frameworks and laws, or whether a new approach, a new law is specific AI law is needed. It's got an interesting paper actually, and sets out this sort of different, some of the different areas, including those I've just referred to, and what are the specific aspects of those laws that impact on AI, and basically ask the question. It's a consultation document. Ask the question: do we think that the best approach is to have a new standalone AI law, or do we think that there are gaps, and if so, what are they, and how could they be implemented? So I think there is a misconception, Minesh, to say that there are currently no regulations for AI in the UK.
Thanks, Cameron. Yeah, I tend to agree with you, and I think that discussion paper you mentioned is probably going to pave the way for some interesting discussions about what regulation is going to look like in the financial services sector. And on that note, what do you think we'll see in terms of regulation? I think we've heard that the UK is going to have a sector-specific approach to AI regulation. What do you think we'll see in terms of AI regulation in the financial services sector, and what are your views on that approach?
Yeah, I think the jury's still out a little bit on that, Minesh, and I think the discussions around that paper will help clarify this. But some of the questions and challenges that the UK and other governments and policymakers are facing are really similar in many ways to the challenges that organisations such as HSBC have in embedding AI governance in their organisation. You know, we already have, as all banks will have, quite sophisticated and mature risk management systems with well-developed policies, procedures, accountability and governance for each of those risks that I mentioned, the conduct risk and model risk, operational risk, etc. So the question facing banks in implementing the governance of AI is similar to that facing governments. Do they make modifications to the existing silos, which can be quite a heavy lift actually, or do they put in place another silo? I think it's at one level it's quite tempting to say, oh, let's just have a new law, in the same way that the EU have done, of course, with the AI Act, which is quite specific and very much an all-encompassing AI law, quite specific in the way that it sets out specific high-risk use cases and use cases which cannot be used under any circumstances. So that's one way to do it. But the challenge with that, of course, it inevitably introduces additional overlap, duplication, and potential inconsistencies that need to be dealt with in practice. So I think I hope for a sort of somewhere in between the two, to be honest, Minesh, which would recognize where there are gaps that need to be filled or clarified within the existing framework, and perhaps make modifications to those bits of legislation, and also introduce some sort of overarching approach to make sure that each of the aspects of the silos are considered in a coherent fashion whenever you're considering AI risk. So I would hope for a sort of, hopefully a sort of lighter touch approach with taking into account the existing legislation and avoiding overlap, inconsistencies and confusion with the new legal framework.
Thanks, Cameron. That's really interesting. And you mentioned the EU AI Act. My final question, just very briefly, is we know that organizations like HSBC are international, so in some jurisdictions you will be subject to more stringent AI regulation like the EU AI Act. How do you approach that? Do you take a consistent approach across your organization to comply with the most stringent AI regulation, which may only apply in a few jurisdictions, or do you try to take a jurisdictional specific approach? So in other words, if the UK applies a more light touch regime, will that actually matter for organizations like HSBC, or will you end up complying across your organization with the most stringent AI regulation, which applies in only a few jurisdictions?
Yeah, I mean, this is a challenge, Minesh, and it's one that we face not just in AI, but across all different types of legislation, including data privacy legislation, which of course has got very different levels of application in different countries. And I think the answer will depend, I guess, on what the specifics of the law are. But the principle is that we don't mandate the imposition of the highest watermark of regulation across the globe. I think that would be overly and unnecessarily restrictive on our ability to use technology and to get the benefits of technology, which are well documented and well evidenced. So I think the approach would be to retain some flexibility to follow a less stringent approach, provided we would still be consistent with our own code of conduct and consistent with the expectations in a particular market, and importantly, making sure that we are complying with the laws in those jurisdictions. So I think we would not necessarily follow the most stringent high-level watermark that could be set by the AI Act, but give ourselves some flexibility, but always following this sort of guiding light, if you like, of our code of conduct, and making sure that we're doing the right thing for our customers and the other individuals whose data that we're processing, ensuring the right outcomes, really.
Yeah, that makes sense. Well, look, Cameron, thank you very much for joining us virtually today.
Okay.
I'm really grateful for your time.
Thanks. Hope you have a great day, and sorry not to be there. Thanks.
That really struck out from that conversation was first that Cameron's already dealing with regulation in relation to HSBC's use of AI through data privacy regulation, for example. Second, that Cameron personally would favour perhaps a more lighter touch approach in the UK, perhaps building on what Jessica said in relation to the discussion paper, amending existing regulation rather than necessarily new AI-specific regulation. And third, and I think quite interestingly, even an international organisation like HSBC would take a jurisdiction-specific approach to complying with AI regulation, rather than, for example, complying with the EU AI Act across the board. So on that note, and while we get Shamik hopefully lined up and joining the call, I'll turn to Sarah first, and to ask you in a similar way to Cameron to share some of your initial thoughts on AI regulation and the UK's pro-innovative approach.
Yeah, it's really interesting. I think we use this word AI all the time, and what do we actually mean, right? Because we interchange between machine learning and AI, where if you look at the newer definitions that are coming up, it's all about autonomy, right? Autonomous intelligence, things that can actually make their own decisions and learn and grow and change. And machine learning, which is the prominent use right now of what we call AI, is pretty much used for decision support in most use cases, right? So when you're in your Gmail and it's type ahead, or have you missed an attachment, have you forgot to add somebody, that's all decision support. You can decide to do it, you can decide not to do it. So I think that the first thing that we've been talking about, and we spend quite a bit of time on in the AI Public-Private Forum as well, is what is AI, right? So what is the definition? And it's something that, especially I think in the EU with the AI Act, has got quite political around what that definition is, because that helps sets the landscape, right? AI exists because of the tsunami of data that we have and the ability to compute that data, right? Without either of those things, you wouldn't have AI, or you wouldn't be able to do machine learning even. You have to have the compute power. And we've moved up from kind of worm brain through to monkey brain speed now. So you have those capabilities, but those are becoming more and more commoditized. I can use machine learning in Tableau now with zero experience or knowledge of data science or what's going on under the hood and produce results. I can produce a report that may go to a regulator. Right? So how am I going to regulate that, right? I can't regulate that. So you have to go back to base principles, data, right? Is the data of quality, is it sound? So I think the approach and the work that we've done with the Bank of England and FCA and the paper asking for feedback is really exploring that, right? So how do you take the existing guardrails that are at play, try and not be technology specific, because that's hard, right? What's next, right? We're going to have something else that comes along, or we're going to have another 5-year debate on what the regulation looks like then. No, you've got to do it technology agnostic, but manage the risks that come out of it. And there will be new risks that arise as we move down this technology horizon. And I think that's the approach that the UK is taking in terms of regulation, is understand where the risks lie, understand where we have them covered already through existing regulation, and where the gaps might be around controls that you need to enhance or net new. HSBC referenced ethics board, right? That's not something typically we would have had in financial service institutions 3, 4, 5, 6 years ago. But it's now becoming quite critical, not just around the use of data, I mean AI specifically, but data, right? No matter how you're using that data. Because things are becoming far more commoditized, right? Everybody can create information. We're providing better products for clients. They are combining their data with data that we have. So there's a ton going on in that space, and it's doing that risk-based approach.
Thanks, Sarah. And I think the point you made about the definition of AI is crucial, really, because when it comes to law, and as the lawyers in the room will know, we strive for certainty, and a definition around something as core as what AI is absolutely vital from that perspective. But of course, it's one of the most difficult things to actually land on a consensus.
But maybe it's not, right? Maybe we don't need to define it. We just need to define the risks.
Yeah, I'm not sure how the lawyers will feel about that.
Yeah, I know, I understand, but maybe that's the perspective, right?
Yeah,
if you understand the risks you're trying to protect against, a risk-based approach, can apply to all sorts of technology horizons, right?
Yeah, no, I hear that. Shamik, I hope you can hear us and that we will be able to hear you. But if you can, we'd be grateful if you could share a few of your thoughts as well on this topic.
I can hear you, but I think my video will be a bit delayed. As I can see, I think the video is slightly delayed. Sorry, could you repeat the specific question? Because I was kind of aligning the video with the voice. So.
No problem, Shamik. Yeah, you're right, the video is delayed, but we can hear you loud and clear. It's just to give your initial high-level thoughts on AI regulation and the UK's pro-innovative approach.
So I'm not sure there is need for much AI-specific regulation, and I'm not sure the UK regulators are proposing that either. So I think that's my top-level view. So what do I mean by that? I mean, first of all, almost none of the risks that Sarah, myself, and others have talked about at the AI Public-Private Forum, and indeed everybody else who's looked at this space talks about, are unique to AI or machine learning models. I won't even go into the question of definition. Yes, there are certain things that get accentuated when you train models on the basis of historical data, but the underlying risks are there, whether you're using machine learning or other mechanisms as well. Secondly, there is, particularly in banking, a very rich set of requirements in model risk, in data quality, in duty of care or conduct requirements, in financial stability requirements. So there's an existing framework, which, by the way, is a source of envy for many other regulators in other industries, because for them, they have to start building up these kinds of, particularly the model risk aspects, from scratch. So I think if you take these two things together, there's only a small number of areas, in my view, where there is need for additional guidance or enhancements. One is, of course, already there is the tightening and enrichment of the model risk guidelines itself, which in the UK perhaps slightly lighter touch compared to the US, and I think now the recent suggestions will bring it in line. Second, there are particular questions around fairness, group fairness in particular, around the ratios that need to be used, etc., on which there's a lot of confusion, where I think many in the industry would welcome a little more clarity on what ratios might be relevant, etc. At the moment, a lot of people by default assume the disparate impact ratio, which is obviously only applicable for a particular subset in the US. And then finally, there is a question of accountability. When we were in the AI PPF, there was this question, who is accountable for AI going wrong inside a bank? I think there is value in clarifying that a little bit. Personally, I have viewed that there are people who are accountable for setting those standards in a bank and ensuring that it's measured against that. And then there's everybody else who's building and using AI who's accountable for adhering to those. But I think these three areas could benefit for a bit more clarification, but we're talking 10% over an already existing rich set of regulations that suffice.
Thanks, Shamik. That's really interesting. And we'll come back to a couple of the points you mentioned as well in the context of the questions that I'm now going to fire at you and Sarah. And at this stage, please feel free to add any observations or questions on your own. And after we hear from Sarah and Shamik, I will give a bit of time. So please do feel free. My first question, and Sarah, I'll come to you first on this, is does the financial services sector need a pro-innovative approach to regulation? And I say that because financial institutions have been regulated for a long time, and they have innovated in the context of that regulated environment. So do they need this sort of pro-innovative approach? And by that, I'm not suggesting that they should be either more heavily regulated or not regulated at all when it comes to AI, but I'm just querying the pro-innovative approach in this sector.
Yeah, well, flip that on its head, right? What's the opposite of a pro-innovative approach? It's like the anti-innovation approach. And I don't think anybody wants that, right? So I think you have to have a pro-innovation approach, because the technology is just becoming more and more commoditized, right? And so unless you are embracing it and the good it can do, I love the comments around bias, etc. I mean, I think, I grew up learning that if you want to kill mold, you shine a light on it, so you speak up. And a lot of the bias that we've had in society, we're all naturally biased, we're all human, we all grew up certain ways, we learn from our backgrounds, our cultures. You can now shine a light on, right? You can actually see it exists. You can actually do something about it. You can detect it. These are amazing, amazing breakthroughs that we can actually leverage for good. So I think you've got to highlight the good. You've got to make sure you put the right guardrails in place. I mean, things like recruiting tools, those are the kind of things that worry me, right? Where you've got third-party tools coming in and they're using algos under the hood. The people consuming that information are HR, right? They're not data scientists, right? And they're making decisions on how they rank resumes. So making sure you've got, as part of the HSBC conversation, you've got an ethics board that evaluates that, looks at it. What are the sort of questions we need to ask around it before you decide to bring on board a vendor? It's that enterprise view. And then I think to Shamik's point as well, the ongoing monitoring, we mentioned this earlier as well, just because it's good when it goes through the model risk management process, these things drift, especially when you start getting into the unsupervised domain. So you have to have very proactive monitoring. This isn't a once a week check anymore, right? If you've got something that's learning constantly, you need to be constantly monitoring it. And that's a bit of a change from the way we've thought about things historically. So I think you've got to drive that pro-innovation approach, because it's going to happen anyway. And if we're not doing it, everybody else is going to be doing it. But at the same time, you've got to, I think, have the right guardrails in place, using the existing structures, but then highlighting where they need to be enhanced or changed.
Can I come back to, I'm sorry, we're already deviating from the script, but anyway, can I come back to you on the AI and recruitment point? Because I think that's very interesting. So you've identified a particular sensitive area where the use of AI can lead to harm. And we've seen that New York has done the same thing with its AI hiring law. Would you then advocate a more stringent form of regulation for that particular use of AI, which is then necessarily not a sectoral approach, because presumably you would have a more stringent piece of regulation for AI recruitment?
It's a great question. And I think there was good and bad in that, right? So I think one of the good things that they did in the New York State law was call out the fact that you need to do a bias test, has to be independent, and you have to publish it. So it's going to be public on your website. You've got to inform your candidates you're using this process, etc. That is something that applies across industry, right? No matter what industry you're in. And to be honest, I mean, I've heard stories from, kids coming out of school in the UK who are trying to get jobs as interns, and they're interviewing with an algo, and it's counting the amount of times they blink their eyes and making decisions now that is just wrong, right? If I'm on the autistic scale, I'm going to perform very differently in an interview to somebody who's not. So that is the type of thing where I would see that broadly across industry as either being, I hate the term high risk AI, because that's like, okay, let's build trust in something called high risk. I mean, that's not happening. But I think it should probably more be like tier 1 AI use cases. But these are the things where you need really strong controls because they directly impact people's lives. Right? And then you've got decision support stuff where it's just making your life easier, Gmail, type out, whatever it might be, next best action for clients, right? These are all things that really, really help. And whether it's also fraud detection, AML, being able to reduce the noise we've talked about, these help people perform better. It's that combination of machine intelligence alongside human intelligence, right? We innovate, we're thoughtful. Machines can digest vast amounts of data really, really quickly that we can't do. So it's that balancing act between the two. But where you've got cross-sectoral, I think they should be addressed cross-sectorally. And maybe that's more through the consumer protection or somewhere else. But I think those are areas to me where you could have the most impact because these tools that they're coming out with, these vendor products, to the people who are buying them, sometimes it's not very transparent what's going on under the hood. And they don't have the skills necessary to ask the questions. And it's in all sorts of different industries.
Yeah, thanks, Sarah. Shamik, anything to add to that? So I guess we've moved on to this point about whether a sectoral approach... Are you still there, Shamik?
We see Nikki.
Are you now Nikki?
Are you now Nikki, yeah.
Okay, we'll hold on that while we get Shamik hopefully back. And going back to the questions that I thought we would address, the next one, and I'm obviously conscious we have representatives from regulators in the room, and obviously would love to hear from them on this. Given that AI, and you know this, Sarah, in your role, can be very technical and complex, how are regulators going to effectively enforce AI regulation, given those complexities?
I think if you specify the risks you're trying to prevent and some of the controls you can put in place or evidence to show that you have addressed the risk, when we think about model risk management, for example, there is risk tiering. So we have very few machine learning models. I think we have one sort of neural net deep learning model in production, literally across the whole of Credit Suisse globally. So mostly it's machine learning models. Right. And then those get risk tiered, and they get risk tiered based on impact, how complex are they, how essential are they to that function. And it goes from risk, tier 1 to tier 4. Tier 4 being something that's very low risk, something that may just be, operating on somebody's desktop, all the way to tier 1, which is something that's very complex, very high risk. And based on those risk tierings, you have different levels of controls you put around it. So, for example, if I'm using what they call black box, right, very difficult to explain, I have to make sure I can shut that down. I've got backup. It's constantly monitored. If there's any drift outside of a boundary, it gets shut down automatically. And then you've got the resiliency to fall onto a human process or to a different process. And that's a lot of work, right? But that can happen through the model risk management validation process. And then I think on the ethics side, ethics is culture, right? That's where ethics comes from. So we work with our entire population across the bank. We have cultural values. So things, integrity, meritocracy, transparency, etc., accountability. And as part of our impact values, we then overlay machine learning, and actually not just machine learning, engineering, data engineering in any solution, way, shape or form, and data use. And we say this is how you need to think about your use of data, whether you're creating an algo or you're just publishing a report or using Tableau, in terms of your ethical values that you display every single day as part of the culture. And then having a committee that asks the right questions around use cases, which has to be diverse. I don't want that committee to be data scientists and data engineers. I need that committee to be people from HR. I need hopefully somebody with a ethicist background. You know, we're seeing like University of Cambridge now is actually doing degrees in ethics in this topic, right? So you can actually get educated on this. You need those folk coming together. So everyone's asking different types of questions and looking at it from all sorts of different angles. Yeah. Especially with those tier 1 use cases of or use of machine learning and AI.
Yeah, thanks, Sarah. I agree that diversity point is really crucial. Shamik, I think you're back with us now, so if you can still hear us. We'll wait for Shamik to sort that out. But in the meantime,
I can see Shamik
I'd
moving.
welcome.
I think it's just audio.
Yeah, I think it's just.
Yeah.
Shamik, can you hear us? Okay. Okay, no problem. Well, look, we'll use that as an opportunity to open up the floor at that stage if there are any questions or observations on some of the points we've discussed so far. So the sort of sectoral approach versus more horizontal approach, how regulators are going to effectively enforce AI.
Hello, this is Mick Gregorich from LSEC on Stock Exchange Group. I work in tech innovation, and this is an amazing topic, and we've seen the rise of AI in the last 4 years in the financial services. It's amazing. And there are a lot of new capabilities we're going to see. Sarah mentioned that, for instance, shining light on the existing data, bias in data or automation of services, customization of services, and a lot of benefits for the customers. However, there's obviously the risk. We've been talking about it, and this whole conference about the risk. And FCA and Bank of England both recommend to start with the MRM functions inside of firms as a starting point. But however, with the complexity, commoditization, rise of data, rise of AI-generated data, and the list is growing, there are specific challenges for MRM teams, which are more geared towards the traditional econometric models and
things really, really quickly. No, it doesn't. So you have to change the way that you are capturing the things that you need to validate a model in the first place. It should be a living, breathing part of the model development lifecycle. Everything from the documentation to the feature testing to the testing for the model bias, looking at best fit, all part of that actual development lifecycle, and those artifacts become embedded as part of the model code. Also really helps if you're dealing with, 5 years later, you want to look at that, you're not relying on a person, it actually becomes part of the model itself. And that documentation then becomes self-generated. We're not there yet, but that's where I think things need to go, because otherwise it can't scale, right? It's the same with the monitoring, right? The monitoring needs to be agnostic to what tooling you've used, even what platform you're running on, whether it's on-prem or on cloud. You need to be able to take the information from the exhaust and have that in a real-time live basis, so you can see immediately if things start going on a second line level as well as a first line. First line, obviously, you're looking at their models, but you also need to look at it in a bigger picture, I think, across the enterprise. So these are the areas we're looking at quite closely. We've had an AI governance forum since 2018. We kicked that off as an advisory forum to actually start asking these questions, start the upskilling journey. We launched 4 different learning streams across our organization, from like AI for people who've never heard the term, through to AI ethics for data scientists, ethics as a topic through all, and started to try and put these structures in place. And model risk management has been a partner through that journey, as well as internal audit. Because they, at the end of the day, as a third line defense function, they have to be able to audit these things as well. So they have a say at the table. So we've partnered around this between first line, second line, and third line to try and put an environment together we think can now start moving into the future and providing a future state.
Sarah, can I just follow up on that? Because I think it's interesting. As we see more AI regulation and risk, does this have to become a more cross-functional effort within financial institutions, involving not just the model risk management team, but also compliance functions and legal functions as well?
Yeah, I would say it's everybody.
It's everybody.
So I did a session with the PMI Institute, the Project Management Institute in India. They asked me to speak on AI ethics, and I thought, why? Why are they so interested in AI ethics? And then when I thought about it, I realized it's because when you go back to the ethical questions and the diversity, who are the people that tend to be either scrum masters or project managers who have got no clue about the data science necessarily or the data engineering, but actually help driving the product to fruition? A lot of the time it's project or product managers. And they can ask questions nobody else sitting in that scrum can ask. So it was actually, it's everybody, right?
Yeah, completely agree. Are there any other questions on that point, or observations about how financial institutions are preparing for a world in which AI is regulated? Yeah, Luke.
Sorry, and if other people should really try and take this microphone off me. So Luke Verlaine from Lloyds Banking Group Data Ethics. Sarah, you mentioned that you know, what the New York are doing around requiring companies to publish, both their algorithm outlines, their bias testing, and making that, open for interrogation, and advising applicants what's actually happening to them, because many of them still don't know that, they are being judged by an algorithm, not a person. What do you think is going to happen to financial services who deeply embed AI in their processes for pricing, for recommendations, for marketing, who are not currently telling customers with any of the same degree when these processes are being used on them? Do you think that's going to come?
Yeah, and I think, first of all, I'm not sure financial institutions are as using AI as much as people think they are, right? As I said, we've got one algo running globally that's actually more deep learning neural net. Most of the time it's this machine learning that's running in the background. I think what we'll need to do as we've moved forward, and we've already started to think about this at Credit Suisse, and other financial institutions have done it, is you publish an ethics statement broadly, and you publish how you're using your client's data, and for what purposes. Now it's kind of funny because that does exist, but it usually exists buried in terms and conditions, right? When people sign up for services, that wording is in there. I think just being more sort of public about that, in terms of having that very easy to understand, not buried in a bunch of legalese, on a website, so that people can say, okay, so you're using my data for X. If you think about the way people interact every single day with machine learning and AI today, you usually get these pop-ups, for example, which will annoy the hell out of you when you're trying to look at a website or anything else, and you're signing away the keys to your data kingdom or not. But it's quite intrusive. It's not very easy to understand, and quite often you have to go through 5 layers to find out what they're actually going to take, and then read about 30 pages of documentation. So I think that whole, and that's not just financial services, but I think that whole process of interacting with digital products as well as machine learning and AI just needs to become a lot easier to understand for people. And I think opt-out It's something that people need to be aware of, where it makes sense, right? So, for example, if I'm in a recruiting process and I want to be able to say, no, I don't want to be judged, I don't want to be part of this like broad judgment, initial judgment by an algo to say whether I should be interviewed or I'm one of the top candidates or whatever else. I want a person to look at that. That should be a human right. It becomes quite an overhead. I think someone mentioned earlier that financial services are actually in a pretty good position because we already have things like model risk management. We have cyber. We have chief data officers, data protection officers. We have these structures. A lot of other companies, especially the ones spinning apps and stuff out, they don't have that. They need to recruit, right? So the overhead of doing that can be quite intense. But I think there's some base level stuff that you can introduce, just basic human rights stuff that needs to be out there.
Thanks, Sarah. I think that opt-out point is fascinating and makes me think of Article 22 GDPR and what the UK is going to do about that in the future. We are out of time, I'm afraid, and sorry about the tech issues that we encountered, but I'd just like to say thank you to our panelists, Sarah, Cameron, and Shamik. Thank you.
Thank you, everybody.
Thank you so much. Can I invite Dr. Karen Coxon up? Is Karen here? There she is. Okay. So we're just going to have a fireside chat now between myself and Karen. Karen's from the FCA, and I'll allow her to introduce herself. And we've spoken a lot about the Digital Regulators Co-operation Forum, and this discussion will be very much around that. Should we do it here? Or? Yeah, I guess you'll. Can everyone hear us? Awesome. Karen, could you actually introduce yourself as well and just talk a little bit about your current role?
Very happy to. Thank you very much for the invitation to be here. It's, as various colleagues said earlier, it's wonderful to see so many of us here focused ultimately, I think, definitions aside, focused ultimately on positive innovation. My role at the FCA, I am Deputy Chief Economist. I also head up a function that integrates economics, behavioural science and data science. This doesn't get you all of the answers you need on some of this work, but it is a very important part of an overall picture on how you really understand how this technology is impacting the markets that we regulate and how you also make sure that you're well equipped to utilise all of the same technologies, sometimes even bigger data sets that look across all of the markets we regulate, and do all of that in the name of effectiveness and efficiency from a regulatory point of view in service of those outcomes we're looking for. So that's the broad lay of the land from this point of view.
Awesome. So something which I think has come up quite a few times is we've had AI for some time in the financial services, but it does seem like there's been a lot more attention now specifically on AI. So is there something about this period? Is there the rapid adoption of algorithms? Are they shifting your interests, or what is motivating your interest in AI specifically now?
Yeah. Oh, thanks for the question. It's a great question. I think Jessica, I think many of you were here for Jessica's very insightful talk earlier on, and I think it covered the ground here really very well. So this isn't all new to use of data, data discovery, decision support, all of these things that have been discussed. It isn't all new to financial services. One of my teams actually focuses on wholesale financial markets, so traded securities markets. I myself sit on the Financial Stability Board, on the group on vulnerabilities there. We've had algorithms and data in those markets for a long time now, and high frequency trading and various considerations. They're both very good ones, and some concerns and risks as well at times. Over on the consumer side, there has been interesting development, the rise of digitization, advances in the way some of the data is being used and harnessed. We're not quite there yet with, depending on your view of it, maybe a good thing or a bad thing. We're not quite there yet with, say, generalized artificial intelligence in this market or any other market. But we are finding that in our day-to-day lives, in many markets, many aspects of our lives, but also in financial services, these tools and technologies and the data behind it, this digital trail that we're all creating, is being used to inform the experiences that we're having in financial services and other realms of life. It's being used to support us or not support us well in the decision making that isn't everything in life, but often does tie very closely to welfare and ultimate outcomes that really matter for individuals. When you think about financial services and some of the decisions you need to take there, the complexity, the stakes being quite high at times, we're all struggling, I speak for myself, with, time, financial literacy on certain fronts, and so on and so forth. We've got our cognitive biases and limitations, which is why the behavioural science lens is always so important on the consumer side. And is that fundamentally changing, breaking, transforming the market? I think it's a little bit more along the lines Jessica described, actually, which is that there's some hype and then there's some real development as well. But I think it is important to understand that. And then, as I said earlier, it's very, very important at the same time that we as regulators can fully deploy all of the same technologies, tools, techniques, the science, if you like, that you need in a very integrated, interdisciplinary way to make sure that we've got that razor focus and ability to get there in terms of good outcomes for consumers. We're very outcomes focused as a regulator. We're inherently broadly technology neutral. Obviously, some important open questions that we're posing in the discussion paper that Jessica and others have mentioned, but we are very focused on outcomes, and we're looking for that accountability from humans inside the firms that serve customers in the markets we regulate for those outcomes as well. What are some of those outcomes? Fair value. When you're a consumer in financial services here in the UK and you're in those financial markets, we want you to receive a fair price, good quality. We want you to have good, confident access to these markets, and those are the kinds of outcomes that we're looking for, a suitable and a fair treatment.
Karen, can I just a little side question on that? So you mentioned it's just such a huge remit, isn't it? To talk about, say, trading systems, and on the other side to talk about, vulnerability analysis and access. Given that kind of, is the current focus really not so much maybe on the systemic risks, but actually more on the kind of retail customer side? Is that fair to say?
No, I wouldn't describe it that way. I think don't push me on it, but these are always in focus. They always have been. We have consumer protection. Part of our objective, we're focused on promoting effective competition in the interest of consumers and good, healthy, functioning markets. And last but not least, we are very focused on promoting integrity in the markets that we regulate, the wholesale and the retail, and enhancing the resilience of the system right through to all of the considerations that sometimes can arise around systemic risk.
Awesome. So I'm super interested in asking some more questions about the Corporation Forum.
Yeah.
So could you tell us a little bit more about it in terms of how it came about, given that there's been this kind of signal that the different sector regulators are going to be mandated, and then you actually see this cross-sector body. Could you tell us a little bit more about it and why the regulators are involved in this kind of cooperative way?
Well, thanks for that question too. And I think on this, Stefan, you shared some perspective on the DRCF and what we're doing there, including the work program. So let me just say, we just add a little to that, but also happy to talk more about it over a coffee or over lunch. But we are coming there together as regulators, I think recognizing mandates and regimes that can be intersecting in important ways for firms. And I think Stefan, you and others have talked about the journeys these days in deploying this technology, the activities of firms inside markets. It can be cross-cutting, it can be cross-sectoral at times, it can be cross-cutting in other ways when you think about, say, data protection and competition and those policy objectives. So this is a cross-cutting set of considerations that I think are well served by regulators getting closer. We have very strong bilateral relationships. We focus on collaboration and cooperation on a number of fronts. I think what we get from the Digital Regulation Co-operation Forum or the DRCF is an opportunity to enhance that and take it in, if we like, a more focused way for some of the questions that are open around algorithmic processing systems, for instance, which is one of the important work streams there, but not the only one. And we have been, enjoying the fruits, the early fruits of that collaboration We are able to think about the intersections in our mandates, think about, are there potential tensions there that we can help to resolve or address? Are there points of clarification that could be helpful for the firms in service of those outcomes that we're interested in? We can be collaborating on some of the most complex digital issues and joining forces and pooling resources and skill sets and technologies ourselves. And actually that capability building piece, Stefan talked about the capabilities at the CMA, Jessica has touched on the capabilities at the FCA. I'll speak again for the FCA. It's very important for us. It's something now, it's not new to the FCA. We've been on that journey for a little while, but we have been dialing that up and making that more strategic in various ways. It's the utilization of these technologies is a big part of our own data strategy, which Jessica leads. In my own area, the integration of these, complementary, vital skill sets, it all comes together to form a picture of a regulator there in a sector utilizing all this stuff. The question is, what are the cross-sectoral benefits when you then come together and you think about how you might audit an algorithm or how you might understand the auditing of an algorithm, and whether that is in good shape or not in good shape, and is it really in service of the outcomes you care about? To give just one example, explainability, lots of open questions.
Karen, can I just another follow-up question in terms of the activity of the Corporation Forum? So if I read it correctly, one of them is a capacity building exercise, knowledge sharing exercise, and the areas that we were talking about, the shared experiences, is it because you envision, or is there discussions that some of the reporting, if you will, might be replicated across different regulators, or that some of it, is there going to be duplication of work? Is there any consideration of that?
It's an interesting question. I think it's too early to get into the details of, the future regime, and I wouldn't want to speak, in very specific terms on behalf of some of the other members. And I think with the FCA, we've put out our discussion paper, which is our opportunity to bring together, to set out some of our own thinking and to bring in more thinking and perspective, and to use that to inform our own regulatory approach. Are we looking for duplication? Absolutely not. So I think, that we're not looking for duplication. There may be some commonality in approach, and that could be promoting a more coherent, harmonious overall experience for those in the markets. I think that might be one way to think about it. But sort of anything that would be wasteful or inefficient or confusing or conflicting, I think that it's exactly those kinds of opportunities that we can, have a watching brief over as we grow closer as regulators through things like the DLCF.
Awesome. I know obviously the FCA is working closely with the Bank of England.
Yes.
How does the work that you're doing with the Bank of England and the work you're doing with the Corporation Forum, how do they fit together? Do they fit together in any way?
So they're highly complementary, and all of that is complementary with our wider programme of work at the FCA on AI and algorithmic systems a bit more generally, and also more generally on digital markets, where we have laid out a commitment in our strategy and our business plan to shape digital markets to achieve good outcomes. And that, that's a driving focus for us in this arena. And within all of that, I think the collaboration with other regulators is really important. As I said, there are some commonalities, sometimes there are some differences. I think we can learn and grow together, and we can figure out together what really is cross-cutting and generalizes well, for instance, across sectors or across mandates, and where you might need a bit more, where the context sensitivity is binding, and you might need a more tailored approach to a particular sector, and that would make sense for a particular sector, and then drilling down within that a subsector, a use case, and so on. So you're really taking that top-down system level view, but you're trying to get the benefits of the specialization and the tailoring with the efficiencies and the coherence where things genuinely are infrastructural at the cross-sectoral level. I think with our work with the bank, Jessica, has already outlined that, I think, very insightfully, and others have commented on that work, and that's really great to hear, because it sounds like we're already getting good engagement on some of the questions that we've posed there. What we're doing there is we are, in that discussion paper, we are drawing on some of the work that we've been doing in the DRCF, in the AI Public-Private Forum, in other areas, in some of our own deeper dives on empirical issues. Some of the questions my teams work on are questions like, what difference would a switch from a traditional econometric credit scoring technology to something more sophisticated and slightly more black box like, what difference would that make? What difference would it make to accuracy, to fairness? Ultimately, what can we say about that, and what assumptions and judgment calls you have to make along the way as humans as well? But ultimately, I think from the economics perspective, because we are an economic regulator, what difference will it really make to decisions that then in turn drive outcomes related to our own objectives? How does it feed through into a pricing decision? If you're talking about credit scoring, at some point, downstream of that, you've got a lending decision. And then if you amass that and think about the system view, you've got access more broadly at a system level, and you've got pricing and experiences. And I think that's the kind of, that's the sweet spot for us, going deeper in the areas where it most applies to our own work. I mentioned a couple of other examples that, I can get probably too excited about, but I get interested in, and I think, many of my colleagues do as well. If you think about decision support, it was mentioned earlier. So, not all of this technology is, none of it is generalized artificial intelligence. It's not in of itself, necessarily always so threatening or so transformative, but it potentially is powerful. There's a powerful set of prediction technologies, for instance, that we can work with now when you combine it with this very rich, granular consumer data. What does it do for you? Well, it does an enormous amount for us in our day-to-day lives, from the sort of how am I going to end that email? When's the best time to buy an air ticket? Right through to sort of, actually, can you help protect me from fraud in my bank account, or get me the right medical diagnosis and then help me understand the efficacy of a likely intervention, right through to some of the bigger life decisions, right? Who to date, which career to pursue. I'm not saying that they could be taken so well yet by any of these technologies, but they can certainly be informed, and many of us in our day-to-day life use that. But there are risks, right? So when you're more predictable, or in a way, on a one-to-one level, humans can actually predict each other often quite well. The challenge is it's not scalable. When you're predicting at a lower cost, it's like cheaper prediction in a way, and it's highly scalable potentially. There are risks, right? So you could then see exploitation, and you could see that at scale if you're not careful. It might be deliberate, it might be sort of a little bit inadvertent. It might be about that footprint and those behavioral biases coming through in the audit trail you're leaving behind. You could see some, I think, Jessica and others have touched on bias and how that actually can be misunderstood, because often the bias is just in the training data set itself, or the training data is too partial, or it's not representative, or it's actually reflecting socially undesirable bias from the past that perhaps in the past wasn't even so socially undesirable, or now is interfering with our laws around protected characteristics in the Equality Act. That, in a way, think about that. It's a bit like looking in the rear view mirror when you're driving, but you want to go in a different direction now societally, right? That's one way to think about it. And so these are some of the risks. And I don't think you solve all of that uniquely from the lens of financial services or any other lens, but of course it all comes together and plays a part. And I think we're looking for that overall societal view, and as well as protecting individuals, and particularly the more vulnerable.
Karen, I'm really keen to ask one more. I know there's people plenty of questions, I'm sure, but just want to ask a question about, you started by talking about innovation. Mm-hmm. Just interested in the role of technology, tools, innovation from the regulators themselves. So, in things like validation, monitoring. We know a very successful example of this is fraud detection, mm-hmm. use of technology in this, or money laundering, etc., using anomaly detectors. So could you talk a little bit about that in terms of if you're seeing any developments in that phase, some of the more, the innovation actually from the regulator's side?
So we're using all of those tools. It's, it's very embedded in our regulatory approach. Obviously quite a bit of that, it's in the day-to-day operations, where our data strategy is a big enabler. In some of the work that my teams are doing, for instance, one of the commitments we touched on in our overarching commitment around digital markets that I described, and making sure those are really working for consumers, is to take a really, to make sure that digital decision journeys really work for consumers. So think about that decision environment you're in now. Whenever you open up an app or you go on a web page, it can be brilliant, it can be convenient and super easy and one click and all the rest of it. It could be kind of sludgy, to coin a term that behavioral economists use these days, or it could have the wrong nudges, it could have the right nudges embedded in there. It could have features, tweaks that interact with our own cognitive biases and limitations and help us get to a really good decision and tip us there, or actually prevent us, or tip us away from a good decision. Think about cancelling a subscription and then figuring out how to do that, and the whole process is very onerous. But then think also about maybe you go onto a website and it's too easy to take a decision that actually is not in your best interest, and a bit of positive friction would slow you down and help you in a way. So the devil is in the detail. It's very context specific, but behavioral science plays an important role. Integrating that with data science plays an important role, because you want to be able to do things efficiently at scale, like web scraping, and then having a look at, perhaps in a semi-automated way, at cases of harmful sludge. But then how would you triage so that if there's a judgment call required, a human who understands something about behavioral science and your regulatory outcomes and so on can take a closer look at that one? This is not a unique opportunity and challenge to a regulator. This is actually, I used to work in consulting, and I used to also work in data science consulting for a while. And in that world, the holy grail really is about how you combine that human judgment with the power of the automation for the more straightforward cases, the predictive analytics and so on at scale, and how you combine those effectively. At least I think we understand it conceptually. In practice, it can be very difficult. I think it needs a lot of work, but conceptually, that human judgment really is about how you frame the decision problem for yourself, whether you're a regulator or a firm looking to make a profit, or a third sector charity. It's about how you frame the decision problem, and then how you decide where to build in the human judgment and where to bring in all of that enormous power of the machine, if you like, to get to good outcomes, and just not losing sight of those outcomes.
No, absolutely. You can imagine trying to detect fraud in a manual way, or trying to monitor some of these technologies. So interested in the architecture of these things.
And we're very focused on exactly those kinds of opportunities. And as I say, it's a part of our it's part of our approach already. The markets we regulate, it's not the entire economy, but these are pretty vast markets on both, when you think then as well about the retail and the wholesale market side. So to get some of the insights that we're looking for, and to be able to be across both, the support for positive innovation and detecting and addressing effectively the harms. This is not something that scales well when the technology is entirely human. So I think, you need to think innovatively there, and that's very much the journey that we've started and been progressing.
Thanks. I'll open it up maybe to just one or two brief questions. If anyone wants to ask any, if anyone wants to kick off, just please put your hand up. Karen, what's happened? We've
happy to talk about anything. Actually.
You've mentioned.
Can you just introduce yourself?
Yeah, sorry, Dean Cooper. I'm from Unum. A few of the different regulatory representatives have mentioned their increasing use of AI and bolstering their capabilities, but operationally, how are you kind of embedding this into the more intelligence gathering and the supervisory aspects of your activities as a regulator?
Yeah, I think, look, there is opportunity to do this more. I don't lead the operational side of the FCA's work, but I know that my colleagues there, and I think Jessica, in her role leading our data strategy, plays a critical part in this. I know that my colleagues are looking industrially at these opportunities and already taking and exploiting many of these opportunities. I lead our scientific research function, and I lead some of our important work on digital markets and some of the harms and opportunities I described. And there in our work, we also we deal with very large-scale data sets. We sometimes want to look at things at scale to get the kind of insights that would provide good evidence to inform the regulatory approach. And so we are utilizing these approaches ourselves, scraping data at scale, detecting things on a more automated basis. And then, we talked about these powerful prediction technologies. You have to be careful how you use them. You can use them very naively, actually, sometimes in my area, because we're interested in how the markets are functioning from an economic point of view and competition and things like that. It's also very important to be able to bring in, for instance, the econometrics there, which we've had for a long time, and it's been part of the toolkit.
Awesome. I think we're actually out of time. Thank you so much, Karen. Really appreciate that. Thank you so much. Awesome. So, just before our coffee break, we're going to have a final keynote by inviting Nilesh back from Simmons & Simmons, who's been talking about the EU regulatory approach to AI and whether or not it has a significant impact on financial services. Thank you, Nilesh.
Thanks, Emery. Sorry, it's me again. I appreciate I stand between you and a coffee break, so I will be quick on this. We spoke earlier about the UK's pro-innovative approach to AI regulation. I want to focus for a few minutes on what's happening in the EU. So I'm going to cover briefly what we're seeing at the EU level, including where we're up to on the EU AI Act, which I'm sure you're all quite familiar with. Briefly, why the EU has gone down this route, and importantly, how EU-level developments are going to impact financial institutions. So if we move to the next slide, please. And again. And we'll start with what's happening at an EU level. And first, the EU AI Act, which I'm sure you're all quite familiar with. We had the first draft in April 2021. It's been slowly making its way through the EU legislative process. The latest update is that the Czech presidency in the EU is pushing for a final text later this month. That will be the text that goes to the trilogue negotiations next year with the Commission, but I think later this month we're going to see something pretty advanced. Now, sadly, that final text is not going to resolve all of the issues. There's going to be a significant omission in the text which relates to general purpose AI systems, foundational models, open source AI. I think the EU is going to kick that off to next year, which is a bit of a shame, but it's a very tricky issue. Now, aside from that, just a few weeks ago, we had two significant proposals also from the EU. The first is a new product liability directive. That's an entirely new regime updating the existing product liability directive, which will incorporate AI. The second is an entirely new AI liability directive. And so what we're going to have in the next 2 to 3 years is a tripartite model for EU AI regulation. We're going to have the EU AI Act, which lays down stringent obligations for the development and use of AI with heavy sanctions. And that's really intended to prevent harm in the first place. But then we're going to have the AILD, the Liability Directive, and the Product Liability Directive sitting side by side, and their focus is providing redress for harm caused by AI. Now, the Product Liability Directive is a strict liability regime. The AI Liability Directive is a fault-based regime. Now, moving to the next slide. Why is the EU doing this? Now, I heard someone say a great line the other day, which is that robots can't yet be that smart because they haven't worked out how to click the "I'm not a robot" box on websites. But the EU is really thinking ahead here. They know that AI can bring benefits, but the whole point of regulation here is to foster and incentivize the safe development and use of AI. And in relation to the EU AI Act, there's a reference in the explanatory memorandum to an ecosystem of trust. And this is a key concept, one that Leanne mentioned this morning. We won't, as a society, be able to harness AI and the benefits it brings without trust. And I often give the example of aeroplanes. Now, I fly, as I'm sure you do, but I have no idea how aeroplanes stay in the sky. But I still trust them. And why is that? Well, I think firstly is that we've got a long track record of safety in the aviation industry. The second reason, I think, is regulation. I know that when I get on a plane, the pilots have been trained according to stringent regulation, and the plane itself probably meets quite stringent regulation. Well, with AI, we have no track record yet, really. So why should we trust AI? And I think the EU's perspective is that regulation plays a crucial part in us trusting AI and therefore adopting it and harnessing the benefits it can bring. Now, the essence of the Product Liability Directive and the AI Liability Directive is also about trust. It's about reassurance that if AI causes harm, then you as a consumer or a legal corporation entity are going to be able to bring redress or bring an action to seek compensation if you have suffered harm. And that's particularly important in light of the complexity, autonomy, and opacity of AI, as is recognised in the explanatory memorandum to those two pieces of legislation too. So moving on to the next slide, really important. How is this all going to impact financial institutions? Well, I'll start with the EU AI Act. As you know, this is adopting a risk-based approach. There are some prohibited uses of AI, and on the other end of the spectrum, all uses of AI which interact with consumers will have to make clear that they are AI systems. I think chatbots are quite a good example of that particular category. But in the middle is what we call high-risk AI systems under the EU AI Act. And this is really where the focus of this legislation is. And it's where the most burdensome obligations lie in the EU AI Act. Annex 3 is quite important. That sets out the list of high-risk AI systems. Now, there's one in there that's definitely relevant for financial institutions. That's AI systems that are intended to evaluate creditworthiness. But there's others in there that might be less obviously related to the financial services sector, but which could still be relevant to financial institutions. There are AI systems that are used to monitor employees in the workplace. So financial institutions are monitoring the activity of traders, for example. That will be high risk. There's AI used in recruitment, which we discussed earlier, and possibly, subject to final amendments and agreement, AI used in insurance underwriting may well be a high-risk system. That wasn't in the original draft, but it has been proposed as an addition to Annex 3. And so there are hidden risks here for financial institutions. I was speaking to someone in a bank not so long ago, and they insisted that this is probably going to have very little impact on their organisation. And I happened to read that in some of their offices, the cameras use facial recognition or are capable of using facial recognition. And I mentioned that, and they agreed actually that that was a high risk and it's something that they had just inadvertently overlooked. So there are hidden risks there. Now, there's two key points I just want to make about the EU AI Act. The first is that the definition of AI is very wide. Now, I think that is going to be narrowed in the final text, but it's still going to be pretty wide, I think, for those of us in the AI community and what we understand to be AI. The second point is that it's providers of high-risk AI systems which are subject to the really burdensome obligations. If you're merely a user of a high-risk AI system, you're subject to much fewer obligations. But that distinction is actually quite tricky within the Act and quite tricky to apply in practice. So don't think you're home and dry if you consider yourself to be a user. It's probably not that simple. Now, moving to the next slide and just briefly covering the AI Liability Directive and the Product Liability Directive, I'll just flag some key points. There's some detail on the slides here, which I hope you'll have access to later on. Now, the AI Liability Directive, I think, will definitely impact financial institutions. And that's because it covers any loss suffered through AI. The Product Liability Directive is more about physical harm, but the AI Liability Directive is about any harm. And so I've put a couple of scenarios there on the slide. If a company suffers financial loss because a financial institution has not properly conducted a credit check, which was powered by AI software, then that's exposure under the Liability Directive. And equally, there could be damages for discrimination caused by the use of AI in the recruitment process. So just two examples there. I think there are probably quite a number of other examples. Now, the Product Liability Directive, as I say, it's probably less relevant, but what we do have in the proposal is an addition to physical harm, which is loss and corruption of data as a specific harm that's going to be covered by the new Product Liability Directive. And so I think that, again, could be something that creates exposure for financial institutions. And finally, I'll just wrap up on the next slide with a few final thoughts. The first is that even though we're 2 to 3 years away from this EU regulation, I think action needs to be taken now. As you know, AI systems take a long time to develop. Institutions may be developing or procuring them now, but crucially, the steps you take now are important to ensure compliance in the future. For example, you've got to start thinking about how those AI systems have been trained, logging that information, understanding the risks around that. And you need to do that now because these systems are going to be subject to the regulation in a few years' time. The second point is that, as we've seen, the impact on financial institutions from these sorts of regulations may not be obvious. There are clues in some of them that there is going to be an impact, but there are also hidden risks. And so I don't think financial institutions should consider themselves to be immune from these regulations. They are going to have an impact, and it's important that you look at the detail because there could be some what I would call hidden risks within the text. The third point is really key, and it's one we've been discussing this morning: governance and compliance. You've got to treat these regulations like other regulations that apply to financial institutions. You've got to think about information gathering, risk assessment, and compliance structures and processes. And finally, and one issue I've seen within organizations is working out where ownership of this lies. We talked earlier about model risk management teams having ownership thus far of issues relating to model risk. But now that this is going to be significant regulation with heavy sanctions, I really think this has got to be a cross-functional effort within financial institutions. It's not always easy to work out where ownership of this sits. I've seen banks put it in their data privacy team. I've seen other banks create standalone silos to deal with AI regulation. I don't think there's any particular silver bullet to dealing with this, but the important thing is you've got to deal with this. And I really firmly believe that that's got to start happening now. So that's all I wanted to cover on the EU's position on regulation. I don't know if we've got 1 or 2 minutes for questions, if there are any.
We've got a question right here.
Thank you. That was really interesting. Sorry, Tom Niven from Accenture. As well as the ownership question around how to address the UAI Act, you mentioned that it's not so simple in terms of providers and users of the regulation. And I think there are a few pitfalls in there. What sort of advice would you give organizations who are looking at this now in terms of the way that distinction between provider and a user is being addressed and where you may fall within that?
I think one of the things that we're seeing and advising on is undertaking a risk assessment sooner rather than later. So looking at your AI use cases within your organization and effectively doing a compliance exercise against the provisions of the EU AI Act, which I appreciate are not yet final. So there may be some hesitation about doing it now and resource concerns about that. But I think it's important now to get a sense of where in your organization you have high-risk AI uses, for example. Hopefully there are no prohibited AI uses. If there are, obviously that's a bigger concern. But getting a sense now of where the high-risk AI use cases are. And part of that analysis is working out whether you're a provider or a user in relation to those. And I think one thing that's a risk, particularly for financial institutions, is that there's a lot of development happening in-house. It's not necessarily a case of procuring ready-made off-the-shelf AI systems from third parties where you may naturally be the user and the vendor is the provider. If there is internal development going on of AI systems, you could well be the provider. So it's important to do that. And looking forward, implementing governance to perhaps mitigate the risks of doing this. So I'm speaking to banks who are considering procuring AI systems rather than developing them in-house, specifically so that they're not the provider under the EU AI Act.
Any other questions? Oh, we've got a few questions at the back. Should we take both questions back to back and then maybe you can address them in one go?
Sure, yeah.
Yeah, so there's 2 at the back and then we'll come to
Hi, I just wanted to kind of clarify on the provider and user, right? So even if you're going through third-party risk management and you're bringing in a vendor product or a system that's using machine learning and AI, is there not, as a user or consumer of that system, is there still not a level of due diligence that you have to evidence to show that you have asked the right questions and that provider of the system has given you the adequate answers to show that they are compliant? Or are you indicating that actually the full onus is on them and you can just get on and consume it?
So can you also take the question from the gentleman in front of?
Frank de Jonge from EY. I had a question around the clarification around the liability. Is there need to prove causal relationship in that the algorithm caused the harm? And I would like to sort of cast some doubt on how easy it's going to be to prove in a legal case that an algorithm is the source of harm, in the sense that there is a paper out there where they given a data set on red cards in football to 30 teams, 30 academic teams, and they asked, well, can you evidence from the data whether the referees have racial bias, yes or no? And the interesting outcome was that 10 teams said absolutely no, 20 teams said yes. They all used different approaches to prove the point, and ultimately, if you aggregated everything, yes, there was a bias, but the proof is going to be very hard. So I was wondering whether you had any thoughts on that.
Thank you.
I'll take them in turn. So firstly, the question about whether there are still obligations on users under the EU AI Act. There are. It's just that those obligations are much less onerous than the obligations for providers. But users are still expected to be able to demonstrate that they've got things like technical documentation in place, that they've procured that from the provider. And what we're seeing in the industry is a trend. I think vendors have had it pretty good so far. They haven't had to disclose much information to customers about the models that they've created. But I think customers are now starting with, regulation like this in mind, but also responsible and ethical AI principles around transparency and explainability. They're starting to push vendors more on information about how the models were trained and steps that have been taken to mitigate bias, for example. So we're starting to see that shift a bit. The second question on causation. That's actually one of the key reasons why we've got these directives coming out in the European Union. Of course, these are about civil liability, which can be, anyone can bring a civil action for harm caused by an AI system. But one of the reasons for these directives in particular is to make it easier to bring those actions where it's an AI system that has caused harm. And I won't go into the details, but both the Product Liability Directive revision and the AI Liability Directive contain rebuttable presumptions of causation. And again, it's quite complex, and I'm happy to talk about it afterwards, but that's the key point, and that's why it's important to have a look at those, particularly for financial institutions who are using AI, which could impact consumers. You've got to look at the rebuttable presumptions and make sure you can try and steer clear of those if possible.
I think we're really over time, and I think Minesh, you'll be around for.
I am here, so I'll stay here for a couple of minutes, and we'll also be outside for the coffee break and lunch later on.
On the agenda, it's thank you so much, Minesh.
Thank you.
I think on our agenda it says we reconvene at probably about 10 minutes ago, but let's get back here for noon. We'll start the next panel at noon. Thank you. Hey everyone. Awesome. So on our return, we're going to actually have a panel session now on a practitioner view of AI risk management and insights from international AI regulatory framework. And I'm going to just introduce Mohammed Garbawi, who's the co-head of FinTech of the FinTech Hub at the Bank of England, and he'll be chairing this session and introducing the other speakers. Thank you.
Thank you, Emra. Yes, Mohammed Garbawi. I'm from the Bank of England's FinTech Hub, where AI is one of the sort of the main areas we look at, alongside crypto assets and decentralized finance and lots of other lovely things, including quantum computing, which we're looking at quite a lot today. But so the purpose of this session will be to sort of talk about the practitioner's view of how AI can help drive financial services. We'll talk a bit about the role of regulation and sort of what we might learn from the international regulatory frameworks and sort of the bit that we heard about the EU Act as well. So I'm not going to introduce the panel. I'm going to let them introduce themselves and maybe say a bit about their role and their interest, I guess, in AI. And maybe start with Frank.
Yeah, so good morning. So my name is Frank de Jong, and I'm a partner at EY, and I've been for 20 years working in audit and validation of models and model governance, and since 3-4 years bringing that also in the world of in the world of AI, and that you will probably see filtering through in some of the things I'm going to say later.
Thank you. Jennifer?
Hello, I'm Jennifer Calver. I'm the Global Tech Sector Knowledge Lawyer at Linklaters, which is an international law firm, and I have a special focus on fintech. I had a practicing career as a finance lawyer, but now I'm really focused on the knowledge, and I'm tracking legal developments from the adoption of frontier technology generally across the sector, so that's crypto, DeFi, also NFTs and the metaverse. But I do have this special interest in artificial intelligence in financial services and have led on thought leadership on that topic. So we put out a report a year ago, really trying to map out all of the legal considerations you need to think about when rolling out AI models in financial services, and that was a global report working with our team. And it was through that report that we got to know Mohammed and his team, and it's been great partnering with them, really getting to know more of what they've been doing, getting a bit close to the work of the Public-Private Forum. And yeah, it's been really great to get away from perhaps just the sort of advisory side of our work and more towards the theoretical and the questions of how should regulation work in this space.
Thank you. Walter?
Great, and I'm Walter McCann, Principal for Privacy and Data Ethics in the Payments and Innovation team at UK Finance, which is a trade association for financial services firms. We probably have quite a lot of members here. So I do work with members on issues relating to sort of privacy, data ethics, and AI regulation, worrying about explainability, fairness, those kinds of questions. I guess I'll be sort of giving some personal views today rather than necessarily industry views. Just note that, Mohammed. So as we sort of work on our response to the discussion paper, I could completely change all my perspectives once I've talked to members more about some of these issues. But it will be a fun 3 months as we continue to work on that.
Thank you. Yes, I mean, we've heard a lot this morning about the AIPPF and sort of discussion paper, and I'm sure we'll touch on a lot of the sort of topics that are in there. But if we can start with you, sort of Frank, on the first bit on how AI can drive financial services, and I guess it's sort of a question about really what the use cases are and the key benefits that prominent use cases that are being used in financial services. Also, kind of how that's changed, what the trend is, what are the sort of the emerging themes around that as well, if we can touch on that.
Yeah, so thank you. So I probably first statement I would make is that it's something that requires a lot of effort, and building up a competence in AI or machine learning, and again we can come later when a bit more on the nuance between those two things, but it's something that really takes a lot of time to get right, and it's one thing to do a proof of concept, it's another thing to have a very robust factory that can churn out the use cases. I think it's also useful, and I think Sarah used that distinction, AI and machine learning, the distinction that for me is very similar Where I would make a distinction is things like exploiting the cognitive capabilities of AI, so where AI mimics the behavior of human beings, speech, image recognition, image creation, text creation, that type of things, versus the predictive analytics and the big data. Those are totally two different use cases. I mean, the first one with AI being used, and that's where the boom obviously came from the last five years, with image recognition, text processing, and so on, and all sort of things around intelligent automation, which we would call robotics process automation, and so on. And that clearly requires robust platforms or production chains that need to be fine-tuned over a long period. So I think I'm Belgian by nature. I'm a bit more sensitive about building an infrastructure that handles 3 languages in the same way. But building a language processing capability is something that basically people on the phone have a phone conversation in the call center. It gets transcribed automatically. Then that transcription is used for sentiment analysis or maybe even monitoring the quality of the operators in the call center. And that type of stuff. So building such a factory takes quite a lot of time. You can basically, in that case, and we can go later into the risk analysis of that type of things, but the first steps may seem to be pure engineering, namely, I have a conversation, how do I get it correctly into a written text? It is another thing when suddenly that might be used to assess the performance of the operators in the call center, which makes that same infrastructure used for a totally different use case and therefore gets a totally different risk profile, something we will come back to. So that's the cognitive AI capability. I think the real big boom on the machine learning or the predictive capability, we often talk a lot about the algorithms, but to be fair and honest, it's my view, but it's probably a lot more that new alternative data have become available in the last 10 or 15 years. When you have, when Dr. Croxen this morning talked about what in German they called as digitale Schleimspur, the data we leave behind on internet that's being used to monitor us, it's the data that's become available, and yes, you have then the algorithms to interpret it. If I were a bank and need to exploit, or an insurance company, and I want to exploit that type of thing, I think there's 2 things to keep in mind. First of all, you need to have a clear view of what's the business purpose that I'm trying to achieve here. And again, when we are later going to talk about the risk perspective, when I have conversations and I try to really point down like what is the data you use and what is the actual decision that this data is supporting, that's usually some too vaguely defined, actually, often to get to a conclusion on risk assessment. Secondly, those data don't fall out of the blue sky. It's typically, I think, 3 to 5 years to collect proper data, to understand whether those data have any causal meaning for the business questions that you're trying to answer. So again, it's something that dabbling into takes time to do. Now, obviously, with all this social network data, behavioral data, insights into credit risk, health patterns, and that type of thing is obviously a huge gold mine, let's say, of insights, where obviously the privacy concerns and come foremost. So those would be two big areas that I would distinguish. Two things I would look at in terms of enablers or things to start building it, apart from the engineering part, which I do not want to underestimate. We will probably talk about or touch upon the CP522, the Model Risk Management consultation paper, and where, of course, most of the organizations will be looking at that. Well, we have model risk management, can it also serve, and that's one of the consultation questions, can that serve as well to drive the AI risk or risk control environment? And then we very quickly think about these things as a compliance question. Now, I've sometimes spoken to people in banks who basically say, well, the board has the vision that, like Tesla, every 2 weeks whilst we sleep, our models get updated and we want to be fully data-driven. If that's the vision, then CP522 is not a compliance question, it's getting the foundations right for the organization of the future. It's a different perspective of what you're going to do if we really think we're going to be data-driven. And then the second point, I think, where I would work on to make financial services really make a change in that, is that there's an urgent need, and well, it's an urgent need, but time will solve that problem, but it will take time, to create a shared language amongst a compliance officer, a business product owner, and a data scientist, who all together need to define that business purpose and do the risk analysis. And they have a totally different background, experience curve, and vocabulary. And coming to that shared understanding is something, I think, where we as a community need to work on very hard to indeed reap those benefits. There's a couple of thoughts to start with.
Thank you, Frank. I think that last point is really important, that the kind of the joined up approach to AI that you need, rather than kind of working in silos. Walter, Jennifer, please do come in on this.
I guess as we're thinking about future use cases, and Frank, you touched on this a little bit. I think one that's sort of interesting to me is perhaps partly market-driven and perhaps regulatory-driven, is around the potential for greater inclusion, and of course a lot of focus on questions of social justice, etc. now, and the ability to perhaps to do that better using whether it's AI or machine learning or AI adjacent technologies, depending on definitions, which will be interesting to see to what extent those sort of get picked up in the future. Maybe with Consumer Duty Mark II sometime down the road, the extent to which perhaps firms are expected to analyze their customers to understand them better, to the extent of maybe vulnerabilities or demographic characteristics, to be able to try and make sure that they're doing things more fairly. So whether that becomes an expectation, and obviously there are some pretty important ethical balancing questions there about whether customers would want to be analysed and monitored in that kind of way, and sort of the trade-offs there. So not only a question, I think the headline here is sort of AI regulation, but not just the regulation of AI, but perhaps we're using AI to meet sort of policy goals or regulatory goals, and there may be some trade-offs there that we'll need to work our way through. And then I guess the other one would just be the interaction with open banking and smart data, etc., as those develop. So we talk about AI enabling more personalised services as open banking perhaps develops further. Perhaps smart data under the new data protection reform bill that's going through perhaps opens up data from other sectors, perhaps for enabling financial services to access with customer consent data from other sectors, the extent to which that can be used to power, that data can be used to power sort of more AI analysis for greater personalisation and for customers. So I think that'll be interesting to see how those two sort of policy strands come together over the coming years.
Thank you.
Thanks. And I'm probably most interested in this in the context of how does AI sit in the wider context of innovation in financial services. And obviously it's a key part, but we're seeing so many other things going on. And we couldn't not mention the developments in crypto and DeFi this year, and the big transformational changes that are going on as the finance markets become more digitized. And there's a global regulatory response to that we've been tracking for several years now. You can call it regulating the digital economy, and there's a big challenge now going on for firms who are multinational, really just keeping up with the complexity of that change. So I think it's probably just really important to say today there is regulation across financial services. We've heard from the antitrust guys, we've heard from the data privacy guys, that's going on in all the major economies across the world. So as practitioners, our major job at the moment is helping our clients navigate that increasingly complex framework. And if we think about what we need to be doing differently with AI and how should we regulate that, we've got to put that in the context of this really complicated matrix and trying to make the job easier, particularly for multinational organizations.
No, thank you, Jennifer. I think that's a really interesting point, because I was going to sort of say that with one thing that we've been seeing, and I'm really interested in, is sort of the way that AI systems are being used and how they're becoming embedded in other systems. And I think this kind of broader context goes to that point, that sort of where is the AI, especially if you've got sort of Internet of Things type processes which can have an embedded AI within them, or take that data and shove it onto some other system. It's very connected, and it sort of goes to the question that we were discussing earlier on what is the definition of AI? Is it useful to define it, and so on? And it's one of the questions which we asked in the DP. And I guess it sort of takes us to the next section, which is what is the role of regulation? We mentioned regulation a lot. And I guess if regulation is there to address some risks or lift barriers, then what are these novel risks that AI can present? And how could regulation kind of address some of those? And if I can stay with you, Jennifer, on that one.
Sure. I mean, we were really trying to demystify this. We started looking at ethics and the law and AI about 4 years ago, after the OECD put out their principles, and Microsoft had put out principles, and the Monetary Authority of Singapore had put out principles, and they were all great, but they were all saying slightly different things. But we also felt there was a lot of kind of commonality between the broad ethical themes, and people have talked about it already today, but you can bring it back down to AI presenting very novel challenges and amplifying existing risks, specifically around 1, fairness, 2, transparency, and 3, accountability. We really focused on almost that wheel, because if you're using data which makes unfair decisions, there needs to be transparency around that, and you need to be able to explain your decisions in order to avoid that. And then if that hasn't happened and it's gone wrong, you then need the strong accountability. So I think if you could think very high level, those are the broad risks we're trying to address. You know, the great thing is that our financial regulatory regime in this country, and we heard our Singapore speaker really compliment that regime. We already have principles that fit around that model. So we have focus on having transparency, explainability in decisions, making sure we've got quality data, and the senior managers regime. So that's the baseline, but that's really very much where we start from.
Yeah, I think it's interesting to think about the question of do you need a definition of AI, and in some cases it seems to me that some of the risks that we worry about are more sort of risks around use case or more generic types of risks. So if we talk about fairness, to what extent is it an AI problem, or to what extent is it needing some more exploration or more guidance or deeper understanding of the Equality Act concept of discrimination, and understanding that better. But then there's probably perhaps a sort of a how question. So you might have a more developed understanding of what discrimination, what the discrimination law says. But then there are probably some questions around, well, where could that arise? What are the particular ways in which that could arise for different models or for different use cases, which might need to be sort of expanded on. I don't know whether Frank might have a view on this, but whether that's specifically in relation to AI as a whole, or whether that's in relation to different types of models, or some other breakdown. But it seems that there's sort of perhaps some benefit in fleshing out that how level a little bit in the context of I guess AI regulation or AI regulatory guidance. Frank, sorry, I'm chucking you under a bus.
Yeah, I think, to that point, so first of all, I think if I heard this morning, there seems to be a huge consensus in the room on the big messages from the discussion paper that we got a couple of weeks ago. So from that perspective, I think the one point where we might, let's say, maybe pick a fight or have a bit of a conversation is indeed whether we need to define AI explicitly. And to the point that Walter was bringing up in terms of use cases, and Sarah, I think this morning also hinted at that already, it's the use case that defines the risk profile. And if I may maybe take two examples, there was one that was explicitly mentioned in an EIOPA paper for the AI in insurance industry, ethical considerations for AI in the insurance industry. That was basically the situation where, let's imagine that an insurance company in sort of life insurance, in invalidity insurance, has negotiations to do on a settlement, and that they build a model to assess what amount the client or the victim, or in this case, will take as sufficient. Now I can build such a model with a very simple linear model or logistic regression, or I can do deep learning. And in fact, the ethical considerations, the legal considerations would be exactly the same. So the complexity of the model does not, in my mind, really impact a lot on the ethical consequences. Of course, if I do it with a transparent model, and then you're back to transparency, explainability, it's much easier to have the control environment around it than if I do it with a deep learning type of model. So that's then the point becomes almost, can I scale up my existing control environment well enough to control the risks? The second point, and that's where I think what I tried to hint at earlier as well, because in terms of infrastructure and with that natural language processing example, models are, the use of models changes over time. An example, and I think it was mentioned this morning, and it goes back in what you said as well, Walter, in terms of open banking. Let's imagine that in the world of open banking, we make an app for our client where we try to give insight on how they spend their money. So basically, we built a deep learning model, because I'm told that actually the information in payment transactions is not always good enough to do that, but that's a different story. We built a deep learning model to classify payments. This is for groceries, this is for my childcare, this is holiday, this is whatever. And we make a little app where we give the client insight in his spending pattern. We would all say that's probably relatively low risk. We're giving added value to our customer. Now, of course, once I have that information, I might use that when my deep learning model is stable enough after 2-3 years, start using that to do maybe some marketing profiling. Obviously, the risk profile creeps up a little bit, although the underlying model is exactly the same. And then maybe 2 years down the road, I'm actually using it for fraud prediction or credit approval decisions, because I have now good insights into the profile of that client, which then immediately under the EU AI Act would be a high risk application. So that same application drifts over time to a different risk in function of the way you're using it. And that links for me to when we talk about model inventory and the model risk management language. It means that those different use cases are different entries in the model inventory. And of course the workload blows up, but it also means that if you can anticipate that your model is going to use for different things, get the documentation right from day one, because if you have to do it 3 years later when the high risk has risen, it becomes more difficult. So that for me are a couple of examples why I would basically say it's the use case that drives it. And then of course the consequence of that is that the existing legislation, which usually touches upon use cases, should be going a long way already in terms of telling us what we need to do. The simple example, we heard this morning the example from Minesh about airplanes. The example I usually fall back on, if I'm a doctor and I'm using a diagnostic tool, I'm still a doctor giving an opinion to a patient, and that in that sense my responsibility as a professional has not changed that much.
Thank you. I mean, I think the question that arises here is what's sort of new about AI? What are the novel risks that AI has? So you're talking about the model risk management, and you talked about the consultation that we have on model risk management. And we often, again, this goes back to the joined up approach and versus the siloed approach. So do you think sort of within firms that all the different bits and pieces, there's a data governance piece and there's a model risk management piece and so on, are sufficient to sort of take care of all the risks that exist out there? Or does there need to be a sort of a layer on top, a sort of an AI committee or whatever it is that is centralized rather than sort of have it in a federated level?
I'm happy to.
Yeah, I see you nodding.
Well, I think it was just very clear from the work you did in the AI PPF forum that firms are crying out for more. And whether that's something that's done internally or something that's more led by regulations, they're definitely looking for help in the safe adoption of AI. And we heard some very passionate advocates of ethical AI digital banks, for example, who are using AI, very intensively for that digital-only experience, and they're very passionate that they do address ethical principles, and they feel like they do it well, and they feel that there are bad actors out there perhaps not doing it as well, which is sort of tarnishing the industry. So I think the demand is there. How we do it is part of what we need to debate today. But I think as one of probably hopefully the few lawyers in the room, it's probably kind to point out what a difficult regulatory challenge this is. And you might appreciate this, Mohammed. We've heard today, very eloquently from the FCA what their specific role is. We had a great speech from the CMA. There's obviously the ICOs in the mix. But, all of these regulators have a very ethical focus, and they've got, multi-limbed mandates that they have to look after. So it's protecting financial customers while at the same time looking after the market stability, that integrity within markets, promoting that fair competition. And then when it comes to AI, they've got other things to think about. Can we be, pro-innovation at the same time? And then how do we engender that societal trust? It's a very complex matrix for the regulators to challenge. And at least we are, leading the way with our Digital Regulation Co-operation Forum. I don't see that anywhere else. So whilst there might be some frustration that the regulation isn't coming and perhaps it isn't clear what we need, I think we should be pleased that our regulators are very engaged with industry and with each other, and that makes us a little bit unusual, I'd say.
No, I think that. Thank you. I think this is good to hear that we are obviously all joined up and so on. But I just wonder whether, obviously, we're talking about regulation, and I am from the Bank of England, and I don't want to say there's no need for regulation in the space, but I guess the question is, to what extent is it necessary? Are firms not aware of these issues anyway and kind of tackling them, and that what exists out there is kind of in place anyway? Or do you need an extra push, an extra bit? So, Walter, I don't know.
To a trade association is seldom going to say, please give us lots more regulation.
Yes.
I think going back to what I said earlier, I feel like in terms of outcomes, if we think that customers need to know about why credit decisions came out the way that they did, presumably that applies however the decision was made. So I think they're quite channeling Frank a little bit, comes down a lot to the use case. But I can see that there could be some help and guidance rather than perhaps fresh rules about how to do some of these things effectively. What's good practice? What are some options that could help firms make sure that they think about the questions in a sensible way, or set up structures that could help them to do that. I don't know. I think just to put sort of the extreme opposite example, to have here are the rules for AI lending. You must make sure that you tell the customer X, Y, Z. That would seem a bit strange. Why that would be different if it's AI as opposed to something a simpler decision-making system as opposed to a case manager. Just to that's a little bit of a straw man, but I think that help on how to do that how piece. And when you're using complex technology could have some value.
Thank you. And sort of before moving on, I guess to the last bit is we talked about model risk management and then the ethics piece and so on. And I guess explainability and all that falls within model risk management. Are there other areas that you think should be prioritized from a regulatory point of view?
There seems some enthusiasm for a proportionate approach. So, the EU obviously leading with their sort of high risk, low risk, and I think Sarah's absolutely right. Probably shouldn't be called that, and maybe we need to have more tiers of that. We'll talk about the international bit next, but proportionality seems to be a sensible principle to be adopting, and trying to look at the kinds of models, as Frank exactly described, that are not going to have that high negative societal impact, and then tailoring whatever guidance or sanction even accordingly. I think there's enthusiasm for that.
And if I may add on that point, sure. And echoing a bit what Walter was saying in terms of some guidance on what is a pragmatically and sufficient solution for certain things. I've been working with a couple of data scientist teams that, and usually I find that they are very aware of the risk of what they're doing, trying to educate their business users. But they also have in contrast to the community of modelers that I'm more familiar with, been working with more, let's say, in the regulatory models that have a documentation, ethic and standard. The data scientist community doesn't have that yet. So that whole point around when I come then with my expectations of I want to see 60 pages, how you identified where is the real risk in the model, then they look at me like, what are you talking about? So I think guidance on what does good look like there is important. And one thing that I think and I've picked up as well, we talked a lot about protecting the consumer and the data subject, and to use GDPR terms. I'm involved in one initiative with a couple of companies in France who want to create an ethical data or an ethical AI label, and one of the explicit objectives there is actually protecting the data scientist. Protecting the data scientist that he or she has leveraged in the organization not to be pushed into doing things that they are not comfortable with. So that may be an idea. I found it nice to see that explicitly mentioned as well as an objective of regulation that you could have here.
Thank you. And sorry, just one final question sort of before moving on for Walter. I mean, sort of in terms of the different firms that you sort of speak to and to that proportionality point, can you sort of give us some color on the sort of the range of views that you see from different types of firms, from smaller ones up to the big ones? And
Yeah, I think the thing which what immediately springs to mind is sort of the interest in sort of international compatibility as opposed to perhaps national competitive advantage. So particularly thinking about GDPR reforms, but it is also relevant in this space that if you're a group operating internationally that has operations in different jurisdictions with different rules, the more commonality there is between those, the easier life is for you, and that the UK trying to do something super light touch, which is completely incompatible with perhaps peers might or might not have advantages. It depends on how easily certain things can be segregated. But for smaller firms that are only operating in the UK, they're obviously more focused on what the UK does for itself, and whether or not it's similar to what the US or Singapore or the EU is doing may be less relevant.
Thank you. And nice segue to the next section. So
I did that by accident, actually. I realized halfway through.
Well, we're here. So what might the UK's financial regulators learn from the international AI regulatory framework? And I guess also touching on, I mean, obviously we've got the national AI strategy, we've got the sort of the white paper that we're looking forward to, and the EU Act. So Jennifer, you're going to kick us off.
Well, it's interesting how many countries in the world are talking about AI, developing strategies, and then probably, at the top, trying to be an AI leader. So we've focused our attention on the big tech titans, US, China, but you can't forget Singapore, who have been, real trailblazers in this space. And then what has focused everyone's mind and attention and energy has been, this very bold and ambitious move by the EU. But these are all very different countries with different cultures and different objectives. So I think we have to sort of stand back and have a good look at what's going on, but, really come back to our core values. So when it comes to, if we start, with the EU Act, that one of the biggest objectives there is to harmonise across 26 member states. That's not something we need to worry about in this country, and then maybe that does give us a bit more freedom. Obviously, America's got 50 states it's trying to get across. The EU has been extremely organised around its digital regulation. Generally, it has pushed out a swathe of digital-focused regulation across antitrust and data and platform regulations. It's been it's had a lot of energy in that space, but in a way maybe we can benefit from being slight second mover in seeing how that all plays out. I mean, the EU approach is ultimately 100% focused on that end user, perhaps not the data scientist, and perhaps not on the practicalities of how the industry will actually comply with the very high levels of burdens. And there's also, quite frankly, still quite a lot of infighting between the Parliament, which is more interested in protecting the individual, and the Commission, which is perhaps more pro-tech. I mean, the reality is there's still a long way from agreeing anything workable out there, although that does move, and maybe it will resolve itself more quickly. When it comes to the Americas, I touched on the complexity they have there. Rather than being all organised through EU institutions, they also have competing regulators at the federal level, and there's a large number of federal regulators which come into the AI space, and I don't see them coordinating as well as we're doing in this country. I also don't see the same level of transparency in the work that they're doing. I mean, it's fantastic that you can go onto FCA, BOE website, you can download minutes of the AI PPF forums, you can use the videos of the participants. It does sort of feel like quite a transparent, open dialogue that we're having in this country. But we mustn't forget Singapore. They are a fantastic model, more aligned probably with our vision for our culture and our, how much data privacy we're interested in. So I think the FEAT principles, which were touched on earlier, and the work they've done since launching them, because those came out in 2018, and they were absolutely market leading in focusing in financial services. They've been doing a lot of work with a Veritas consortium to really get into more of the practical nitty-gritty around assessment methodologies, and even open source toolkits that you can plug in to test your AI models against fairness and accountability and transparency. So I think that's a really interesting area. I know it was linked in the DP, so I'm sure you'll be looking at it. And then I probably just should quickly mention China, because they're so big on AI, and they have put out a regulation. It's got a long name, but we can call it the China Algorithm Regulation. That was very interesting and very bold, but it's not a financial services focused regulation. It's not steeped in protection for personal data, and it's, to be honest, probably more focused around controlling big tech and the use of algorithms, perhaps more in social media and that kind of thing. So it's interesting, and my colleagues write on it, advise on it all the time. But I think for us, and I mean the UK, we are probably on the world stage still sitting in quite a good position in terms of taking a considered, thoughtful approach where we're really collaborating with industry, and events like this tell you that we're still at quite an early stage, and that we probably need to tread carefully.
Yeah, and I mean, I guess that also the sort of the difference in whether you take a cross-sectoral approach versus the sort of the EU Act approach, and how that translates from a firm perspective. If you have sort of cross-border activities, how does it work for your firms? So again, I mean, sorry, Walter, you were talking about the sort of the international firms and how they operate. Are they sort of looking at international regulatory frameworks? Are they looking at sort of things that we can use here, that we can import?
Yes, I mean, certainly those that are operating in the EU are naturally pretty interested in what's happening there in particular. I mean, I guess, well, the EU is very close to home, but also it's a hard law approach as opposed to having FEAT principles or some guidance from one of the many US regulators. It's a regulation which applies directly and has direct penalties in it, so naturally people think about that one more. I think it's challenging now post Brexit. We're doing things for ourselves, but we also still need to think about what's happening in the EU. So it means people's minds are split a little bit more. So I think that we've perhaps paid less attention to what's happening in the EU than, of course, we would have if we'd stayed in. Not surprisingly, we need to look at that a bit more. But I think the discussions around, well, would this definition of AI work for us? For example, if you have, I think it was looking at the how they tried to have a single AI framework, which with a single regulator, which would cover everything. But then they backed off that out of that a little bit and said, well, actually, we're going to hand over creditworthiness assessments to a sectoral authority. It does make one think, well, perhaps there are quite a lot of other sectoral cases where actually that would be more appropriate to have the authority that's closest to the action, has more detailed knowledge about the use cases, etc. That might be more appropriate. So perhaps they're going first probably did stir some thoughts among members and within UK Finance about whether we would like that approach here. Broadly, we think the sectoral approach is probably a better one, but of course it's a pretty difficult question. You can see how there might be some use cases which might not have a natural sectoral authority. So how might those be covered? Which I'm sure the Office for AI is busy thinking about, or hopefully is thinking about at the moment. So I'm not sure necessarily what the perfect answer is, but we'll see how the different models play out over the next few years, I suppose, and we'll get better insights as the rubber hits the road.
Thank you.
Another few thoughts?
Sure.
Just very, very quick. I think the one thing, the EU AI Act is sort of based on standard risk management principles. It's basically, it requires you to have an inventory. At the point that you had earlier, where is the AI really? The point that Jennifer made earlier around proportionality is there as well, sort of a risk differentiation. And then, of course, the demands come on the back of that. In conversations with clients, I find that having a discussion on where does the risk, what's the risk category in fact really like, that's the most difficult part to agree on, and all the rest sort of follows from that. So regulation that helps, maybe sector specific, but gives sort of ballpark areas of risk cases and risk triage, could actually reduce a lot of the debate and provide guidance. I think that might be good. And then the one thing, and again, I cannot avoid being European, being Belgian. The one thing that I also find very nice is that, I'm a strong believer in the fact that existing regulation goes a long way, but the EU then adds a couple of no-go areas. It's sort of the forbidden cases. And to be very clear on, like, as a society, there is an amount of space where you have your freedom, but there is a few barriers that we don't want you to cross. I think that's a very healthy idea as well, because those things can happen without us noticing. I mean, I'll take an example from a totally different industry, but I can think of example in FS as well. I had a conversation with somebody in a brewery, a global brewer, who basically said, now that we do more direct-to-consumer sales, we start through the data and the interactions actually potentially are in a position to identify who's developing a drinking habit. Does that lead us to having does that lead us to having a responsibility to that? And it's that type of gliding things, and where it's helpful to have red lines to, from time to time, remind us when you cross it.
Thank you, Frank. I'm conscious of time. Do we have time for questions, or?
I think we've run over.
Oh, we run over. So, okay. Okay. So thank you to the panel, and thank you for.
I think, can I welcome some of the next panelists on. We're going to have Julian Cunningham-Day, if you can please approach.
I have to stay on.
And this session will be on AI, practical risk management for AI.
Thanks, Emery. Thanks, everyone. In fact, before we have our very exciting panel, I think we're first going to invite Jason up to give his keynote speech, who's going to set the scene for risk management in AI. Thank you very much, Jason.
Right. Good afternoon, everybody. So what I'm going to do, this is not going to be a long keynote by any means. It's going to be an opener for the upcoming panel. I'm going to be talking about practical steps. So my name is Jason Ward, and I am from Starling Bank, and I am Starling Bank's chief technology advocate. So I talk about Starling Bank's technology, its technology philosophy and processes and practices, and how those apply. I'm an engineer by background, so I like practical steps that you can take to implement all of the good philosophy points, the good risk management points, legal points, and so on that we have been talking about so far. So I'm going to talk about 3 practical steps that need to be implemented, that need to be in place so that you can genuinely have a well-functioning and a good AI system which fulfills all of the principles that you've been hearing about. So the first practical step is about the cleanliness of your data. Now, the typical phrase to deploy here is garbage in, garbage out. So you need to make sure that what you're putting into the system, how the data that you're feeding into the system is to the model, to the AI that you have built and are running, is good. Now that applies in 2 respects. That is both when we're talking about training, building up the AI model, the training data needs to be clean, it needs to be good, it needs to be representative of the data you're actually going to be feeding the system. And also then when you move on to actually feeding data into the model to make decisions about whatever it is you are making decisions on, be that facial recognition, be that decisioning on things like credit or fraud or what have you, you need to make sure that that data is also clean. This takes a lot of work, a lot of effort. Making sure that your data is clean and actually matches the expectations that you place on it is not an easy task. And building those pipelines that ensure that data is not only clean from the training point of view, but is also clean when it's being fed in, and that it is automatically cleaned, automatically checked and validated, because you can't possibly manually check all the data that is feeding into the model for decisions to be made on it, is actually quite a complex task. If you want some career advice, you're thinking of switching to the technical side of AI, then don't try and become a data scientist, become a data engineer, and you will never be out of a job. It is very difficult to get good data engineers who want to not, sit there and play with the data when it's all nice and clean, but are actually willing to get down into the pipework and mess about with the dirt and grime of unfiltered, unmaintained data. That is actually quite a difficult thing to find, and it is a job that I'm sure will never be out of favour in my lifetime. So that's number 1, clean data. Number 2 is good monitoring. We've heard about monitoring and explainability and so on and things like that, and I'd like to re-emphasize once again that monitoring of your AI systems is key. Monitoring comes in a number of different aspects. You not only need to have explainability of why decisions were made overall, what overall is your system doing, you also need to have explainability of individual decisions and be able to know why a particular decision was made in a particular way. This requires you getting out, you can create systems that have, create AI systems, machine learning models that have explainability graphs, where the graph comes out with a, here are all the contributions that each individual data point made to the overall decision, and you need to be able to interpret those. And those, again, require cleaning on the other end, right? You've cleaned the data that you're feeding in, you then need to clean up the explainability output, because oftentimes you get out these graphs and they say to you, well, here are the, 20 or so factors that contributed to the decision, and the biggest one contributed 2% to the overall decision or what have you, or 100 factors or however many factors you've got. Now that's not very explainable. You can hand that to someone and say, here are all of the factors that went into the decision, but they're looking at that and there's this just giant list of them, each of which contributed a very little bit. So you need to be able to consolidate those and say, well, here are the if you're trying to explain that to a human being who may not be of exactly a technical mindset, you need to be able to consolidate those and say, well, here's one group, here's another group. You need to be able to translate that very machine speak into the very human speak of an individual human who has who can't cope with 500 different factors and needs them to be consolidated into 5 or 6 different groups. So, explainability. Moving on to the third one, explainability is good. You need that explainability, you need that monitoring. However, sometimes with certain models, explainability is very difficult to get. But you still need to be able to understand why your system is making the decisions it is making. And this is why I come on to how you manage your AI systems. You have to drive through a series of hypothesis testing when you're changing things. So trying to work out, I've made this change over here, what outcome has it made, is difficult at the best of times with automated systems, especially very complex ones where you have a lot of different systems interacting with each other. It can be very, very difficult when we're talking about machine learning AI-driven models, because there we've got the situation where we're not just changing the model code itself, we're also changing the training data that we put in. Those both are inputs that go to create the model that then makes the decisions. So you've got the learning component and the data that it is learning off of. So whenever you're changing either of those and then coming up with an output, you have to be very strict about why you are changing these things, and what you are looking for in the output. And this is where the hypothesis comes in. Rather than just changing something and saying, well, I hope this makes it better, you have to go, why am I making this particular change to the training data or the learning system that I'm creating to create my machine learning model? Why am I doing this? You have to think first, and write down, this is why I'm doing it. This is the outcome I expect to happen. These are the changes I am making, and so on. Log all of this. So that if you are later on asking, why is the system now changed? Why is it making this decision, whereas previously it made that decision? You can go back and look and say, well, we hypothesized that this would happen, and it did happen when we made this change to the training data. So there is the log, the record of what we've done. You have to be fairly strictly controlling of not only the code, which is generally speaking something that people do very often, but also the training data that you are feeding in. Those have to be version controlled, change logged, and so on, tightly controlled so that you know what's going on. So having good, clean data, making sure that you have good monitoring and explainability over your systems, and making sure that you are strict about the change control and how you change both your training data and the system that is being trained. Those are the 3 practical tips I would say that you need to implement in order to lower the risk of things going wrong with your AI. Thank you.
Jason, do you want to come and take a rest? Catch your breath. Swap side. Thank you very much indeed, Jason, for that insight into risk management approaches to AI at Starling, and I'm sure fair of other experiences in your life. So the focus of the last few conversations today has been very much around the regulation of AI, and it's time we pushed the balance back a bit more to focus more intensively on risk management, which is the other side of the core topic that we're discussing today. And I'll let my panelists introduce themselves, but quickly to explain. We've just heard from Jason at Starling. We've got Adriano from, I'll let you all explain yourselves in a moment, but I think what we were planning to do was, having had that snapshot from, if you like, a Starling perspective, we're going to take a step back and hear from a practitioner's point of view, what are these key risks that we are seeking to manage in the AI space? A lot has been written about risk management in AI, but it's important to hear how that is actually playing out in practice, both within the banks and within the wider societies that they're influencing. So we'll hear that both from within financial institutions, again from Mohammed, who's welcome back from the Bank of England's perspective as well. So I'll allow the panelists, I think, let Jason catch his breath first. Maybe you come last after you've heard from the others, just to talk through. Ange, would you like to start? Just talk from your perspective about the key risks that we need to manage.
Sure. So hi there. My name's Ange Johnson-DeVette. I work at Lloyds Banking Group on our cloud-enabled business transformation. For me, the best way to understand the risks associated with artificial intelligence and machine learning is to look at the issues that have come up. So I've got 3 examples. So the first one is there was a big technology company that used an artificial intelligence algorithm to find and recruit developers. And the algorithm very quickly found some success and was exclusively recruiting young white men, which is against the law. So there's one example of an issue. A second example, I've only got 3. Second one would be Microsoft had 2 chatbots. The first chatbot they have got sort of manipulated by the public and ended up being racist, sexist, and generally very unpleasant. The second bot was protected against that, but had the opposite problem, which was that it was extremely politically correct. So for example, if I'd said to it, I'm going to read the Torah after this particular conversation, the bot would have berated me for it. And then the third one, which is pretty good, is that an algorithm was asked to solve cancer, which is a very noble cause, and it did solve cancer. The way in which it solved cancer was by killing off all of the humans. So I think that when you look at these issues, these are all great issues of what can happen when things go wrong. And I'm sure we'll be talking later on about how we can protect against that.
Many thanks, Ange. And Mohammed, over to you. Obviously, you've absorbed a whole bunch of inputs from across the industry through your many, many discussions you've been having over the last few years. Do you want to just give us some of the greatest hits from your perspective in terms of the risks and how you group and categorise them from an oversight perspective?
Yes, thank you. Greatest hits of risks. I like that. I don't know about sort of greatest hits, but sort of I'll talk a little bit about how we think about it and sort of the framework under which we approached both the AI PPF and the discussion paper. And the way we sort of have been thinking about the drivers of risk for AI systems or the components of the AI system, if you like, so we sort of split it up into the data bit, the sort of the model and model risk part and the governance part of it. And within that, the sort of the risks are the ones we've already spoken about, so data bias, sort of data drift. Within the model section, you've got explainability. You've also got the sort of the dynamic nature of models and how change management then works around that. And governance, again, is how do you manage it? What's the accountability, responsibility? And Jessica this morning sort of referred to SMCR and sort of how that could be used from a regulatory perspective to sort of manage those kind of risks. One other thing that sort of comes up quite a lot is the third-party exposure. So the use of third-party data, use of third-party models, and how you manage that. And there's a sort of increasing trend of using third-party outsourced models and so on, because they tend to be sort of cheaper and easier to use and that sort of thing. But have to think about sort of that aspect of it. I also want to kind of highlight one thing, which is from the model risk survey that, again, Jessica sort of spoke about this morning, that firms in general, and we asked them sort of what they identify as risks to consumers and risks to the firms themselves, and the kind of risks are the similar ones that we've just spoken about. But overall, we asked them what they are now and how they're going to evolve over 3 years, how they see that. And broadly, like, the expectation is that the risks are going to decrease, except in 3 areas. And the 3 areas being sort of model complexity is going to sort of increase and pose more problems, machine learning ethics, and the last one is the use of third-party data in particular. So
thank you,
that's a bit the highlight.
Excellent. And one of the ones that you mentioned there was obviously the involvement of third parties in the management of the risks, and having a representative holistic AI on the panel will help us get a third-party view into financial institutions as well. Adriano, do you want to take the baton on now?
Definitely, yeah. I'm Adriano Pachama, co-founder with Emory of Holistic AI. I think I was mentioning to Enrique actually on the coffee break that I was just so surprised that people were talking about the New York City bias audit legislation here. And it just is a different piece of legislation. It's more around HR and talent and workforce management legislation. But just to see how this topic emerged on this side of the Atlantic and became a topic of discussion, it's just so impressive how this small piece of legislation in a city in the US creates this whole buzz around it. And we, by the way, conduct a lot of these third-party audits for American companies, New Zealand companies, Australian companies, European companies that sell in New York City. We have almost like a dozen of clients and more coming every single week because it's getting to force in January. But just to see, and I think the panelists, I think what Sarah was raising, the essence of that legislation was transparency. And that's the bias audit is of course important, etc. But actually be able to expose that on your company website. You can imagine, particularly in the US, how contentious that is. Not joking about the lawyers in the room, but there's a lot of ambulance chasers in the US, and particularly for employment law, which is a very contentious area in the US, and there's well prescribed norms and rules about what can constitute or do not constitute disparate impact in employment. Your company can get possibly sued just by exposing their information. Now moving back to financial services, I can definitely see that in some applications, possibly on KYC, where you may involve some background checks or facial recognition as part of that process, you might want to use a third party to help you conduct possibly not only a privacy check, but also a bias assessment, because you might not want to use your customers' data to do that kind of assessment. You might want to use someone else because you may want not to do that labeling of your customers yourself about the race or gender, etc. So I can definitely see there will be some areas where you might want to involve a third party to come and help you look at your systems. Other areas, I think you can pretty much rely on your free lines of defense and letting they go.
We'll come back to that in a minute. Thank you, Adriano. So, Jason, do you think we've missed any key risks so far?
We've mentioned a lot of them. I think that the one additional I would mention is that the risk of you're building an AI system and it being a big waste of money. The Starling Bank has assembled what I think is a very good, excellent, world-class engineering team. We spent a lot of time building a cloud-native, modern architecture, and we are only just now starting to venture into the world of AI and machine learning and use such models in anger. It requires a lot of technical backup and know-how in order to use these things properly. And I think that there is a danger that a lot of firms will go, well, let's rush to AI and ML because, it sounds good and, we'll build it. And then, it's the equivalent of buying an industrial powered lathe and using it as a coffee table. You buy this really expensive thing and then you just don't use it. And you could have just gotten away with doing it a simple, automation task. It doesn't require something of this power and complexity to really use. So, genuinely, I would question and ask any time a new, project is being deployed that says we're using AI and ML, does it need AI and ML? Are you using a sledgehammer to crack a nut here?
Fair enough. Okay, well, so we've laid out a bunch of risks now. I think because of the time constraints, we should move pretty quickly on to talking about how to manage those effectively. And I think probably best if we start maybe with Andrew and Jason from within the engine room, managing these risks. What are your top tips in terms of, and what are the risks and what are the top tips for managing them effectively?
Yeah, okay, so I mean, I couldn't agree more. So I think that, so firstly, having an intention when you're working on your AI ML and then checking that what you've built was what you intended, I think is super important. As an engineer, it's very tempting to just play and come up with something that seems really cool, but actually isn't what you were potentially intending to do. So I think there's definitely something there. I think your point on the knowledge and skill is a massive one. I think there's a lot of instances of very enthusiastic data scientists or AI ML programmers who are getting busy, but again, who may not actually be delivering what they were intending to do. And what I have seen work well are centre of excellences. So a centre of excellence full of, I'll be honest, PhDs in AI ML that sits somewhere, so that when whoever it is that's coding up their model, it runs into trouble, they can reach out to that group and they can get that help. Because I do think there is a spectrum of ability that is involved in this type of work, and you need to be able to make them all successful. So I think that's one way of doing it. And yeah, I mean, I think the data quality is critical. Having your data organised as best you possibly can is great. We talked about multiple lakes versus one lake versus virtualised. The cleaner the data, I think definitely the better. And yeah, I mean, I think having a log of where your AI and ML would be is definitely vital if you can. I think there is shadow artificial intelligence and machine learning out there, particularly when you've bought a software that happens to be off the shelf and it does some magic stuff and you think it's great, but actually if you did get under the covers of that software, which is in whatever code it's in, you may find some AI algorithms in there. And I think that those are of particular interest because the regulator will want to be able to see how you are making your decisions. So you need to try and uncover as much of that shadow AI and ML that you possibly can. That would be my main thoughts on that.
Okay, thanks, Ange. What would you like to add to that list?
So yeah, I'd like to reiterate, like, start with the pipe work. Start with the data engineers, because like having that clean data, having that data being able to be fed towards places is a major thing in order to stop all of the risks of the AI going wrong. Because you don't want to start getting weird decisions about your AI and then go, why are these happening? And then be unable to find where the decisions are coming from. Since data is such a big driver of that, someone who is able to clean and make sure that the data is working well is just as vital, if not more vital, than someone who can actually write the code. A lot of the time when we're talking about third-party systems, you might end up having this sort of half and half model where the code, the learning system, the system that does the learning, builds up the model, is a third-party package that you've brought in, but the underlying training data is your data, right? It's data that you have got, either that you've supplied to the third party so that they can build the model off your training data, or training data that you're feeding into an off-the-shelf model that you've bought. So because of that, there is this sort of dual responsibility, and we were talking earlier about who's responsible, who's the supplier, who's the creator of the model. And I would be fascinated with all the lawyers in the room to say who's responsible if one person comes up with the learning system, another person comes up with the training data. Who's responsible for that? Whose job is it? That's a tricky one. Having those good data engineers to debug the inevitable problems that occur with your data, I think is an excellent starting control to mitigate your risks.
I think the quick answer to the question, if you're a regulated firm, they'll probably find a way to decide that you are responsible in some way.
Sure. Oh, yeah. Absolutely. We expect that, right? Already, whichever side. But I'm not going to think about that because I'm an engineer, not a lawyer. So I don't have to think about these tricky legal definitions.
Thank you, Jason. So we've heard from the engineers, if you like. How about from the supervisor's office? Joanna, do you want to talk a little bit about the 3 lines of defence and how you think that might need to evolve, and maybe even more inputs to make this work? Or Mohammed, either one wants to start, I don't mind.
I don't mind, I'll have a crack at it. I mean, I think the first line of defense model is fine. I think it's in place. I think it's how you use it, which is important. And so two things that I would kind of add to what's been said is, the first one is to sort of have a kind of a joined up approach from the start of the development process, so that everybody, whether it's the data folk or model risk and so on, are involved at the beginning, and that there's transparency about the process and the project and so on, and how it will eventually be used. I think that's very important. And by implication, that the sort of first line and the second line kind of understand their different roles. The other thing that I would add to that is, in terms of sort of who's sitting at the table when decisions are being made about these processes and what data to use and everything, I think it's important to sort of think about which stakeholders throughout the firm you want to have through the decision process, and to make sure that there's a diverse kind of, body of people involved in that process, and that goes to sort of the various issues that we think about in terms of ethics and what Ange was saying earlier about sort of the kind of bias and results that you can get out of some of these data. So I mean, those are two things I'd say.
Thanks for having me. Sorry, John, over to you.
No, I just want to add to those 2 points. I think they were both raising about the things that we tend to recommend people when they're starting this journey. And you might be surprised, a lot of companies, if you come and ask them, do you know how many AI systems you have in the business? It's like question mark. They don't know. So really, like, doing the logging, cataloging of the systems is quite important. And then think about the risk of those systems. I think the tiering approach is very useful because it helps you concentrate on trying to solve them. But at the same time, think about the breakdown of the risks. So if you're talking about an HR system, we're talking about probably bias, transparency as the main risks and the main drivers. Or if you're talking about a trading algorithm, we're talking about efficiency, robustness. These are just different forms of risk that will emerge across the enterprise. I think going back to the first, second, and third line, just to answer your question, it's we had a couple calls this week, and the same theme emerged, and they're very large banks. We were talking. It's always this problem between moving projects from first line to second line, and like getting those data scientists or whoever satisfied with the whole process. And I think they had like, and I can maybe include myself on that list. We had this sort of expectations that you can come into a bank and then do all kinds of modeling, and then in 2 weeks, 3 weeks time, you just put stuff on GitHub, deploy it, and then off you go. It's just like, it's not going to happen.
It's faster than that.
It's faster than that.
Depends which bank you're at.
I'm kidding.
Depends. True. I give you that. And that theme of the friction between first, second line, and when we were saying the expectations on both sides is a big problem. And one thing that I just want to maybe point out that I hope it doesn't emerge, but it can emerge, is that people start to really push down the expectations around what can be achieved. So I was chatting with someone else today. He was talking about causal inference and causal modeling. And great, there's a lot of interesting models that do amazing stuff. But sometimes some problems you're not going to be able to solve with them because you might have to use a much more heavier model, like some deep neural network, etc., because it just basically works for those types. But then how do you get those out from the first, second line? That becomes a big issue. So there has to be maybe a peace agreement or something between those two lines.
I mean, one piece which we haven't talked about very much is just the interplay between what you do internally and how much third-party help you get. And we've heard earlier about this perceived skills gap in some of the skills you need to manage these risks, and the fact that it's already quite complicated to manage risks in a rapidly evolving financial services environment anyway. So do any of you feel confident to talk about how you see that going forward, the process for bringing more third parties in to help with maybe the data aspects that Jason was talking about, the auditing aspects, everything else, do you see that becoming increasingly just another area of significant outsourcing over time? I don't know, probably one for Jason now.
It depends. So for Starling, no, but then Starling has deliberately got technology and software engineering as one of our core competencies. So we have made that choice, and we have invested in building up that engineering team. I think that there's going to come a point where financial firms have to make the choice one way or the other. Is technology or engineering a core competence? And if it's not a core competence, then yes, very complicated things like artificial intelligence will have to be more and more outsourced to third parties, and there will have to be a degree of there will still need to be a degree of technical competence within the firm, because they'll need to audit what the third parties are doing and ask the question, is this third party doing the right thing? Are they treating the data correctly, right? Because you're going to have to hand over the data to them to build the model. So, how are they handling the data? Are they handling it in the correct way? What is the model doing with the data? Can we see the explainability graphs and so on and so on? So that question will have to be answered. Or you can decide that technology is a core competence, and like Starling, then bring in-house things like development of artificial intelligence models and so on, and then hold yourself responsible for doing things like explainability and so on and so on.
Yeah, I mean, I couldn't agree more. So, I mean, if you think about the 3 lines of defence, they all have a role in managing artificial intelligence and machine learning. So each of them has a role, okay? But then also, each of them can leverage AI and ML. And in many firms are. So you've got second and third line as an example that's using artificial intelligence and machine learning to try and manage risk better within the bank or within the organisation. So they've got a role for managing it, and they can use it. And then exactly as you've said, it's where you want to sit on that. We talked about the spectrum of skill. Like, do you want to have a bunch of PhDs who are coding native AI ML models, or do you want to start leveraging some of the tech that's available, keeping in mind that you need to be able to explain it? And I think that personally, I think it's not just going to be first, second and third line. I think generally as AI and ML becomes more of a sort of low code, potentially even no code option for folks, the amount of skill required obviously comes down. And I think that's probably not going to just happen within banks and organisations. I think that's going to happen to us socially. I do think that within my mother's lifetime, at some point she will be employing a machine learning algorithm. It's maybe a bit ambitious, but I can see it. I mean, it's finishing my sentences in Gmail. How far away really is this?
And Mohammed, obviously the interplay between third-party risk management and AI is a big theme from the bank's perspective as well. Are there other aspects you think we should?
It's a big theme. I mean, we do have we do have papers out there on third-party exposure, outsourcing, critical third parties, and so on. I think it's only going to grow. I mean, I'm not sort of in the banks, but I mean, the way I see it, it's only going to increase and only going to grow, and it's sort of where the boundary is. I mean, pretty much everybody is using open source, whatever it happens to be, TensorFlow or whatever. I mean, I don't think anyone sits down and writes their own neural networks, do they, anymore? You do use third party, as it were, in any case. So when you're thinking about it, you will have an approach to that. And it's sort of scaling that approach and making it sort of more applicable to data models, whatever, cloud sort of applications and so on. So I think, again, it's thinking about the bigger picture of stuff that you are pretty much using anyway, I think.
Yeah, no, I agree. I think the trend is going to grow. And I think that because the trend is transparency. And I think that's just going to be bigger and bigger over time. So definitely it's going to grow. I was reflecting what Angel was saying, and I think the main thing for me is the skills gap. I would say when sometimes we go and engage with some of the teams, I would say I see sometimes myself reflected in some of them a couple of years ago, because when I did my PhD and my master's, everything on this area, you just don't learn in school how to conduct a bias assessment or enhance explainability on the system. All these topics, don't take me wrong, if you go to a computer science department, Woodley University, UCL, it's niche. It's niche. It's like 100 researchers, maybe 1 or 2 are doing something about it. The majority of people at UCL, computer science, is doing natural language processing, computer vision. That's the majority topic. And I can definitely see that share growing, but it's still like a long way. And that becomes a problem, because if you want to bring a third party to do that, of course helps, because it's fulfilling that skills gap you have in the organization. But at the end of the day, you need to have that built as well internally.
Any final thoughts before we let this lot ask you some questions?
We haven't talked on ethics. I just want to fly through that. So just to think about, like, what is it going to do to us? So as I said, Google's finishing my sentences in Gmail. What does that mean? You know, when people are dating these days, it's left, right. There's an algorithm behind that. What is that doing to us? And then think more on it, like newspaper articles in your local paper probably weren't written by a human. They're probably written by, again, an algorithm. So a lot of stuff is coming at us, not direct from humans now, but a lot of it's coming from algorithms themselves. So I think about that. And then I think the other thing because I think that the regulator is, all regulators are watching these things, and they're thinking about it too, and they're starting to think, well, what should be regulated and what shouldn't be regulated. And the last one would be, so there's 2.2 million drivers in the United Kingdom. If all of the cars became autonomous vehicles, those 2.2 million folks may not have, well, they definitely wouldn't have driving jobs anymore. So they'll all become, I'm sure, AI, ML coders, which is great. But I think it's worth thinking about. And then the redistribution of wealth as a result of that. The general thinking is that the rich will get richer and the poor will get poorer, and will be an uneven distribution of wealth. But I think all of those things from an ethical point of view are worth thinking about, because, as I mentioned, the regulator is as well. And I think if you wanted to, future-proof yourself, you should be thinking about these things.
Fair enough, Ange. I'm not sure we can get into universal basic income and everything else today as well. That's a bit too heavy. I know it's almost lunchtime, but would any of you like to ask a question to our fantastic panel? There's a hand up there. I'm not sure if there are still some mics around, but if you want to stand up and project, otherwise that's fine.
Sure. This is Mega from LSEC. I have a question. So we discussed a lot of around risk. Thank you. And despite of the statistical and mathematical nature of the underlying models, and also there was a point that today not that many people actually code their CNNs and their algorithm. They just use off-shelf or open source models. Do you see any systemic risk? I appreciate there's a mathematical nature. These models are quite precise in their nature, but might be that everyone is using TensorFlow, and there might be some unforeseen problem when these models might start falling, or they might start amplifying some, I would say, underlying mathematical phenomena, or something like that. So do you see any systemic risk?
I can talk about that. Thank you. I planted that question. Yes, there are sort of financial stability implications, and we do think about them a lot. And it's the ones that you would sort of think about. So there is a potential, if everybody starts using AI, for more herding behavior, more pro-cyclical behavior. There's quite a bit of research that shows that AI models can interact in a way that amounts to collusion, and this is sort of called tacit collusion. And this is an area that we are looking at from a market perspective, competition perspective. There's less done on another area we think about, which is the way that networks can impact sort of systemic risk. And by that I mean sort of a lot of the AI models are using data, again, so third-party data, but there's transfers of data across networks and so on. And they can be concentrations of data, concentrations of models. There are only, I don't know how many cloud providers there are, but it's limited. And a lot of people use the same cloud providers. What happens if those go down? So it's those kind of issues, I think, that we are thinking of from a systemic perspective. So does that answer the question? It's lunchtime.
There's a couple more. Please go for it.
Hi.
Oh, there's someone. Oh, Sarah's got the mic. Let Sarah go first. She's got the mic.
So, hi, Mohammed. Sarah from Credit Suisse. And it's actually a question probably for yourself and Frank, who's sitting in front of me. We talked a little bit, and we've touched a little bit about chatbots and cognitive tech. Now, this is interesting to me because we haven't really talked about the implications of regulation on cognitive technology like chatbots, where you're doing a lot of interaction with consumers, public, whatever, clients, internal clients. So how is the bank thinking about chatbots and the use of cognitive technology? Because it's obviously NLP, right? And it can be using pretty black box if you're going into neural nets. So what are the thoughts around that?
Well, I can talk a little bit. I mean, the first thing is not all chatbots are AI/ML. A lot of them are just straight linear algorithms. So it's not, there's no machine learning or artificial intelligence within it. But yeah, I mean, I can't comment specifically for our firm on the ones that are, if there are some.
Now, we have a look at a couple of chatbots that are in consumer apps for a company that we work with, but they're quite mundane chatbots. They're more like, as a topic, they're glorified menus, actually. There's no element of the machine trying to understand what was asked and then providing an answer in a form of natural language. It's pretty much, you probably have seen those kind of chatbots. You're kind of clicking around. So those ones are very easy to control, easy to test. There could be a trend where you have this sort of natural language understanding and generation of chatbots, but we haven't seen none of them so far in practice.
Thank you. So basically, right now you think they're off the radar because it's meant to be one of the biggest growth technologies out there right now.
Yeah, I think it could be off the radar, definitely.
Well, I'm not sure about that. I can't talk specifically for my bank, but I would be very surprised that, I think most banks, I'm sure including Credit Suisse, have logs of the AI/ML implementations that they've got, and they're very tightly managed by first, second, and third line risk. So I wouldn't assume that there's a big gap there.
That's interesting. Well, you should probably talk about because yes, absolutely, in terms of models, but I'm not sure we've really put our toe very deeply into the water of cognitive tech.
Let's shut offline.
The reason I think she's saying it could be off the radar is because you don't do the same scrutiny. For example, going back to the HR point again, you don't do the same level of scrutiny of first, second line, third line of defense for an HR tech system that you're buying. You just don't do that. Yeah. So if you're purchasing something outside of the company, that can be is not going for the same.
Okay, we have talked about that. So this comes back to the shadow AI/ML point that we talked about earlier. So if you buy some software, it could be anything. It could be chatbot software, it could be fraud software, whatever it is. There could be artificial intelligence algorithms within that software that aren't immediately apparent to whoever's bought it and potentially whoever's managing it. And I think that in those instances, the firms need to be very watchful of those software packages and exactly what is in the code underneath the hood of them. I hope that makes sense.
Sounds like one for the lunch break. Let's take one more.
Barry Smith from NatWest Markets. I think it's common ground that one of the key areas of risk with AI is the risk of not simply deploying a model that has unfair bias, but of getting found out, and tried and convicted in the court of public opinion. But with liability directives coming from the EU, it's going to be not just reputational risk, but legal risk, which could be quite substantial. Now, Shamik was talking, everyone thinks, okay, so we monitor for that. And Shamik was talking about picking the right fairness metrics for a given use case. Fine, but what when you don't know? How do you mitigate that risk in the case where you don't have the data to evaluate the appropriate metric? So we know, generally speaking, for most of our customers, what their biological sex is, what their age is, but we usually don't know sexual orientation or transgender status or these kinds of attributes. So I think there's a significant risk there, and it's not clear how you address it. Do you use a proxy where you can't really easily test how good the proxy is, so you just push the problem one step back? Or do you ask your customers and then risk getting a small, self-selecting, unrepresentative set of respondents, which again could skew your conclusions? How do you manage that?
I would go for a proxy. This has happened, by the way, already. Netflix got caught out by this, where they were accused of doing racially biased advertising. And they said, well, we can't be doing racially biased advertising because we don't know what the race of our customers is. We don't have that data. But it turned out that they were racially biased because their customers' selection of programs was racially biased. And they were basing their decisions off the customers, the programs that the customers chose. They were choosing how to advertise other programs to them based on that. So the customers essentially leaked by proxy their racial, what race they were via their choice of programs. So this sort of thing you have to watch and be careful for. And I think that you have to be especially careful when you are taking data that effectively your customers have fed you. So you are taking data on, from what your customers are doing, because that could contain the proxy in it that is going to open you up to that sort of problem. But I would say that customers are rightly concerned about, giving more data over, and they are becoming more and more concerned as time goes on. And telling them, no, we only want to collect data about your sexual orientation in order to protect you is probably not going to go down well. So I would say that, proxies and watching proxies is the way to go, and understanding what the proxies are in your data. And again, constantly reviewing that data to make sure it's clean. Another way you have to do that is to look for those proxies and monitor their usage.
Yeah, the only thing I'd add is think about the customer first. And it sounds really obvious, but to give you some data. So when it comes to alerts, customers are a little bit more sympathetic if it's pretty personal and it's a personalised alert. They're sort of like, okay, that's actually pretty helpful. When it comes to advertisements, just as an example, they do not find personalised adverts helpful. They find them creepy. Okay, so I think trying to second guess your customer too much is not what our customers at the moment, in this day and age, particularly want. They do not want particularly personalised service. I can give you the stats after this, but it's clear.
Just want to touch a point. It's really a data question, and in the UK, European Union, and some other countries, you have this GDPR as one of the main piece of legislation regarding data. It's also the mentality is a little bit different on the side of the Atlantic, because as Jason was mentioning, it's a little bit of the approach here is more about the privacy of the individual, whilst in the US it's more about discrimination, which is a very different approach. Over there, with the data sets that we have observed so far, we get about 10% of self-reported data regarding race, gender, ethnicity, or race in the US, veteran status, and some other protected characteristics that are in the US. I wouldn't be surprised that the same rate of self-reported data would emerge. The other solution is not a solution, it's actually something that is blocked in some places, where is to infer those characteristics. And that inference becomes very creepy in some cases, where you don't want to be taking people's photo and inferring things on their behalf.
I think it's probably lunchtime. We've certainly covered a lot of ground. So thank you very much. Fantastic panel.
I think we'll reconvene at 2:30. Hi everyone. I think we're going to start in a few minutes, in a minute or so. Awesome. Thank you everyone and welcome back. This is our last session of the evening or of the afternoon, and we're going to have some fireside chats and some presentations. And the first one is going to be from Harry Keane, who's the CEO and co-founder of Hazy. Is Harry here? Harry, yep, great. See you. You ready to go? I'll sit there.
Good afternoon, everyone. I'm Harry Keenan, CEO and co-founder of Hazy, and I'm here today to talk a little bit about our synthetic data platform and how we're helping banks and other financial institutions and a couple of companies in other sectors as well set their data free and do more with less restriction. So, just to jump in, we're working today with a number of big financial institutions from Nationwide, Wells Fargo, Fidelity, NatWest, as well as Danske Bank, and as I said, some other sectors, including telcos like Vodafone. And we're helping with them with some challenges around data agility. So that ability to quickly access and use your company's most valuable asset, that data set, is a massive competitive advantage. The trouble is those data sets are often trapped around layers of regulation and control and compliance and security process. So you end up in this constant tension between keeping that data secure, but also leveraging it for creating value or innovating on top of. And that's really important because there are very agile challenges in the financial services space. You can move very, very quickly because they have less legacy infrastructure and they have less people to manage, and effectively they can access those data assets quickly and potentially get new products to market and start to steal market share from the incumbents. So this tension, as I say, between innovation and security and regulation can be a real pressure for big organizations to get around. So you'll be pleased to know we've come up with a solution. It's a synthetic data platform. And the way it works is that we install our software on-premise next to our customers' data assets. And we train a generative model against those data sources to pick up all of the underlying statistical characteristics. So if you imagine if we're working on structured data, that generative model is going to pick up all of the distributions down the columns, the relationships between columns, and effectively all of the statistical characteristics that data set contains. And what you can do is then move that trained machine learning model to a new location in the organization, perhaps a dev test, maybe a cloud environment, a sandbox environment, and you can ask it to generate a totally realistic but fictional data point from scratch. And because what it will do is it will generate that data point sort of based on the statistical rule set that it's captured. And that's really powerful because you can keep on doing that and you can end up with a synthetic data set that firstly looks and feels like the real data. It doesn't contain any of the real information, but critically it does preserve the statistical characteristics. So this synthetic data asset can be used as a drop-in replacement for your real data across many applications across big businesses, but without all of the hang-ups of the sensitivity that your real data set contains. I'm just going to bring that to life with some images of dogs for you guys. That's quite a complicated thing I've just explained, but looking at it with imagery is actually quite a nice way to visualize it. So what we've got here is we've got two images of dogs that have been synthetically generated and one real one. So what we've done, I'm going to ask you to try and guess which is the real one in a second. So get ready for some audience participation. But the process we've followed here is we've taken a bank of images of these dogs, trained a generative algorithm to understand what the essence of a dog is, what a real dog looks like, and then we've asked that generative model to then generate new images of dogs. So there's two images here that just don't exist in real life, and there's one real one. So I'm going to ask for a show of hands first, please, for the one on the far left-hand side. So as you guys are looking at it, the far left-hand side, is that the real dog? Okay, yes. I've got quite a lot of hands there, actually. Okay, thank you. How about the one in the middle? 1, 2, 3. Okay, one of you was from Hazy as well, actually. I saw that. So, and then the far right-hand side. Okay, well, that's good to hear, because actually it is the one in the middle which is the real dog. And that's, we haven't been particularly selective with the images that we've chosen there. But what it shows you is, if I go back a slide, the two images on the outside are hyper-realistic and very easily, as we've proven today, mistakable for the real images themselves. And that is precisely what we do with structured data, or the types of data that you might find in your organizations that you might want to be using every day, be that for data science, development and testing, or even potentially monetization. So I'm just going to take a step back. So that's the problem we solve and the process we go through to solve it with our product. But it's really important to say the way this applies to regulation is critical. Because it's very clear in the GDPR, which is often the direct piece of regulation that this technology applies to, is there are a few types of data. So you can have totally untreated data. The GDPR is absolutely going to apply to that. It will contain a lot of sensitive information. You have pseudonymized data, where you may have removed the direct sort of names and identifiers, but you've replaced them perhaps with a sort of a unique token. But again, unfortunately, that data does still fall under the scope of the GDPR. And then lastly, you have anonymous data. Now, this is actually, you can get into the details of the technical description of what anonymous data is, because there are some so-called anonymization techniques which don't fall under this definition in the GDPR. But the good thing is that Hazy's synthetic data does. And you can use our technology to effectively apply to your data sets and create synthetic data assets that don't fall within the scope of the GDPR. So that's fantastic. It means you can skirt around a lot of the lengthy and costly processes that you might have to put in place to manage that risk. But also as well, just from a moral and ethical point of view, you are just being fundamentally private by design with your approach to the way you're using your data assets and being much, much safer and ethical as well. This is worthwhile paying attention to, because about a year ago, there was a huge spike in the number of fines. And you can't perhaps see the dates along the bottom, but where that huge uptick happens is about July, it's between July and October last year. And the reason being, we believe, is there was a sort of a grace period post GDPR where I think the regulators were getting settled with the rules around GDPR and how to implement them, but were also allowing companies time to adjust. Our understanding is that period is now totally over, and particularly post-pandemic as well, that has certainly changed. So this is becoming more important. We are having customers come to us now who say, look, we've been notified by our regulator that actually we do need to have less live data in non-production environments, and we'd like to use synthetic data to tackle that challenge. So this is, as I say, a very pertinent problem to be solving nowadays. So I just want to talk about a few of the use cases just to bring this to life. So the very first one is testing. So software development and testing. Every single day across your organizations, there will be a small army of software developers working on data sets to build new software tools, new products, and they'll often be having to do that on real data, because there's no really realistic alternative to do that. There are solutions out there like test data where you can sort of create these dummy data sets, but they're very unrealistic and actually it's quite arduous to build. So just to get software developed and then tested, so then when you eventually push it into production, you know it actually works. Using synthetic data is a great alternative to using real data sets or even test data. Analytics and AI. Now, because you preserve the statistical characteristics in synthetic data, it does mean that you can start to experiment and test and validate new AI tools. Maybe it's fraud detection tools, or it's a new anti-money laundering system. Whatever the model you might be building, you can use synthetic data. So you don't have to wait potentially 4, 5, often even 6 months to go through the live data exception request, perhaps to run your experiments and test to validate whether there might be a good idea there. You can jump straight in with a synthetic data set and get going. And lastly, monetization as well. This is previously an almost unheard of opportunity for some organizations, just because the nature of their data assets. what we're seeing some customers, particularly in the market research space, really interested in doing is creating safe replicas of their real data assets that they can then monetize and build new revenue streams on top of, without the risk of leaking their customers' information. So I'll just finish on one case study, just to wrap up. This is a great example from one of our key customers nationwide. This is Alex Bannister. His role as the Director of Strategic Partnerships is to test and evaluate new vendors, from startups through to potentially more established businesses, but is to quickly validate whether their product has any potential to use within their business. And to do that, he often needs to somehow seed a sandbox environment with realistic data that they can run realistic tests against. Now that process, because you're working with an external party, even if you build it in a sort of internal sandbox and very secure environment, it can take up to 6 months to go through all of the checks and security tick boxes and the vendor assessments to actually make sure that you can deliver that data set to that customer. That's a glacially slow period of time to actually run one of these quick evaluation tests. So what we did with them for this particular exercise was we created a synthetic transaction data set that they can now provision within 3 days into a sandbox environment and get their POCs running really, really quickly with new vendors. And that's just a total step change in the way that they test and evaluate new potential software that they can use within their business. So that's what I wanted to cover today. Hopefully that gives you a really clear picture of what we do, how we do it, and some of the applications of synthetic data and how it can apply to easing some of the regulatory burden you might have on your business.
Awesome.
I'm very happy to take some questions now.
Yeah, let's take some quick questions. Anybody who wants to get going? Just there.
Board member of the CDEI. I was just wondering, you mentioned the interaction with privacy law here. What has the sort of response and engagement been like with various privacy regulators around this?
Yeah, so the ICO is obviously the key one in the UK, and so they are very engaged. They now have a set of draft guidance containing information about synthetic data. We've actually sort of helped advise around that, but also there's other organisations in there as well, like the Alan Turing Institute, very technically savvy organisation advising around that. So there is guidance coming that will be specifically clear. As I say, it's already there in the draft guidance and it will be published very soon. Across the rest of Europe as well, we're seeing similar levels of engagement. In fact, the regulator for Danske Bank suggested they use synthetic data or look at synthetic data as a solution to some of their challenges they were facing. So yeah, we're seeing the regulators start to get involved with this.
Awesome. Anyone else? Question, right? We'll go Miro and then got a question.
Thank you. This is Mika Grosz from LSEC. One question I have. We use synthetic data especially to increase robustness of ML models. It's very helpful, or for anonymization, as you mentioned. One challenge we had is with the underlying bias in the original data. So if you can share, how do you deal or how do you mitigate the bias that it's not transferred to the synthetic data?
Mm. Would you mind explaining what type of bias particularly are you experiencing there in those data sets?
Yeah, just general, for instance, if you look at a customer profile.
Mm. So the idea with the synthetic data process is obviously you're kind of recreating, particularly when you're trying to anonymize data, in this instance, is to recreate the real data, warts and all, because often actually that's part of the assessment. If you can't get access to the real data, you don't know perhaps where the different biases are, perhaps where the dirtiness of the data is, the messiness of the input. So there's lots of reasons why actually kind of recreating a like-for-like synthetic version of your real data set is actually very good. So we actually find we don't get involved with trying to mitigate bias. We don't try and mess with the data ourselves. It is a potential future application of synthetic data to say, for example, well, why don't we, if we've got a heavily imbalanced data set, perhaps we've got 75% men, only 25% women, perhaps we can bring that to synthetically generate samples of women. It's a difficult problem, though, and our current advice around it is that actually it's an open research challenge to deal with bias using synthetic data, because it could end up like a bit of a whack-a-mole problem. You could sort of synthetically amplify the number of women in your data set, but they could all be from London, so suddenly you look like you've got a very southeast sort of centric female population. So it can cause more problems than it solves, and we believe that there's more research to do on that bias mitigation piece.
Awesome. I think we'll take one quick question. Was there a question from the front?
Yeah, I think in fairness around objects.
Okay, yeah.
My question was very similar, but it was really around the quality of the data and how do you ensure the quality of the underlying data. So I think it's probably a similar point that you're saying you're just replicating the data that was there originally.
Yeah, I'll repeat that. So how do we assess the quality of the synthetic data? And you're absolutely right. It's all about A/B testing, the real versus synthetic. So this all happens within our products. We have a battery of metrics we throw at the real data set and the synthetic. Because it's worth saying as well, we have a privacy mechanism called differential privacy built into every generative algorithm we use, and you can tune the level of differential privacy up and down. And what that means is you sort of increase the noisiness or the sort of clarity of the output. Now that will have the knock-on effect. If you increase the noisiness, you'll sort of drop the quality of the output because it will look further away from the real data, but you'll have higher guarantees around privacy. So it's a bit of a trade-off in that instance between privacy and utility. Synthetic data is the best way to trade off between that. And to assess the quality, you can look at things like how closely do the distributions match in the synthetic columns to the real columns? What's the mutual information stored between columns? Is that replicated? Or even within our product as well, we can run a simple classification task on the real data, and then do it on the synthetic, and you can see how closely the models that are produced from those two data sets are, how close they are for standard measures for accuracy, F1, precision recall. So there are some built-in mechanisms to get a good assessment of how close your synthetic data set is.
So thank you so much, Harry.
Thank you.
So our next presentation will be from Isabel Simpson, and it's on AI and data protection. I'm really super interested to hear about this, and she's from KPMG.
Hi everyone, good afternoon. So yes, my name is Isabel Simpson. I'm a partner at KPMG. I head up the data protection team for KPMG Law, working very closely with Leanne Allen, who was speaking to you earlier about the importance of trust within artificial intelligence. Now, this is a subject that is incredibly close to my heart. Before I was at KPMG and also in private practice at Clyde's, I actually worked in-house. I started my legal career in-house, working for a technology consulting firm that specialized in security, resilience, data analytics, and managing and exploiting information, working with brilliant data scientists who really were capable of doing everything. And actually, we had to look at whether there were ethical use cases for what they wanted to do. And that was before we had the GDPR lens and those really big enforcement fines around data protection law compliance. So something that I started off with. Now, as we all know, AI involves not only personal data, but all kinds of data. So why is this so important to data protection professionals who are really specializing in the protection of personal information? Well, whilst AI does use all kinds of data, I think there are two things that it's worth establishing at the outset, which is the majority of organizations are unable to separate their personal data from their other data. The majority of organizations have these data sets intermingled. So whilst they are applying one set of rules to the use of personal information, they are likely to be applying the same set of rules to non-personal information as well. Now, the other reason why it's so important to data protection professionals is because, quite frankly, it is very important to data protection regulators that those professionals are answerable to. So we can see here that there is a huge amount of guidance that has been produced, as well as by other bodies, but by the ICO in particular. And it's really important that organizations, when they are developing AI, are mindful of the guidance that the Information Commissioner has produced, and what at a high level that means. Why is the ICO producing all of this information and guidance? Now, our AI is a priority area for the ICO because of the impact or the potential high risk of AI to individuals and wider society. But what is really important is actually that if you combine the guidance the ICO has given, what you realise is that you have a transferable set of skills, assets, risk assessment templates that actually you can take and then add in what you need to do additionally to think about the other risks that are posed by AI. So if we take, for example, a data protection impact assessment, every time you're going to develop AI, if it involves use of any personal information, there is going to have to be a data protection impact assessment. Now, if you take that and you expand that to think about other pieces of regulation, then what you have there is you have an ethical impact assessment and something that will streamline your processes when it comes to artificial intelligence. Now, the ICO has detailed that their current areas of focus in relation to AI are fairness, which we'll go into in a bit more detail, AI as a service, AI and recommender systems, biometric data and biometric technologies, and also privacy and confidentiality in explainable AI. Now, the 2020 ICO guidance in this area is really key because it emphasizes the centrality of conducting and producing data protection impact assessments, the difficulties in respecting data minimization, the importance of the quality of the data set, which is something that we've touched on today, and also particular worries that derive from that fairness principles, and also the use of data exchanges and also synthetic data. Now, the ICO has released a number of key areas, a number of key papers in this area, which we've set out on this slide, and they provide a deeper, more practical guidance on how to navigate the issues that the ICO has also expressly identified. Now, away from the ICO, other key bodies are also recognizing the importance of data protection and privacy governance when it comes to developing artificial intelligence. The quality of your artificial intelligence will depend on the quality of the data. And there are a number of different emphases around data privacy within all of these different areas of guidance. The Bank of England paper states that managing data privacy, data access, and availability is a key element of any data governance framework, and so is ensuring full compliance with data protection and additional requirements on using customer data. We've also seen in the Centre for Information Policy Leadership report that the proliferation of AI requires effective data protection, and that current data protection measures provide quite a lot of protection, but they do require also flexibility and continued vigilance. We also saw in the same paper, and echoing what Sarah, Cameron, and Stephen have all mentioned earlier today, the importance of collaboration across disciplines and teams, and that is absolutely fundamental to a successful AI operating model. Here we've just got a couple of slides around the benefits and broader considerations for AI, which Leanne touched on earlier for your takeaway, and also this why now. And again, Cameron mentioned it earlier, I think Leanne mentioned it this morning. It is the difference between can we do it from a legal perspective and should we do it from an ethical perspective. Within the Bank of Organisation, the Bank of England organisational discussion points, we've got a number of different areas that they've also mentioned around privacy. So we've got integrating privacy into your existing organisational framework. We've got organisational nomination of centralised body to set AI governance standards. Now, within that, they say that there are a number of different skill sets that are required. It doesn't specify exactly which ones, but it's absolutely clear that privacy will be a key consideration and should be a key consideration for those other AI governance standards. Finally, we also have a reference to creation of an industry body for practitioners. And there we're looking at codes of conduct, auditing regimes, and also, again, building public trust in the use of AI. So just looking at a couple of data protection aspects of AI and why data protection professionals within your organizations are going to be very excited whenever you talk about the development of artificial intelligence. There must be a balance between the data required for effective AI and the data minimization principle. So from a data protection perspective, your data protection professionals will come to you and they will say, we can only use adequate, relevant, and limited amounts of data. We've got to incorporate that from an early stage. We've got to incorporate data minimization and embed that into whichever AI models you're developing. And that can be incredibly challenging when, on the other hand, you want to be collecting as much data as possible in order to create an effective AI model. Now, according to the ICO, that principle also includes not making unnecessary inferences around individuals. So that means that you can collect a large amount of data and make relevant inferences, but you need to make sure that those principles are considered. The ICO guidance also includes recommendations relevant to machine learning, for example, breaking up machine learning into training phase and inference phase, and limiting data separately for each phase. It also asks that we consider further privacy-enhancing techniques, like of which there are a number of examples, and the exact techniques to apply to a given use of AI should also be identified in a data protection impact assessment. Now, when it comes to the fairness principle, earlier, I think it was Sarah said, when it comes to AI, what do we mean by AI? How are we actually defining that? Well, when it comes to fairness, what do we mean by fairness? Because it sounds like an incredibly subjective term. Now, according to the ICO guidance on fairness, it means processing personal data must be fair. Fairness means you should handle personal data in ways people reasonably expect and not use it in ways that have unjustified effects on them. That isn't necessarily very much clearer, but you can take some inferences in that and then you need to put some rules in around it. So what does it mean? Fairness means that you need to ensure that the AI does not have a discriminatory effect. And now that means looking at data quality, particularly if you're obtaining the data from a marketplace or exchange, or you don't know what the underlying data looks like and how it was collected. You need to ensure that the data is accurate. And when you're looking at a really broad data set, how do you ensure the accuracy of that data? You also need to make sure that you're treating the data in a way that is consistent with data subjects, so with you or my reasonable expectations about how our data is going to be treated. So how do you do that? Generally, it's going to be content specific, but it is going to be linked to transparency, information notices, and when it comes to information notices, again, around principles of data ethics and development of AI, there is that explainability principle, which reflects the transparency principle within GDPR, privacy notices, and purpose limitation. Now, when organizations do not have access to a sufficient quantity of high-quality data, the quality of the data set is fundamental to the proper functioning of AI. So if organizations don't have access to that data set, then one of the recommendations is that a solution could be to limited access to data sets, could be an exchange or marketplace. Now, that raises a number of data protection challenges. So the first is the requirement to conduct a DPIA about those data sets, and that is with an unknown quality. So if you don't know where the data has come from, the underlying data, the way in which it's been collected, whether it's been collected with appropriate consent and so on, then a DPIA is going to be quite difficult to complete. Another challenge is around the ownership of the data, and that would need to be covered obviously in contractual documentation, but you also need to think about the implications of the individuals whose data may have been collected in the first place. You also need to think about data ethics and avoiding discriminatory effects, and again that comes to the underlying data quality, and you also need to think about any implications on international transfer of data as well. Exchanges might also be a way to repurpose data, but you need to be ensured that the purpose is consistent with the original purpose, because again, we need to avoid purpose creep and violation of data protection laws. We also need to ensure that sufficient notice is given to the data subjects whose data has been collected originally. Now, when we look at data protection impact assessments, or DPIAs, these are now really being expanded not only to cover data protection, but also to cover other legislation that might sit underneath data ethics. So if we go to the conversations that Leanne and I have every other day, it's not only around the ethical use of data, but there is an underpinning of legislation and regulation which will help you to use data ethically. But again, there is that question over and above legislation. Okay, now we've figured out a way that we can do it, then should we do it? Now, DPIAs will need to cover AI because it would be use of new technologies, and within there, it would need to state the legal mechanism and how you can justify using AI in that way. You also need to document how you're managing the risk posed by AI as well. And that is something that, again, when you're looking at your data science stakeholders, your risk, your compliance individuals, then they will help you to document how you manage risk. And that is incredibly important when it comes to accountability under GDPR and data protection. One of the most difficult areas around AI is this right for individuals not to be subject to automated decision-making without human intervention unless you have express consent. So if you are using personal information within AI, then you do need to make sure that if there isn't that human intervention aspect, that you do have express consent and that is adequately and effectively safeguarded. Now, whilst data protection and privacy is by no means the only area of focus for embedding ethical use of AI into an organization, it is certainly an important one. And it is part of a wider set, including things like data management, risk management, legal and compliance, customers, training and culture within the organization, and governance. And where we have seen the most effective embracing of ethical use of AI, it has been where the different stakeholders are brought together to develop the direct governance and controls. And that ensures that AI does not cause detriment to individuals or to wider society. And we've got some examples of some of these stakeholders here. So if you're not having conversations with all of these people in your organizations, then we would recommend that you bring these people together and develop a workflow and a process that makes sure that all of these voices have an input, that they can be heard, but you don't have to get them all in the room at the same time because you're going to struggle.
Awesome.
Thanks, Sue.
Is it okay? Yeah, great. Should we? So we take some quick questions.
Any questions?
I've got a very quick question. So it's very much from you see AI as an extension of the problem of data governance, right? There's a lot of different contributions from different speakers was about, in particular, the issue of fairness and bias, and the problem of being able to meaningfully assess AI bias without processing precisely the kind of data that GDPR would tell you not to. Have you seen anything like that emerge in your commercial work?
Oh, yeah, hugely. One of the things that we look at, and again, I look at together with Leanne, is how do you develop a framework to make sure that you're complying with the privacy principles, but you're still encouraging innovation. And I think that we're seeing a move, particularly in the UK, around certainty and having certainty of what you can do, and that should enable innovation. I think it's a slightly double-edged sword, but that's my personal opinion. But that's certainly what I think the ICO is looking to do, is to provide more certainty, make the rules even clearer, and then you can innovate on the back of more certainty.
Awesome. Anyone else? Got a question right at the back there.
Sorry, Walter McCann, UK Finance. So you talk about innovation and making things clear. Do you have any, that's one of the goals of the Data Protection and Digital Information Bill. I think I got that acronym that all right.
Yeah.
Do you have any sort of thoughts on whether some of the changes in there help with regards to building AI, doing training, etc., perhaps around purpose limitation, etc., or is it all a bit on the margins?
So I think the difficulty with the changes that were proposed, and I think in case anybody doesn't know, there has been an announcement that they might be rejigged and started again, and actually we might put everything in the bin and start a new consultation and try and be a little bit braver, I think, in some of those changes. So the changes that were proposed were as the result of a consultation which industry responded to quite nervously, I think. It was just after Brexit. The consultation paper came out. Data protection officers were very nervous about DCMS's questions around moving too far away from GDPR because there was a lot of fear around adequacy. And that means that what then has been produced and has come out has been seen as maybe a little bit nervous, and that's why it's now being re-looked at. Could it be stronger? I'm not sure that with the way in which it was changed, that actually it provided more clarity. And the reason why I say that is because just a few weeks ago, I think there were about 80 lawyers in the room, and we managed to get through about 4 of the clauses. And what did the changes really mean? So I think that if the aim is clarity, that there's more that should be done. So I think it's a really good opportunity that DCMS has at the moment to revisit that and see if they can be a little braver whilst still adhering to the data protection principles and obviously safeguarding adequacy at the same time. That's the challenge.
I think we're running over, so we'll have to close it there, but I guess you're around, people will be able to approach you. We've got some, thank you again, Isabel. We've got some, I think now we're going to move on to some fireside chats, and the first one is on culture, diversity and governance in AI, and our host is Simon Taylor from GBBC Digital Finance. I'm really interested in this. Simon, I'll leave you to introduce the other.
Thank you so much, everybody. Yes, very briefly, GBBC, if you haven't heard of us, Digital Finance is an industry not-for-profit designed to create standards and best practices for the adoption of digital innovation in financial services. So very relevant to this audience, I hope. And we are going to be joined by Dr. Gavin Littlejohn, who I hope is familiar to many of you, somebody I would lovingly call a gigabrain, entrepreneur and chair of the Financial Data and Technology Association, and Dr. Adrian Weller from the Alan Turing Institute, which I think the gentleman from Hazy did mention. If you enjoy this conversation, please do check out FinTech Brain Food, which is my personal blog where I rant about all these sorts of things. And I hope we can have these guys join us remotely. So please do join us. And I will open my drink whilst I wait for them to join and see them on the screen and hope the technology works, because they are joining us remotely. Because what's a pandemic for if you can't go to a conference and have somebody with a slight Zoom delay? That is what things are all about. So, Adrian, Gavin, can you hear me? Can you see the room? Thank you, guys. All right. Do you... First, I'm going to come to Gavin. When we had this conversation a little while ago, you sort of mentioned that there were several serious issues that we needed to really start to get through. But the one that really stuck with me was this idea of there being an MOT. Or was it you, Adrian, actually? Sorry, that I went to Gavin first. Let's go to Adrian. Was it you or was it Gavin that mentioned the MOT? Sorry, can't remember.
I'm not sure. It's a good idea. If whoever suggested it. Should I just speak to it for a moment?
Was it Gavin?
It was.
There you go. Gavin, can you explain what you meant about the MOT around the usage of data?
Yeah, I'm not a data scientist, but a few years ago, contemplating the development of open finance and the fact that increasingly there would be a variety of different data sources, potentially from different regulators, using data from market verticals under different regulators, that we might need to think about explainability and testing. And one of the things that was set up in the Smart Data Foundry was this idea of algorithmic bias test laboratory where companies that are developing algorithmically driven distribution or product manufacturing could test whether or not their process of developing those algorithms may have introduced some bias or discrimination that is, I guess there's two different types. One would be in breach of law, and the other would be, I would describe it, if you were comparing it with an MOT, it would be more advisory rather than breach of law. So, you might say, well, this you cannot do, and this you maybe should not do. And if your customers found out you were doing it to them, they might think worse of you for having done so. And then the company could then go away and correct their delivery and then bring it back for retesting. And the idea here would be that this sort of process was done on a regular basis, perhaps annually or perhaps even more frequently at each significant release of the algorithm. Adrian, maybe you can build on that concept.
Yeah, I was going to say, Adrian, do you want to just build on that idea and sort of talk about a little bit about why there might be a need for such a thing as well, given every time you enter this subject, it feels like you can't help but be drowned in the complexity of it.
I'll do my best. Can I first check you can hear me okay?
Yeah.
Yes.
Perfect. I think Gavin expressed it very well. Actually, I might even go back to what Isabel was saying before. I think that whatever governance system we put in place, we definitely want to be pro-innovation. But I'd suggest that the right way to be pro-innovation is to have good safeguarding rules, because then we know that systems which are developed and deployed will be broadly good for society. People need not be worried about them and can embrace them properly. So that's one reason we have MOTs for cars, to ensure that they're operating successfully on the road. I think that is a good analogy, but I just want to highlight, I want to build on it a little bit. I'll highlight one set of difficulties and also a way in which we might want to extend the analogy, because I think it is a good analogy. So one is, Gavin, I think, very rightly talked about having certain kinds of tests for bias or discrimination. Before we can do that, we have to figure out what kind of bias or fairness we think is appropriate in a given situation. And there's some way to go, I'd suggest, for us to figure out exactly what that should be. It's going to require consultation and thinking carefully about it. We're also going to need to ensure that whatever it is we think is appropriate can be tested for. And there are subtleties and complexities about how you're going to test for those things. So one topic we might come back to would be, should we have certain kind of test data sets that everyone should use, recognizing that if your algorithm passes those tests, that could be a necessary prerequisite to them being deployed, but shouldn't necessarily be sufficient, because maybe the exact algorithm we're deploying might affect people in a particular subpopulation, so that the standard data set maybe isn't enough to really test for that sufficiently. So that's one interesting set of topics. Another thing that I would like to do is, building on this, I think good MOT analogy, is that for driving cars on the roads, we have MOTs for the cars, for the systems, but we also require a driving license for the human operator. And I think that as we're thinking about the sorts of machine learning systems which are likely being deployed over time, they're quite complex. And as well as having requirements on the systems themselves, we may well want to require training of the users and some sort of certification of users to know that they understand what they're dealing with and can use their systems effectively.
Mm. Gavin, did you have any reaction to that? And I remember you sort of mentioning that there are examples where bias is good. There are examples where bias is too granular. There are many ways in which it's hard to deal with that subject in and of itself, never mind some of the other challenges of data sets more broadly.
Yeah, I mean, there's a whole raft of directions to go in here, but firstly, there's examples where society and the law are quite clear. For example, discriminating against somebody on the basis of their name or of their religion or there are a whole raft of other things which I don't need to explain to this audience. But there are other examples. For example, you can use age in assessing the cost of motor insurance. And I think as a society we need to begin to have a more grown-up discussion about why various things are the way they are. Insurance is risk pricing. There's a whole range of other things in investment and in lending which are risk pricing. And we've got to think very carefully about financial inclusion. If we have too much detail, for example, in life insurance, the point of the fact that that Adrian and I we pay money into a pot and we don't know what's going to happen to who, and we kind of pay roughly the same amount, and then at the end of it we draw a lottery ticket and we see how we get on. I mean, that if you end up with really detailed stuff on, like DNA analysis, and some people get priced completely out of the market, you have to think about the societal good of what insurance means, and also in lending there's a whole raft of sections of society where the current scoring models leave them behind where they could reasonably afford it, which is unfair. So I just think this is a very complex subject, and it's not just brilliant brains in data science, but the deployment of equally astute people in thinking about how we construct a discussion on what's acceptable and what isn't. And obviously those things have to go into policy, and then after policy there has to be regulation. And there's a long way to travel here, particularly as we now get into a situation where we're combining, as I said earlier, data assets from multiple sources, some of which is in GDPR, some of it isn't, some of it will be in things like telco vertical combined with financial vertical, and those things have got different constructs of how we protect the customer. They've got actually completely different liability frameworks, and that's not acceptable in any way, because when the customer has something go wrong, they won't know how to resolve it.
Yeah, it's a really good point. There's a lot of legacy existing regulation policy rules around how medical data is treated and how it can be shared for research purposes, how financial services data is shared amongst banks to prevent fraud, for instance. This data that's personally identifiable is already shared for very, very, I think, socially legitimate rules within existing frameworks, and that is complicated as you go further across border. Adrian, how do you think about sort of beginning to tackle this challenge from a policy and a regulatory perspective? Is there a way that we can make more of this and start to be thoughtful about how we get everybody engaged and close knowledge gaps?
First, I completely agree with what Gavin said, in the sense that we need these problems are really challenging and difficult, and we need a broad set of expertise. I think technical expertise is important, but also, of course, ethics, policy, law, domain expertise, representatives from affected stakeholder groups. We need people to get involved. So one thing I'd like people to take away perhaps from this session is I really encourage anyone who's interested, please to get involved. But when you ask how we can make progress on this challenge, I think we've heard in the last couple of minutes at least two different challenges. So one challenge that Gavin focused on is what really, can we sharpen our pencil on what we as a society think is appropriate and reasonable? So for example, in insurance, do we want to stick with this sort of pooling model where people who actually may have quite different health risks that can be predicted with reasonable precision, should those be charged the same premium or not? I think that's an important question, which you can frame as an ethical question, but you can also frame it as a sort of political question with a small p. Whatever decision you make about this will be good for some people and bad for others, and we together need to figure out what we're going to do. Then you raised another important question around data sharing, and that's a whole big topic in itself. Of course, people have reasonable concerns about the sharing of their data. My sense is that for the most part, people don't have a good understanding, because it's complicated, about whether sharing their data will be good for them or bad for them. And loosely speaking, I think most people feel like, oh, well, if it's going to be okay for me,
then I'm okay sharing my data. But it's very hard for people to figure that out. And
people will do anything for free Wi-Fi at an airport, won't they?
What's that, sorry?
I said people will do anything for free Wi-Fi at an airport, won't they?
Well, I think it's a very interesting point. We're sort of in a convenient society. We've all got used to doing the easy thing because it is so convenient. If we can get something for free by clicking something, most of us will do it, even if we're giving up quite a bit, and we sort of just like to pretend that any associated problems will go away. But I think most people would like to think that it would be nice if there was some governance framework in the background that was helping to take care of people, but that's complicated to organize. I'll just highlight that one that there's a whole that there are some notes of hope here in that there are privacy enhancing technologies that have been touched upon earlier, things like differential privacy or secure multi-party computation, newish methods which give us a toolkit of approaches which can help with enabling productive models to be learned and deployed even without sharing private data. But that doesn't simplify things. If anything, that just makes it a bit more complicated to help try and figure out exactly what we want and what's okay and not okay.
Yeah, trying to increase the cognitive load on the consumer is a difficult task. You have to become your own data guardian is a tough ask. Gavin, what are your thoughts on some of the things that Adrian was sharing there?
Well, I think we're aligned on the need for broader societal engagement and the risks. Over at the Financial Conduct Authority right now, they're just concluding the Open Finance Policy Sprint, where they're, the topics of the day will be including cohesion and liability frameworks. They'll be looking at how companies, regulated companies, have the right of access, and they'll be looking at how end customers can control consent across multiple paths. Many of the people in the room and listening online will be interested in things like embedded finance, where a company can have multiple roles and the flow of data and custodianship goes across multiple platforms. We need to think about, for example, in the earliest phase of open finance, open banking, which was just payments data, PSD2 gave the end customer a right to compensation if things go wrong, whereas GDPR only provides the regulator with the ability to fine the culprit, not to compensate the victim. We've also got in GDPR, there's an inadequacy of coverage for businesses, whereas under PSD2, businesses are covered. If we start to extend that into other areas and we start to combine the data, that and the fact that in PSD2 it established a principle that the data could only be shared to a regulated actor. Now that might not work in areas beyond financial services. I know that's a tougher question, but those companies that applied to be in the market had to show that they had adequate liability insurance, what we might now refer to as cyber insurance, to participate. So making sure that, if you're going to build a model that's based on looking after the victim rather than punishing the culprit of a data misuse, data breach, data AI misuse, any of those things need to be kind of brought forward and more adequately tested and thought through. At this moment in time, there's a real sort of dearth of scrutiny on those big issues.
Gents, I'll open this to both of you. You sort of tiptoeing around sort of the where the regulatory authority comes from and that sort of overlapping of jurisdictions. What are the challenges that creates for businesses in the financial services industry when trying to actually innovate itself, and what can they do if you found yourself in one of those businesses? I don't know if Adrian, you wanted to jump off and then Gavin follow. It's up to you guys.
Maybe I'll let Gavin go first because this is, I think, more about how industry sees things. I'm happy to comment. I think you're muted, Gavin.
industry developed in this domain using a combination of data from multiple sources and algorithms in the unregulated space. So the use cases drove the fact that it needed to be regulated, and then of course, because innovation happens quickly and law changes slowly, there needs to be a real evolution in the way that we think about this, which is to create the right structures and then empower the regulators to keep making adjustments in light of market changes. Otherwise, there's always just this issue that the authorities are playing catch up in a game that they'll never catch up in. So I'd like to see, from a top-down perspective, government, not regulators, but government, properly engaging with the major stakeholders, including the regulators, to design a data ecosystem which enables identity, security, using the same technical standards where possible to enhance the security and the interoperability, and for those methods of exchanging data and controlling the consent flow across multiple platforms and combining data from different places that are actually part of a thought through process. At the moment, they are part of a hodgepodge of different rules and regulations that have emanated without what I would describe as an ecosystem design strategy. They've emerged naturally addressing different problems. But now we can see very clearly that those things are all connected, and one's ability to identify oneself and be empowered through data and control how that data gets used are essential in a modern digital economy. And no country in the world yet has a full grasp on this. I would look at places like India and Brazil and Australia as some of the most forward thinking. And we need to kind of observe what's happened in those markets and really get to grips with it here.
Indeed, the CDPR, the Consumer Data Protection Right, which sort of also is it's like if PSD2 and GDPR had a baby and was done 3 years later, is kind of my loose way of thinking about those things, but with more of an Australian twang. Adrian, what are your thoughts? I think it was you that raised this question as well, sort of leading on to that point. Given the complexity in this situation, if something does go wrong, who does the consumer complain to? And how do you think about that? And how do you think about the challenges sort of that are a part of all of the consumer side of it?
I don't have any simple solution for that, I'm afraid. I think it is a problem. Obviously, it's tied to the issue you raised, which is that multiple regulators are involved. Well, maybe what I can do is, sorry, I'm not going to directly help, but maybe I can just highlight some of the reasons why this to pile on our discussion about some of the challenges and why I think it's going to be difficult to achieve the goal that Gavin described, that I completely agree we want to try to establish, but just to note why it's going to be difficult. So one is, as you've pointed out, multiple regulators are involved. Two, that we've already covered that the issues of bias are tricky for us to figure out together what exactly that means, what's okay and what's not okay. I'd highlight that lack of clarity over exactly what we want to do there is also very much true often for explainability. So explainability and fairness are two terms which are often thrown around, but it's often unclear exactly what they should mean. We need to think very carefully about what we want in a specific context. So for explainability, what precise information do you want for whom in that setting? And can we have some way of measuring whether that has been delivered in an effective way? And one more thing I'll note, which I think is really an important challenge, is that, as has been mentioned, no one really knows exactly what the right way is to govern with respect to these challenges. Wonderful that some other countries are doing good things and we can learn from them and learn with them. But as we move forward and thinking about impact assessments, I think it's really important to find a way for government and regulators to work constructively with industry to explore specific proposals, engaging domain experts, diverse affected stakeholder groups, interdisciplinary experts, so that the incentives are there for companies to think carefully about things like impact assessments without fear of getting their wrists slapped or getting bad PR. So that requires some careful thought, but if we can get that right, that will really enable progress at a faster pace.
Well, indeed. I mean, this has always been the challenge, hasn't it, as we've seen in Gavin in financial services with the regulatory sandbox that the FCA created. Some of the larger firms were quite tepid about being involved because if they did share something that was innovation, the fear of enforcement action always follows.
One entertaining notion would be to have the Prime Minister require departments of state to work together. I'm not sure how well that would fall, but think about DWP looking after pensions dashboard, Her Majesty's Treasury looking after the FCA, Bank of England and the PSR. I think there's a dotted line from the ICO to, is it BAYS or DCMS? Certainly BAYS has done the smart data initiative and done the consultation on that, and DCMS is looking at the government's digital data strategy and digital identity. I'd be really delighted to get those departments of state in the same room and go through these issues and try and think about some logical structures of what the key market requirements are and what the characteristics are before we get down into what do the regulators themselves think. The regulators, of course, are key stakeholders and highly knowledgeable, but and then even if you go beyond the UK, how does the UK interface with the rest of the world? We're moving data portable, payments data. There's a whole bunch of stuff that happens across markets, and starting to think about improving interoperability of these key concepts, is a essential part of growing economies in a fair way and not leaving ourselves with intractable problems, legacy problems in the future.
Oh, absolutely. Well, and gents, I have plenty more questions and loads that I could get through, but I do want to open this up to the audience. Since we have you for a few more minutes, I'm going to take a second and just see if anybody in the audience had anything they wanted to ask the gentleman in front of us whilst we have a minute. If not, I might ask you one more question. I'm going to give it 5 more seconds to see any hands. No hands. Everybody's timid. These guys are clearly way too brilliant for us. All right. So. Gavin, I want to build on that ecosystem point you were sort of making there. That the reality is we live in this interconnected world. Data localization is increasingly becoming a requirement and making innovation harder. But I want to come to Adrian and just give you some thoughts to leave the audience with. What do you think the key areas we need to address are across the whole subject in order to start to make meaningful progress? I think the ecosystem piece suggestion from Gavin is one really good one. Do you have anything that you thought might be helpful for this audience to think about?
I'm not sure I'll add anything new, but I'll try to summarize succinctly some of the key points, I think. We've seen principles from our government, and actually lots of organizations have come out with principles for how we should think about these issues. And they typically involve all kinds of good things, like explainability and fairness. My first point is, those are good things, but it's often a bit unclear what they really mean. Mm-hmm. And I think we need to think about specific settings and think about, in those settings, how are we going to figure out what do we really want to require for those particular ideas, and how are we going to deal with inevitable trade-offs that occur. So as an example, there are calls for transparency, there are calls for privacy, and you usually can't have complete transparency and privacy, obviously, at the same time. So how do we deal with those issues? And then I just add, again, that these issues are complicated. We need to involve a lot of people. Please get involved. And together we can try and work through. And I completely agree with Gavin's point that if we can find better ways to coordinate across government departments and regulators, that would be really helpful.
Yeah. Gavin, passing thoughts for the audience?
Yeah, at the end of the day, the people that matter are the small businesses and consumers that are getting the benefit of practical data science to help them navigate increasingly complicated digital world, and where in certain situations, computers are really good at doing dead hard sums, and human brains can't compute all the data. So we do want to harness the power we've got in front of us, and we just need to be mindful of doing it in a safe way that enables innovation and provides clear guardrails for the industry developing these things, and that requires coherent public policy.
Here. Any last questions from the audience? If not, I'll thank the gentlemen for their time. Thank you so much, guys.
Thank you.
Thank you. Thanks. Awesome. Thank you for that. So we're now into our final session, our final panel. Final Fireside Chat is on implementing ethical AI with a view to the C-suite. And our host will be Philip James from Ethershed Sutherland. Come up. Is it Philip? Shall I leave you to introduce the others?
Where do you want us?
Anywhere you want.
On the end here so I can see you.
Do you see that I allowed natural selection to where people are sitting? It's not AI generated. We've only got, I think, half an hour, which in some ways is a long time, but talking about these topics is short. So my introductions are going to be this. I'm Phil, this is John, and there's Jessica.
Hello.
You can read the profiles at your leisure, and you can see their titles there. But what I can say is we're very honoured to have both John and Jessica speaking here. The title of this session is Are we embracing digital ethics as a strategic C-suite issue and business enabler? And you could turn your minds to that question now. But before we sort of get into it, I think a nice place to start is, without duplicating what's been said, based on what has been said today and what you've heard, is there any particular themes that you wanted to comment on in that context from the previous sessions?
Well, I think it's been a learning session for me, actually. It's been an absolutely fantastic conference so far. I know I've been listening and learning as I've been going along. So in some ways, I'm happy to see how the conversation progresses. I think in terms of the actual themes themselves is AI ethics a matter for the C-suite? Absolutely. I think there's lots of good reasons for that being the case, and it's something that we can discuss further, I think.
Adrian touched on this a little bit in the panel before, but it was something I wanted to raise anyway, and I think it has been a theme of the day, which is where are we going with regulation? I think it's very clear that there is something of a tidal wave of regulation coming around the world in this area. It's perhaps been a long time coming, and you can see now how it's starting to pan out. And I think this is interesting because in a lot of sectors, you don't see something like ethics being explicitly embedded into regulation. This is really unusual what's happening here. I certainly haven't seen it before. I've worked in energy, in telecoms, in fintech, and this is something quite new and different. And I also think it's different because a lot of businesses that I speak to and hear from, and as well as being on the advisory board of the CDI, I was also very privileged to work with the FCA and the Bank of England on their AI public-private forum. And the conversation kept coming back to this fact that actually this is an area where business wants regulatory certainty. It is an extreme impediment to innovation at the moment that you don't really know where the lacunas in law are, those grey areas that have been spoken about by several lawyers today. So actually there is a desire for that clarity, which I think would be one of those enablers that we might talk about for the C-suite.
Thank you very much. Now conceptually, obviously from ethical perspective, you can really, you can talk about it conceptually for a long time. But I suppose from a practical perspective, I mean, from the clients we work with, for example, often it's like, well, thanks for that, but what do I do? So from an IBM's perspective, and also just from a technology vendor's perspective, And also from a customer perspective, what ways do you think there are that you can implement in practice to help tackle some of these things, even though, of course, the concepts might be quite complex?
That's a great question, and I think there are various ways in which you can tackle that, and to some extent that will be reflective of the values and the approach that any organisation actually takes. And I think organisations and CEOs in particular will have a vision of where they want their company to go, and how they deal with that in a practical sense. And some organisations will be further advanced than others, and some may well be sort of looking at regulation, which is coming down the line. As Jessica says, hasn't been highly regulated to date at the moment, but to what extent can you repurpose the regulations that you already have to comply with to this new era of AI regulation? So in practical terms, you can look at all your various stakeholders across the organisation. You're going to have technical stakeholders on one side, so for example CTOs, CISOs, chief data officers, and so on, chief information officers as well. And on the other side, you're going to have other members of the C-suite, so for example in finance, in general counsel, legal, chief operating officers, and even the CEO themselves as well. And how do you effectively align those interests across the organisation? So you're going to, to some extent, there's going to have to be some sort of tone from the top. We've talked about top down.
I'm going to challenge you here. So every government and organisation has a policy, and they've got all those stakeholders. But let's say the policy, often they're like 5, 10, 15, 25 pages long.
Yep.
And they're probably written by lawyers, hopefully not. But how do you translate that actually into operational practice? Because I think that's the challenge.
Mm-hmm.
I think there's the ways to innovate in actually conveying that message, like you have like nudges, so notices and things that bring those things to people's awareness when they're doing product development. Because I think a lot of the ways in which we've traditionally done risk governance aren't necessarily, and we have to be honest with ourselves, aren't necessarily always effective as they might be. So actually the technology is innovating, but I think the risk governance needs to innovate. So Jessica, how do you think we might do that?
Yeah, it's a brilliant question, because I'm sure everyone in this audience remembers, if you went to one of these conferences 3 or 4 years ago, the entire day was about what the principles should be. And these big esoteric ethical discussions. And now in the last 2 years, the entire conference is about how do you implement them, which is good. This is the right direction of travel. I think, so one of the things that I think the CDI is really good at, and they were a world first organization when they were created in 2018. And they have been brilliant at not just talking and thinking about policies and principles, but really moving that conversation on around implementation, not just how government does it, because of course they sit within DCMS, but also how businesses do it. So I'll give you an example. So they're doing a fascinating piece of work at the moment on AI assurance, and they've produced this AI assurance roadmap. And if anyone is interested in this, I know they love engaging with industry and all sorts of organizations, so do get in touch with them. But the whole focus of this effectively is to create a toolkit and an ecosystem for companies to implement in exactly the way we're talking about those principles. And it's an absolute plethora of things that you can do. We're talking about impact assessments, auditing, bias tools and techniques, lots and lots of internal process and governance that you can use. And literally, the ICO also did a little bit of this with some of its toolkits. So we're getting really granular now. And what's interesting is we're using a lot of very established techniques. Lots of these things are already used in risk management. Lots are already used in auditing and impact assessments. So the clever part is going to be, how do you apply these to AI? But I think this sort of program, which will professionalize, if you like, the way that we do AI. There's no centralized accreditation body today for these sorts of products. And I think, in the AI strategy, the government talked about the fact there should be one. It's in the AI PPF final report from the Bank of England and the FCA. And I think it is generally considered this is going to be something very important. And this sort of AI assurance piece, this implementation piece, is also embedded in the new EU AI Act. So if you haven't gone through all 300 pages of that, have fun. But it is in there, and it's fascinating reading.
Thank you very much. I was harking back to the comment earlier about chatbots, and I was having a conversation with someone earlier about, our chatbots as regulators, other AI things. But I think this is where, and I'm sure, John, you would agree with this one, in terms of the terminology used for a product doesn't mean that defines whether you regulate it. It should be technology neutral. So obviously, when people are trying to get investors involved, they'll go, oh, it's got AI, it's got blockchain, give us lots of money. Actually now they might be rethinking it, going, oh, actually that's a regulatory nightmare, because they've then got to navigate all the AI regulation. So, I mean, it's interesting to see Hazy, it's a great explanation of actually how you can navigate compliance and actually avoid the burden of compliance. But actually, if you're getting outside GDPR by using synthetic data, you want to use innovation, but also the trick is obviously if you can avoid that compliance burden or shift it onto someone else, I mean, you can't always do that obviously, but that's the ideal. Just because something doesn't have AI on the tin doesn't mean you shouldn't apply the same process and policy towards it. You have a process and a routine, and people should follow those. And actually, if you're using AI really innovatively, you're not just developing the products that might have the bias in it. You're using AI to, actually, you talk about data privacy impact assessments. You can have an artificial intelligence DPIA tool that actually, the governance is taking advantage of the AI technology. So you sort of, turn the gun back on itself a little bit, which I'm sure that's already being done, but it's that is where we're really going to, I think, make some great improvement.
Yeah, and I'd absolutely agree with that. And I think, as Jessica says, there is a plethora of tools in the toolbox available to professionals in this area, whether it's executives or developers and so on. And there's plenty on the market to look at. But ultimately, when you look at your AI applications, it's not necessarily it's the AI application which is the issue. It's the use of that AI application, and that has to be sort of governed by an ethical framework. And how do you, what is a practical thing that organisations can do? They could set up an AI ethics board, which effectively outlines the principles and communicates those down to throughout the organisation. It's an issue of ownership, it's an issue of culture, and it has to align with the company's values. So I think this is the kind of steer that you'll get from the C-suite and then the CEO in particular, and this might be driven by consumer expectations, by what society requires, and also by investors as well. Consumers are more likely, or there's certainly a large section of consumers who are more likely to engage with an organisation which demonstrates that it has an ethical approach to its business practices. And I'm sure some of you have been following the COP27 discussions recently. There's a discussion about greenwashing. The idea that you are saying that you do these things, but you don't actually do it. Companies will be found out about that, so they have to be able to demonstrate that they are conducting their business in an ethical way. Will the term AI washing, for example, become common usage? Because people will start to realise that if they consider that they are getting unfair outcomes from decisions which are made by machines effectively without the appropriate governance and human oversight, then that could well be a disadvantage to that business and really impact on the reputation as well as the revenue.
Yeah, can I come in there just because I agree with everything you're saying, and it's interesting you mentioned COP, because if you look at the journey that ESG has had over the last 20 years, this was something which, I don't feel too bad saying this, I don't think it was taken that seriously for quite a long time. And now you're having reporting requirements, you've got shareholder activism, you've got investors, who really want to know about this, you've got consumer groups, you've got, governments now who expect reporting against this. So actually, if you look at that journey, something that wasn't taken terribly seriously, I can see an absolutely similar journey evolving for this area. But I think the problem is, and actually, John, you may have done this research. IBM did some brilliant research, which said that 50%, this was from last year, 50% of companies now have the policies, but less than a quarter of them have implemented them. And actually, Accenture did some similar research, and they found that 94% of C-suite members that they spoke to actually said they were struggling. They used that word, struggling, to implement them. So why is that happening? And I think partly it's that the willing is there. But I think partly this is also to do with skills. So, you don't have ethicists on C-suite boards at the moment. It's not a job. You might have people who have that in their sort of, in their repertoire, but it's not something explicit that's there. So you spend a lot of time trying to work out where these things sit within a company. Does it sit within legal? Well, lawyers will tell you it's not their job to be ethicists. Policy people, they'll tell you what the law is, but, ethics, if you like, starts where the law ends. And so you quite often have a difficulty fitting it in within a company. And exactly as John says, it all needs to come down from the top. So, you need the leadership to say, yes, this is something we're doing. But then you need to think, okay, do our model risk management people know how to do this? Do our lawyers know how to do this? Do our product people know how to do this? And then I think it becomes complicated for companies, even if they want to do it.
I think, just going back to that report which you referenced, it's called AI Ethics in Action, produced by the IBM Institute for Business Value, and I would recommend reading it.
Very good.
And but there is a gap between intent and action. So of course, the key issue is how do you implement this in a practical way. So I think look at the structures that you have in place already, the roles. This is an issue of horizontal application right across the organisation. So it does affect those technical and non-technical roles. Understand what the responsibilities are, get the buy-in from the staff, look at the development of the applications, what their use and outcome is, whether they provide good for the society, for the consumers and so on. Can you measure that? Is there a measure of success or a KPI or something of that nature? Because you really need to have concrete evidence. And if the company is seeking investment or it's listed on in the markets, then they can demonstrate.
And actually on that point, I mean, interesting point you raised, Jessica, about where as a lawyer where the lawyer's job begins and ends, and actually I think the lawyer's job, and it always has hopefully gone further than that. I mean, obviously it depends, but with ESG now, of course, being so front and centre, and it's now not just a nice to have, it's a legal requirement, and there's the societal and governance aspects of that, as well as the environmental, which all feed into ethics. So to one hand you say, well, it's not necessarily law, but actually in some respects it is, and actually there is also from a reputation management perspective, whether it's defamation, you meet defamatory of individuals as well as of products, and also product recall. I mean, anyone who's been involved in product recall knows how expensive that is, and when you're using AI tools and technologies, if you have something that has a bad result, you multiply that not just tenfold, but I mean potentially infinityfold. So actually, if you're developing those types of products, unfortunately or fortunately, you're going to have to do a lot more compliance and testing and consultation and trials of those and sandboxing. But if you do that well, then you're going to have the most fantastic product. But you have to recognise there's going to be a lot more effort that's going to need to be put into it, because otherwise you're going to be challenged on that. And from a reputation management perspective, obviously boards, hopefully, and certainly chief marketing officers and marketing directors understand that. They may not necessarily get ethics. Obviously, a lot of companies do, but actually, if you're having challenges around business cases, reputation management and risk governance is a much better approach to take, rather than just saying, knocking on the door saying, I really want to talk to you about ethics.
Yeah. I think that's a really, really good point, because a lot of these concepts, as we said, are quite unfamiliar to C-suites today. You go in and you start talking about there are 21 definitions of mathematical fairness, and you're not top of the agenda, unsurprisingly. But exactly as you say, Phil, I think you talk about things that are familiar. Risk management's a really good example, where they say, okay, I understand that. Ethics is a form of risk management with regards to my product suite in AI. And you start to have a very different conversation. So I think you're absolutely right.
Another point I'd make in connection with that is actually, is it worth the investment? So what do organisations, leaders have to put in to get a good result out? So clearly there's things to be done about education, about business practices, policies, processes, guidelines and so on, standards. But I think a lot of it's down to people. Where do you get the talent to actually manage this, to people who can understand and explain it? One of the key principles of trustworthy AI is explainability, often quite a difficult thing to do. So getting the investment in the people, I think, is absolutely essential, and recruiting and retaining talent that actually understands this and can translate it into, usable terminology and make it understandable for not only the company internally and the investors, but also for the wider customer base as well is really key. And I think, one of the interesting things which came up in that particular study we mentioned earlier was the lack of diversity in the AI teams, and what can, are there voices which are underrepresented in decision making, whose views aren't necessarily taken into account when models are being developed. And I think so, recruiting the good people and recruiting a diversity of talent, I think, is absolutely key.
I would absolutely echo that. I mean, the statistics, again, you go to these conferences for 5 or 10 years and the statistics just aren't getting better, which is extremely depressing. And I have not heard anything in recent years where I've thought that's going to really be impactful. There's a lot of different suggestions that are going around, but it's depressing. But I do think, just coming back to this theme a little bit of how do you create a bit of pattern recognition in the minds of the C-suite for this, so that it doesn't feel so unfamiliar. And a lot of the conversations that I hear from businesses, they have great success by saying things like, okay, how well did we as a business predict how much the World Wide Web was going to impact us and our sector? We didn't really. How much did we anticipate digital was going to impact our sector? How prepared were we for the impact of GDPR, even though we had 10 years seeing it coming? And the answer is always, we didn't really get ahead of that. And given...
Have we got 5 minutes in total? Or 5? So that's including questions?
Are you guys happy to sit here for another 3 minutes? Yes.
Okay, yeah.
Of
Well, they're nodding.
They have to nod. I'm looking at all of them.
Yeah.
No, but I think that sort of pattern recognition actually now to say, look, you thought all of that was big. Get to grips with AI because it's going to change everything.
Yeah.
So I've got to give a shout out to Tech UK actually before we finish. So Tech UK, a fantastic organisation, you're probably all members. They actually do a digital ethics summit every year, which is in December. So please go. But when I asked them this question, I said, I'd love your views on this because you really are the voice of industry on this. And they said, look, our message would be if you're going to use data as a company, which you are, and you think you can do it without having an ethics policy, you can't. And the sooner you get to grips with that, the more competitive advantage you're going to have.
Yeah, absolutely great. I was going to pick up on some of the great points Isabel made on her AI and data protection talk, and some of the tools that are used. I'm slightly biased because I do data privacy as well, but it's absolutely right. They're transferable tools and skills. And there's also some case studies. There's actually a particularly good one that must be regulators all over the globe, but just as an example, the ICO issued an opinion a few years ago in Bridges versus South Wales Police, and it was all about the use of facial recognition software. And actually, if you on a cold night when you've got nothing else to do, it's raining, do a little search on that and have a read. But it's a really good sort of case study about the absence of documentation, having not done an impact assessment, not having considered whether there are alternative means of achieving the same aim, etc., etc. And actually, a lot of it may have been if they've done an assessment, and actually even if the regulator disagreed with it, they would have been in a much better place. But although it's in a GDPR context, it's actually I'd say it's a fantastic blueprint for the sort of thing that you should be thinking about when you're applying AI technology. There's one particular great bit of software which obviously you have facial recognition and everything, and I think one of the best examples I've come across is that from a marketing context, they want to sort of see what people are coming in and out of shop. Yeah. And they thought, well, actually we don't need to read their faces, we're going to read their shoes. And from the shoes they could actually determine a lot about the customers without necessarily doing the facial recognition stuff. I mean, John, your shoes they might not want to see, or mine even. So
it's interesting. I mean, IBM as a policy decision made decision not to offer any kind of facial recognition capabilities in its applications and software. And I think facial recognition is a really difficult area in terms of what particularly potentially nefarious uses of that information, as well as possibly accidental inferences as well. And I think understanding those impacts and really having a deep sort of analysis of what the potential outcomes for individuals are is just so important. And if something doesn't feel and sound right, do you necessarily want to go ahead with it? Now, the
problem is I hate interrupting you because you've got so much great stuff to say, but I also would like to open the floor to questions. So just to see if anyone has any questions. I know it's kind of late in the day.
Absolutely. Everyone wants to go for their tea.
Thanks. Do you want to just say your name and where you're from?
Of course. So I'm Angus and I'm from Simmons & Simmons. So if we're thinking about the C-suite and the role they're meant to play in the implementation of the ethics policy, what sort of information do they need? Actually, maybe going back a step, what should their role be in perhaps an oversight perspective? And then what sort of management information do they need to back those decisions up? And then what sort of questions should they be asking?
Okay.
I mean, go for it.
Well,
you've done this right, so you go for it.
Well, I guess to some extent what the C-suite and officers who work to them need to understand is really risk. They may want to define or redefine their risk appetite, and that could be a statement which they publish internally or even externally, so people have an expectation about really what the outcomes are. I think understanding what data is being used, where it comes from, and what the outcomes are of the processing of that data is important as well. How do you manage it? Sorry.
I was going to say metrics. So there's a really good example. If you ask compliance, can you show me all the DPIAs that we've done this year?
Yeah.
And there's one, but you've rolled out 25 products.
Yeah.
You're like, So sometimes it's the absence of things, not just high numbers.
Yeah, and I think things like DPIAs or ethical data impact assessments or so on, absolutely. And one of the interesting measurements you can get from that is really how many were rejected or sent back for further consideration. Because if you've done 100 DPIAs and 100 of them passed without any challenge, then there's going to be an issue there, possibly.
Jess, do you have any thoughts on that?
I'm going to try and split this really succinctly. So I would say structure, culture, skills, and implementation. So if you don't have the right structure, if you've got your product people doing something over here and your legal team doing something over here and your tech team and your data science team doing something over here, that's not going to work. You either need a CDO or you need a really good way of coordinating all of those different people. I think in terms of the culture, you need to look at the sort of company that you are, work out what your values are, and somehow marry AI ethics along with that to embed it in your existing culture as a responsible business, which hopefully you are. And then I think from there, the implementation piece. Companies understand accountability and responsibility and liability. If they don't, they shouldn't really be running a company. So again, I think, the blueprint for this is probably there, but it takes the C-suite downwards to make it happen. And I would say there was a conversation, famous joke, if any of you used to work in cyber, that, a CEO would say to their head of cybersecurity, "Are we safe?" And if the head of cybersecurity said, "Yes, we're safe," then you're having a nonsensical conversation, and then nobody's talking the same language. Yeah. And I think it's the same now with AI. Boards, if you're going to use these products, you need to understand them the same way that you understand any of your core products, to the correct extent that you can say under something like the senior manager's regime, "Yes, I've taken responsibility for this."
Thank you very much. Excellent question.
Thank you. Linda Briceno, Head of Privacy and Data Ethics at Santander.
Yeah, I have a question which is related to what was just said actually about metrics and measures. So one of the key challenges I've seen is the ability to create measures in the data space that allow board and key stakeholders to understand the level of compliance with data ethics principles or requirements. So I wonder if you have any suggestion in this space of how best to create those measures and have a practical tool, metric that allow us to understand.
Well, again, I think it's important to understand what the applications are and really what the outcomes are, and the sort of measures that you'd want to report up. Complaints, regulatory actions, again, assessments of actual applications either during development and in use, and whether they are sort of effectively delivering the expected outcomes without, the issues corresponding to AI, such as, bias and discrimination and so on. So I think really, it obviously depends on the products which are being used and the applications which are being used, but there are ways in that you can measure what the effectiveness of the measures you put in place are, and you need to understand what those outcomes that you require are, I think.
It's really brilliant that you use the word outcomes, because there's a lot of technical stuff that you can do, clever things to make sure that your model fits correctly, that your hyperparameters you don't have drift, there's all of that suite of things. But actually this focus on outcomes is an area where I've been really enthusiastic and optimistic in the last few years that the data science community is starting to do that, because I think ethics is as much about having that foresight of consequences and doing that forward-thinking impact assessment as it is about just doing the right thing. And you look at a company like Microsoft, they have unbelievable matrices that they use in order to look at the social impact, the environmental impact, the financial impact, the security impact of every single product. And they go through these processes. And this is as important to them as the technical development is. So I feel like that focus on outcomes that John talks about is a real improvement, and it's really important.
I think, unless there's any other questions.
Thank you.
Yeah,
thank you for staying a bit longer.
Thank you.
Thanks so much. That's great.
Thank you very much. Hi everyone. I guess we're going to wrap up. It was fantastic to see everyone. Thank you for participating. Thank you everyone online as well for staying with us. There's been people that have been following the conference throughout. I should say, and it's been flagged to me, please do fill in the feedback forms and please do hand back those feedback forms to us in the end. But yep, thank you very much everyone, and there's some tea for another about 15-20 minutes. Thank you.